But the likes of Ryanair are confident about Boeing and say that they have improved their quality standards over the past couple of months from what they've seen with their aircraft in particular. So,
여러분
all eyes
안녕하세요.
will be on the impact of the grounding and the FAA's decision.
여러분 오늘도 뉴스 읽어준 여자 나왔습니다.
Yeah, absolutely. So that's what the CFO said this morning, and also O'Leary on a company presentation. They said, if United wasn't interested in their MAX 10s anymore, which is what they've suggested, they would take their planes. So it remains to be seen what will happen, but it is a possibility.
I love that. It's like an offer.
아쉽게도 아직은
Always out for a deal.
사람은 별로
Thank you so much,
없으니까.
Duffy, there, aerospace reporter looking at airlines. Now, some of the other movers that we're watching out for today, Holcim actually rising. This is on the back of plans to spin off its North American unit. This is the world's largest cement maker, and it said it plans to separate its fast-growing North American business to pave the way for a listing next year in the U.S. That would be valued at more than $30 billion.
조금만 기다려 보시죠.
Down in today's trading session, this is after the German conglomerate was ordered to pay $2.2 billion to a former Roundup user who blamed the weed killer for his cancer. And then finally, Philips after suspending sales of sleep
일단
apnea
사람을
devices
별로 없으니까 뉴스를 좀 봐야 될 것 같고요.
medical equipment, the shares falling almost 6%. Up next, a Bloomberg brief with Madison Cranny in New York. It's a big week. Stocks are kind of on.
주말마다 뭐 어떤 이상한 일이 벌어지는 것 같아요. 왜냐면 주말 딱 끝나자마자 그 주식 뉴스 보면 분위기 다 너무 안 좋아요. 지금도 나스닥 보니까 너무 많이 떨어졌어요. 그 금요일 비해서 너무 잘 떨어졌기 때문에 진짜 주말마다 뭐 이상한 일이 벌어지는 것 같아요. 네, 조은씨 안녕하세요. 네, 주말에 전 주말 잘 보냈고 주원씨도 잘 보내셨다고 믿고 있어요. 네, 지금 조금 올라가고 있는데 근데 뉴스 보니까 지금도 뉴스가 나오거든요. 지금 보니까 나스닥은 계속 떨어지고 있어요. 오늘은 어쩔 줄은 아직 파악을 못하고 조금만 뉴스를 봐야 될 것 같고요. 제가 사실 오늘은 좀 일찍 라이브 킨 이유는 제가 앞으로도 아마 좀 이런 시간대에 조금 가끔 이렇게 서프라이즈처럼 나올 예정이라서 오늘은 조금 한 두세 시간 하고 오늘 아쉽게도 시장 열 때쯤 제가 본격적으로 매매를 할 수 없으니까 그러니까 오늘은 좀 일찍 하면 어떨까 싶었어요. 왜냐면 돈을 벌어야죠. 조금이라도 돈을 벌어야 되니까 시장 열기 전에 제가 좋아하는 방식으로 조금씩 그렇게 돈을 버는 게 또 방법이라고 생각해요. 그리고 제가 최근에 레버리지를 바꿔놨으니까 원래 1대 20으로 였는데 지금은 1대 10으로 해놨으니까 조금 더 많은 이득을 볼 수 있지 않을까 싶어서 오늘도 해보시죠. 오늘도 화이팅! 오늘도 좋은 에너지를 있었으면 좋겠어요. 주말 동안 좀 여러 가지 재밌는 뉴스가 있었는데
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions.
예를 들어 이런 뉴스가 있네요. 7년 만에 사라진 LG페이. 혹시 제가 사실 LG페이 있는지도 몰랐어요. 시청자들 중에서 LG페이 쓰는 사람이 있었나? 좀 궁금해요. 왜냐면 요즘엔 다 뭐 애플페이나 삼성페이, 뭐 또 있어? 네이버페이 같은 거, 카카오페이 이런 게 다양하게 있는데, 근데 LG페이 있다는 거는 좀 신기하게 몰랐어요. 서비스 종료됐으니까 이제
We dip ever so slightly this morning on the S&P 500. We've had a 3-month rally, 18% since the October lows. We've had record after record last week, but there is $10 trillion worth of stocks reporting between Tuesday and Thursday. They are 5 of the Magnificent 7. Microsoft will pick off that momentum tomorrow evening, and this is what I mean about a wrecking ball. To what extent will Mag 7 set the agenda for the next
괜찮은 건가? 제가 LG에 대해서 근데 옛날에 LG 제품을 많이 써봤는데 요즘은 제 주변에도 그렇고 저도 그렇고 별로 관심이 없는 것 같아요.
By the way, there is one thing which is pulling and putting a floor under the stock 600, which is the energy component. Total is flying higher, but there are some massive drags on the stock 600 this morning. You're at the highest since 2022, more or less. Energy is being dragged up. A buyer falls by over 5%. There's a Philadelphia court has ruled against buyer, a $2.2 billion settlement to one individual on the roundup on the weed killer litigation. And Phillips, we've just heard from the CEO, they're now falls more than 6%. They are halting the sales of their sleep apnea machine here in the United States of America, down over 6%. We'll dig into those stories in a little bit more detail as the morning goes on. Well, Iran is seeking to distance itself from a deadly attack over the weekend on a US base in Jordan by the Tehran-backed militia, killing 3 soldiers. President Biden faces mounting pressure in order to deliver a harsh response against the Islamic Republic. Here for more on the tensions is our Bloomberg Opinion International columnist, Champion Mark. Realistically, what are the options on the table? The last major pushback by the United States on Iran was under the Trump regime. So what are the realistic options on the table?
어떤 미국 국민이
there are a number of things the US can do.
돌아가셨다고 하는데
a huge range of tools at its disposal. So one of them, I think what you're referring
미국
to,
3명
was the drone assassination of Qasem Soleimani, who's the Iranian general, the top general. And that drew a response from Iran in terms of missile strikes against a US base. But it didn't really escalate beyond that.
역시 그쪽에서 쪽에서 미국인 3명이 사망했다고 전해주는데 전쟁이 언제 끝나려나 진짜.
But in an election year in the US, doing something covertly may not really be politically viable for President Biden. At least, not doing something else that's public as well. So, he will be in a bit of a bind because on the one hand, he doesn't want a war with Iran. He doesn't want to provoke that by hitting something hard where the Iranians feel that they just have to hit back. And on the other, he doesn't want to leave himself exposed politically. Already the narrative of the Biden administration being weak on Iran is building ahead of steam.
Well, certainly, there's already a lot of rhetoric out there about hitting back. Lindsey Graham coming out, hit back, hit hard, lacking belief and faith, perhaps, in this administration and the response mechanism. On a separate issue, obviously, there's escalation Thursday and Friday in the Red Sea. The Houthis hitting a Russian fuel tanker, and traders have been, I suppose, recalculating the risks there. Does this missile strike represent a major escalation?
Well, it does, because until now, the Houthis have avoided hitting oil tankers in general. And certainly, hitting anything with, carrying a Russian payload. And now that has changed. And as you say,
아이고, 이란, 이락 전쟁도 있고,
more so than all the strikes on containers.
지금도 러시아 우크라이나 전쟁에서 계속 얘기하고 있고.
To a new category and spread it to
참.
energy. Whereas previously,
마음이 아파요.
was driving up the price of container shipping, which then feeds through into inflation. But you've now sort of expanded the impact of that conflict in the Red Sea, and we'll see whether they hit more oil tankers, or if what happens exactly with oil tanker traffic. But it has moved us into new territory.
Definitely has, and of course that Trafalgar ship being struck as well changes
근데
the
아마 이
dynamic.
뉴스
Now,
때문에
let's just shift our attention to
나스닥
Paris. There were
좀 떨어지지 않을까
negotiations in
싶어요.
Paris over the weekend on hostage release
지금은
between
아직
Israel
좀
and Hamas. That's ongoing. Now, these were the spy chiefs gathering from a variety of Middle Eastern nations. What's the official Netanyahu response to the
예측하기엔 좀 그렇고,
negotiations over the
근데 지금
weekend?
보니까 계속 올라가고 있네.
Well, he said that they were, that this was constructive, but at the same time, he said that there are significant gaps remaining that will need to be, closed. So it's very difficult. These are always going to be very tough negotiations because the Israelis have some pretty far-reaching goals in Gaza. The Hamas has the hostages are some of the only leverage that Hamas has. So they will
중국
want to
홍가
high price
그룹도
for the deal.
홍콩서 증상
And at the
명령
same time,
내려졌네요.
the longer the ceasefire goes on,
에?
the more
진짜요?
beneficial that is to Hamas. So the Israelis will, it'll be a sort of delicate operation to get the two
사업
sides to a
상태가
point
별로
where both of them
안
think
좋아한
that
거나
they
보다.
are getting something out of the deal.
Yes, they both want to feel that there is progress for both sides. Mark, thank you very much. Mark Champion of Bloomberg Opinion, covering the top geopolitical stories this Monday morning. Let's turn our attention to the stunning legal end of the world's most indebted property developer. A Hong Kong court has ordered that Evergrande be liquidated. Bloomberg's
그래서
Justina Lee
중국
joins me
경기도
now
어려워질
with this
거다.
saga. It's
그쵸.
been a tortured
아무래도
soul
이런
for a number of
큰
years now.
회사
We ended the day
회사의 평경
suspended
때문에
on Evergrande. What happens
중국
next?
경기에도
Yeah, I think the really big
좀
question here, now that
많은
the Hong Kong
영향을
judge has
줄
given this
수밖에 없는
liquidation order for
상황이라서
Evergrande, is,
참
will anyone be
예측하기가
able to actually
엄청
execute it in mainland China,
어려워질
where most of
거예요.
Evergrande's assets are? And I think that is the question that will have a lot of
저
ripple effects
중국
for
경기만
a lot of other developers that
경제만 안
also
해도
kind of
다른
like face a lot of stress in
전
this,
세계도
kind of like
이런
worsening
큰
property
영향을 줄
crisis.
수
And to kind of go back to
있기
the court case itself, I mean,
때문에
it was brought by a creditor, and it seems like the judge has been waiting for a while to see if Evergrande was going to come up with a restructuring plan, and because it didn't, this is kind of what it's come to.
I suppose, what does it mean for the broader property sector? We've seen a real sort of pushback and image after image of abandoned cities that haven't been filled. But what does it mean for the broader sector?
I think one question is, I mean, if this liquidation kind of goes on, I mean, are Chinese authorities going to do anything? And if they don't, is this a sign that they're pretty comfortable to let kind of these defaults happen? And I think that is definitely going to affect sentiment for the sector more broadly. But I think apart from that, I mean, this would mean that Evergrande would find it even harder to complete a lot of their projects that haven't been finished yet. And given that a big focus of this property crisis are these like pre-sold homes that people bought kind of expecting for them to be delivered in a few years, I think that's definitely going to hurt confidence in this part of the market in particular. And that is going to further kind of counteract all these moves the government has been making in order to stabilize confidence.
Okay, Justina, let's see where it evolves to. It's going to be a heck of a company to liquidate in terms of precedents it will set. Justina Lee tracking Evergrande story. Other stories trending on the Bloomberg terminal this Monday morning. We have Bloomberg learning that the US is aiming to announce major chip grants by the end
저
of March.
사실
The awards
이번
are
년
slated to
분위기가
go to
좀
Intel
괜찮다고
and other US
생각했는데
chip makers as well as
근데
foreign
여러모로
firms
되게 안 좋은 뉴스가 좀 많고 그리고 왠지 경제적인 부분에 있어서도 좀 나쁜 결과? 이렇게 얘기할 수 있으면 나쁜 결과 좀 있는 거 있을 수도 있으니까 주식시장도 그렇고 경제도 그렇고 전세계 뉴스도 그렇고 되게 긍정적이지 못할 것 같았고 그리고 나중에 조금 주식이 좀 많이 나빠지지 않을까 싶어요. 그러니까 지금은 좀 상태가 조금 어느 정도 안정적이기 때문에 지금 어느 정도 돈을 많이 붓고 나중에 시기 안 좋을 때 그것도 좀 쓸 수 있지 않을까.
Sources say that's the view from early meetings with potential investors. Private trades of Reddit's unlisted shares have valued the social network below that level. We're told deliberations around timing and the pricing of the IPO, but those are ongoing. Coming up on the show, big week for tech, as we've been saying. We speak to iCapital's Anastasia Amoroso in terms of where to lay your bets on tech. Right here on Bloomberg. Good morning.
오늘 같은 경우는 나스닥은 좀 분위기 not bad 좀 나쁘지 않은 것 같고 여기 참 매대로 들어갔으면 참 좋았겠다. 근데 지금은 매수로 가면 좀 수익을 볼 수 있을 것 같고 지금 뉴스 보니까 나스닥은 어디요? 나스닥은 떨어지고 있어요. 0.36%. 하하. 어쩌면 좋을까? 이럴 땐 어쩌면 좋을까?
I cannot imagine a scenario where $8 billion just
알려주세요. 누구? 사람들이야. 누구 좀 알려주세요.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
저 세계 경쟁이 좀 엄청 어렵고 되게 작은 뉴스도 되게 큰 영향을 줄 수 있기 때문에 와 진짜 예측하기 너무 어려워요. 너무 어려워요.
Are you in? I'm in.
I'm in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
맞아요. 지금은 조금 더 기다려보고
So what's ahead of you this week? 5 tech companies will report their earnings that have a combined market value of more than $10 trillion, leaving investors wondering whether the
답이
market is heading for a
때까지
bid
좀
or not.
기다려야
Anastasia Amoroso is Chief Investment Strategist at iCapital. Good morning, good to see you. I said at the start of the show, this is either a week of reckoning or a wrecking ball.
한국은 저출산 문제 거의 10년 동안 계속 이루어지고 있으니까 이런 문제가 과연 문제일까? 잘 모르겠는데 물론 문제인데 근데 사람들이 이거 잘 살고 있는 것 같은데 이게 제가 봤을 때는 저출산 문제보다는 취업 문제도 너무 심각해요.
Not just in terms of price performance, but in terms of earnings. So we certainly do hope that those companies deliver. And look, I think there is a decent chance of that because, first of all, you've got the economic momentum
회사에
in the
들어가고
United States and
싶은데
globally picking up as well. So
그렇지
that should bode well for
못하고
things like digital
이것
advertising
때문에
and also e-commerce.
자살률이
And at the same time, you have the AI momentum that's not stopping anytime
올라가고
soon. So I
있고
think that's also going to drive some of those
그렇기
companies as well.
때문에
So I'm optimistic,
이거
but you're right.
제일
That's a
큰
lot of
문제라고
risk for
생각해
this week.
사실.
Is there any level of breadth entering into the portfolio for you? I ask that question because I look at the stock concentration, I look at the concentration of trades, and Bank of America, lots of surveys say the most over consensus, over bid sector is that tech. So to what extent is there a bolster or a diversification on that? Do you look beyond? I mean, what was it somebody said to me? Have some Broadcom, it's a poor man's NVIDIA, but you know, there are alternatives that perhaps are undervalued relative to the NVIDIA, relative to the Microsoft. Right. Or how do you segregate that out?
Yeah. Well, there's lots
뭐 그러면 그쵸, 돈이 문제죠. 다시 그쵸. 돈이 없어서 사람들이 취업하고 싶고 또 좋은 회사에 들어가고 싶고 왜냐면 돈이 많으면 그때 결혼하고 애를 낳고 할 수 있는데 돈이 없으니까 자신도 없고 애를 키울 자신도 없으니까 왜냐면 돈이 없으면 애를 어떻게 키워. 돈이 없어도 나도 살기 바쁘고 힘들고 여러 가지 문제가 있으니까 뭐 결론적으로 그쵸? 돈이죠. 돈만 있으면 다들 좀 행복하게 살 수 있을 것 같은데 돈이 없어도 힘들어요. 이게 슬픈 현실이 맞아요. 저도 어느 정도의 현실 지금 겪고 있어서 저도 잘 알고 있어요. 근데 그래서 지금 해외선물 하고 있고 어느 정도 좀 돈을 벌 수 있지 않을까 싶어서 그렇게 계속 하고 있어요.
What is the risk that March is a live meeting for a cut, or is it more probable that you get a quasi-dovish pivot?
물론 저도 약간 안정적인 회사에 안정적인 월급이 있는 회사에 들어가고 싶긴 하는데 역시는 그렇게 쉽지 않아요.
Because take a look at the data that we got last week. You mentioned the core PC number. It's now a 2 handle. It's a high one, but it's 2.9%. Yeah. We're now in the 2s. And then the other way to look at it is if you look at the 3-month and the 6-month annualized pace of core PC inflation, we're sub 2%
자본주의의 문제죠. 그쵸? 인정하고 싶진 않지만 그래도 많은 말이죠. 근데 자본주의자라고 해도 그렇게 나쁘게 표현하고 싶지 않아요. 왜냐면 지금 뭐 멀리 가지 않아도 뭐지 북한 같은 경우에는 뭐 자본주의 어느 정도 보면 자본주의 나라가 아니잖아요. 근데 네. 더 이상 뭐 얘기할 필요 없을 것 같고 그게 중간이 되게 그러니까 어디 가도 중간이 되게 중요해요. 경제도 그렇고 뭐 사람의 사회 생활도 그렇고 중간이 되게 중요해요. 돈 많아도 문제고 돈 없어도 문제고 사람들이랑 매일 대화하도 매일 결혼하면 이렇게 하면 문제고 매일 아니면 사람들이랑 아예 만나지 않고 대화하지 않고도 문제고 그러니까 딱 중간에 중간이 되게 중요해요. 저도 많은 돈 바라지 않고 적당히 제가 행복하게 살 수 있는 만큼 돈이 있었으면 좀 행복하게 살 수 있다고 생각하고 그리고 약간 좀 여유가 있었으면 다른 사람들한테 도움을 줄 수 있을 만큼 뭐 약간 봉사 활동 같은 거 좀 하고 싶고 사람들도 뿐만 아니라 뭐 동물? 근데 아직까지는 좀 안타깝게도 이런 여유가 없으니까 지금은 열심히 돈을 벌어야죠.
But also just taking broader exposure. And Manus, if I may, the last point on that, we look at public markets, but we also look to private markets. And while the public market exposure in Europe is skewed towards financials and some of the more cyclicals, the private market exposures, that's where you invest in innovation. That's where you have a lot of tech exposure. So I would very much look to European private markets.
Okay, well, there's certainly a whole host of money flowing into private markets and private credit. It's been the roaring discussion of the last quarter. Anastasia, thank you very much. Enjoy your time in London. And Anastasia Amoroso of iCapital. My guest this morning, setting the agenda on Bloomberg Brief. 오, 깜짝이야. 또 온 거야? 또? 이제 정신 차려! 내각막 그대로 보존. 수술 전으로 복구도 가능. 인생은 좋아. 설명문은 역시 정관장사.
맞아요. 로봇이나 AI 같은 경우는 지금 되게 활발하게 발전하고 있잖아요. 와, 이것 때문에 저도 너무 불안해서 죽겠어요. 왜냐면 약간 디자인 쪽에서 많이 일하고 있고요. 그러니까 지금 막 포토샵 같은 경우는 포토샵 아니면 다른 그 프로그램 같은 경우는 그게 AI 되게 자주 쓰거든요. 근데 그때부터 좀 멘붕이 왔어요. 제 대신에 뭐 어떤 그 AI 디자인 만들 수 있으면 어떡해요. 이거 때문에 좀 진짜 큰 현타 왔는데, 근데 제가 그렇게 생각해요. 그 AI나 로봇은 사람을 대신할 수는 없을 것 같고, 그리고 사람들은 이런 AI나 로봇을 잘 활용하기 위해서 노력을 많이 해봐야 되고 공부를 많이 해야 돼요.
Okay, and we will do the same with the internet in the next 5 years. You know, we will do it as an industry.
사람을 교체는 아무래도 교체는 안 되고, 그래서 사람들이 어떻게든 잘 활용해서 사람들의 능력을 더 튀어나오게 이렇게 해야 될 것 같아요. 근데 해야 될 것 같기보다는 이렇게 앞으로 이렇게 하는 거 맞고 사람들이 이렇게 할 것 같고요. 저도 사실 그런 할 예정이고 저도 지금 뭐 디자인 같은 거 하면 그 AI 덕분에 되게 빠르게 그림이나 디자인 같은 거 만들고 예를 들어 뭐 예전에 뭐 어떤 사진을 보정할 때는 한 뭐 30분 정도 걸렸는데 지금 뭐 10분, 15분 안에 다 해결할 수 있기 때문에 저는 오히려 좀 좋아요.
It's Bloomberg Brief this Monday morning. I'm Manish Kraney in New York. Wholesome shares are gaining today as the world's largest cement maker continues to outline its plans to spin off the fast-growing North American business. Now, the company CEO told Bloomberg why he's seeking more than $30 billion of evaluation for the new entity.
We have developed the most successful company in the building space over the last years, and especially in North America, we doubled the company in the past 4 years to over $11 billion with leading margins. And now our plan is to take that to $20 billion. To do that, we don't think to run the company like a subsidiary is the right way. We want to make it an independent company with strong US leadership.
The CEO of Wholesome, speaking to Bloomberg a little bit earlier, whoever said, well, there's muck, there's money. Let's turn our attention to the commodity board. You've got two very, very clear issues going on here. European natural gas spikes a little bit higher. We had that drone attack on US troops with 3 soldiers losing their life in Jordan. What will the response mechanism be?
일자리가 사라지는 거 맞는데 그래도 그만큼 더 새로운 일자리가 생기는 것 같아요. 왜냐면 우리는 사실 우리가 다 사람이고 그 로봇을 만든 건 또 사람이니까 우리는 이 세상에서 살고 있는 거 그 로봇 때문에 로봇을 만들기 위해서 나중에 그 로봇들한테 우리의 그 지구를 넘기는 거 아니잖아요. 다 사람들 위해서 하는 건데 그러니까 그만큼 사람들도 약간 걱정하고 있기 때문에 일자리는 계속 생길 것 같고 근데 분야는 좀 다를 수 있을 거예요. 그럼 100년만 해도 여러 가지 일자리가 있었는데 근데 사회가 바뀌면서 그 옛날의 일자리가 사라지고 여러 가지 다른 일자리가 생겼잖아요. 그러니까 지금도 우리가 이런 과정을 겪고 있는 것 같아요. 좀 받아들이기엔 좀 어려울 수 있는데 근데 받아들이면 근데 쉽게 적응할 수 있고 쉽게 다른 일자리, 다른 분야의 일을 같은 거 찾을 수 있으니까. 근데 문제는 사람들이 익숙한 거 너무 좋아하고 새로운 거에 대해서 좀 두려움이 많고 스러운 거는 받아들이기엔 어렵죠. 왜냐면 다 변화니까 변화는 좀 어렵고 내가 열심히 해야 되고 내가 노력해야 되고 근데 우리가 익숙하면 나 익숙해니까 이제 노력을 안 해도 뭐 수익을 얻을 수 있고 내가 편하게 살 수 있는데 근데
Welcome back to Bloomberg Brief this Monday morning. I'm Manus Cranny in New York. Danny Berger has got a few days off. Here's what you need to know. President Joe Biden faces intensifying pressure to confront Iran after 3 American soldiers are killed in Jordan. A Hong Kong court orders the liquidation of Evergrande, the world's most indebted developer, in a new test of China's embattled property sector. And markets start the week on a cautious note, bracing for central bank updates from the Fed, the BOE, plus a deluge of blockbuster earnings. A very good morning to you. I've said it once, I will say it again. These markets are either going to face a wrecking ball through the bid tone to them or a day of reckoning. It depends which side of the market you are on. You are up 18% since the lows on these markets in October. You are facing Apple, Microsoft tomorrow night, Meta through the week. $10 trillion worth of equities on the tech side will report from Tuesday to Thursday, and that will deliver a certain nuance to the earnings capacity of big tech. We just had a guest with me talking about mid-50s of a rise in terms of profitability. And what have you got a dovish Fed? What have you got substantial Mag 7, Mag 5 earnings and a dovish pivot from the Fed and a softer jobs report? You can see I'm just hysterically optimistic at the moment. Stock 600 is being pulled up by energy component. Total is driving higher there, but you have got 2 key stocks on the downside. Bayer falling down by 5%. There's a Philly Port delivering a $2.25 billion judgment against Bayer on the weed killer case. The stock is down 4.8%. Phillips down 6%. They're going to stop selling their sleep apnea machines here in the United States of America. So from the equity barrage of information, this is what you're starting your week. 409 on the bond market. So we have quarterly refunding. Are you braced for that? Or has that already seen its peak? Last Torsten Slot, when he makes of that, he's with me very, very shortly. But the bond market, of course, the Treasury did blink in November because yields were at a 16-year high at that juncture. Crude is flat, but it did put on 6% last week. To a certain extent, the geopolitical tensions. Let's see what America does in its response mechanism to Iran, who they're holding responsible for the death of 3 U.S. soldiers at the moment. We wait to see what that response mechanism is, but 6% last week. Iron ore is up. Do you believe in the stimulus story that has been delivered by the Chinese? Is it enough? Evergrande goes into liquidation, which is a monster part of the construction engine in the United States, not in the United States, in China. But do you believe in the stimulus story in China that will underpin some of the global commodities? So, as I say, it's going to be a huge week for tech earnings. Investors are gearing up for 2 central bank decisions on Wednesday and Thursday. And we will round out the week, as I said, with a jobs report. Joining me now is Torsten Slot, Chief Economist at Apollo. Torsten, that is enthusiasm in the extreme by me for a Monday morning, but you would suggest the Fed should already have been cutting rates according to some of the models that you look at. So my immediate assumption is we're already in policy error. If you believe the Fed should be cutting, where should they have already cut to? Good morning.
항상 금전적으로 생각해야죠. 아니면 진짜 힘 빠져요. 힘 빠지고
that the Fed has now used literally for decades, which is the Taylor rule. The Taylor rule is just a fancy way of saying that what the Fed focuses on is its dual mandate. It focuses on where are we relative to full employment, where are we relative to inflation at 2%. And if you take the traditional way of looking at this, you will find that the Fed funds rate today, it actually, according to those frameworks, should be lower, namely around 4.5 relative to the 5.5 where we are. So what I was pointing out on that note was just to say, well, at least if you use the traditional frameworks, the traditional way of thinking for the Federal Reserve, there are some signs that because inflation has come down so much, that we should already begin to see soon the Fed begin to cut rates.
Have you got some sympathy at all for the prudence rather than a preemptive Federal Reserve. You know, they've been so wrong on so
아무튼
many
오늘
goals
좀
for so
철학적인
long.
얘기 좀 많이
I've got a bit of
얘기했던
sympathy with them in
것
terms of being
같은데
so reluctant
근데
to get
톤을
short,
풀어야죠.
get caught short again.
전
Even though
여기서
4PCs and
이거 라이브
inflation
킨 이유는
expectations are
매매하려고
high. Is it good
하려고
governance to be
꼈는데
as prudent as they are?
다른 말을 하고
Well,
있군요
that's absolutely
지금.
right, Manis. And also, exactly as you're highlighting, they have traditionally, particularly the Fed, but also the ECB and the Bank of England, they have leaned more towards the direction of caution, meaning being more careful, not celebrating too early, because they run the risk, of course, in particular at the moment with the housing market in the US is beginning to recover. Case-Shiller home prices are up 5%. They're likely to go up more over the next several months. And remember, housing has a weight of 40% in the CPI basket. So if housing starts to recover, on Friday, wage inflation is expected to be 4.1 average hourly earnings, just like what we had in the month of December. So there's certainly a number of tailwinds to inflation that, exactly as you're highlighting, may suggest that we should not be cutting rates at this point. That's also why the Fed is probably comfortable with current pricing for March being 50-50, because that leaves the optionality, that leaves it flexible for them whether they are going to be cut or not, because we still get a decent amount of data that will become very important for that decision whether it is time to cut rates or not.
So obviously we're going to get this Fed meeting on Wednesday. Market's 50-50 at the moment. Depends what day you look at the function on Bloomberg as to whether we're 62, 47. Depends on the nuance of the mood. But when we look at Wednesday, here's what a number of people have written is that we
일찍
could get
라이브를
a
켰는데
mini curtain raiser or a double
그러니까
split. Similar to, let me
지금은
just give you this,
들어가기가
2019
완전
July
애매한
2019 when we had a rate
상태.
cut. Uncertainties about this outlook have increased. Well, we know there's a number of uncertainties.
지금 사실 원래 계획은 한 6시쯤, 6시, 7시쯤 라이브 키고 오늘 뉴스대에서 조금 얘기해보고 지금 세상에서 뭐가 벌어지고 있는지 이렇게 좀 이렇게 알려주고 그리고 좀 쉬다가 한 10시쯤 그때 발표 시작하겠지만 그리고 그 시장이 열기 전에 조금 전에 이렇게 다시 라이브 하면서 매매하는 것도 이렇게 생각했는데 근데 지금은 좀 욕심을 부리고 싶어서 뉴스를 알려주면서 매매를 하고 싶은데 매도인가 지금은 오늘의 딜은 매수인 것 같아요. 오늘은 좀 충분히 떨어졌기 때문에 오늘은 좀 매수로 가야 될 것 같고 근데 뉴스를 좀 아직 좀 봐야 될 것 같아요. 뉴스 분위기가 좀 괜찮다고 하는데
a couple of things I want to square away. The quarterly refunding. I mean, if we take our mind back to November, rates were at, do you remember at that time? Rates are going to go to 6%. They're going to go to 7%. Well, obviously they didn't. So we get hysterical, don't we? We have these moments of sort of real hysteria in markets. And I just wonder to what extent have we forgotten about the size, the scale, and the impact of the quarterly refunding? What are you expecting? Because it is going to be an important pillar in the bond market at the longer end, isn't it?
Absolutely, and I do think that the Treasury supply, according to the Treasury buying advisory committee,
기다려보시죠 조금. 지금 떨어지네. 저는 그냥 감으로 하기 때문에 제 말은 참고일 뿐이죠. 절대로 이렇게 하세요. 이거 맞는 말이에요. 이런 게 절대 아니고. 그러니까 지금 뭐 떨어지고 있긴 하는데 조금 있다가 계속 올라갈 것 같아서 저는 그렇게 생각해요. 근데 아직은 좀 기다려야 될 것 같고 좀 기다리는 동안 제가 잠깐만요 화장실 좀 갔다 올게요.
all this is suggesting that there's been some weakness, in particular in 5-year auction last week, where people are beginning to pay more and more attention to what's happening further out the curve. And what we get on Wednesday is exactly the amount of coupons, in other words, the amount of duration that's going to come to the market. And if that continues to grind higher, it will continue to raise more and more issues and more worries about the supply of treasury still being so substantial.
Listen, a lot of people sort of pillory me and lambast me for saying, could the US bond market face a quasi-Liz Truss moment? Now, I know that's a slightly existential question in that, you know, that was a very serious set of folly in policy that she and her chancellor announced, and the gilt market rebelled. So I'm not putting that out there as a thought, but is there a real risk of a material convulsing in the US bond market or choking on supply? Or is that something that happens in a couple of years when we get through this election cycle?
I think that's very unlikely at this point. I mean, of course, that risk we've seen in history again and again in a number of different countries, where, of course, that suddenly the government debt, after not having mattered for a long time, suddenly it does begin to matter. What I think is the more likely scenario, at least what we as investors should be having in mind when we look at this, is that we're probably going to just see the risk premium go up gradually. Yep. In other words, investors globally look at the level of long rates, investors domestically, real money, pension, insurance, households, in particular, with the Fed now in cutting modes, it may be that the more interest rate sensitive buyers of US treasuries, the more interest rate sensitive buyers of duration in the US are likely going to revise their views slightly and begin to say, well, if rates are going to come down, well, maybe I'm not going to look at the same level of yields and look as attractive if we both have rates moving lower and the Fed cutting. So that may begin to increase the risk that we'll get more of a steepening of the curve. Yeah, yes, the Fed might be cutting this year. We can debate whether it's 3 times as the Fed is saying or 6 times as the market is pricing. But I think that as the Fed cuts, long rates are probably not going to come down as much. And that argues for the steepener still. I know it's a very popular trade, but I still think that with no change in the direction of travel when it comes to the amount of treasuries coming to the market, I still think the steepener is the right trade to have on.
Good to close on a trade, good to close on a direction of travel, and good to pull me back into line with my hysteria over a convulsing US Treasury market. I'll settle into this whole American thing soon, Torsten. Thank you very much, Torsten Slug from Apollo. My guest this morning on the markets. Steepeners are us. Coming up, if other airlines don't want Boeing's planes, quite frankly, Ryanair will take them. Give them a call. The CFO is ready to take your call with your offer. Good morning from Bloomberg.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
Breakout we have all perhaps long awaited, finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So, I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to,
what was it, Peacock? Yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was and the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
It's a lonely Bloomberg brief. I'm on my own. I'm Manus Cranny in New York. Danny Berger is missing in action. We'll find her. Ryanair is dropping after trimming its profit guidance, citing higher fuel prices, the impact of lower fares. Tom McKenzie caught up with the CFO, Neil Sorhan, a little bit earlier today.
I was over in Seattle a couple of weeks ago, met the senior management team, and I'd be reasonably comfortable that we will get up to 50 aircraft in for this summer. It's less than the 57 we had originally hoped to have, which means next year we'll fly somewhere close to about 200 million instead of 205 million passengers. But you know, I'm pleased that if we have 50 aircraft in the fleet, we'll be able to operate a bumper summer schedule, which, as I already said, is up 9% on what we had loaded last year.
We've heard from executives at American Airlines, at Southwest, at United, criticising Boeing. You said you were there, speaking to executives from Boeing a couple of weeks ago. What's your message been to them?
Yeah, well, our message has been, you know, get us our aircraft on time, high-quality aircraft. And in fairness, you know, we looked in more detail at the 12 aircraft that we got pre-Christmas. We're seeing improvements on the quality side, but we have put more engineers in Seattle. We put more engineers in Spirit and Wichita. And we're working with Dave Calhoun and Brian West and the Boeing team. And, you know, we're supportive of what they're doing.
What do you think needs to change at Boeing to fix these safety issues?
No, I think in fairness, they are improving. I think things are moving in the right direction. But, you know, they just need to make sure that, you know, we're getting high-quality aircraft on time, all the time. And I believe that Dave Calhoun and Brian West are people that are going to deliver that.
OK, you have confidence in the team?
I have confidence in the team, yes.
A resounding vote of confidence there from Ryanair CFO Neil Sorhan for the management, the quality of Boeing, which is interesting because Calhoun is in a tough position at the moment. For more on Ryanair, we're joined by our Global Aviation's on Anthony Palazzo. And Denis, good to see you. So I look at the stock this morning. I'm surprised by Neil's resounding support for Boeing. We'll come back to that in a moment. But when it comes to earning and getting bums on seats, it's about online booking. And so there are some online booking removals which have been removed, and that was unexpected. So talk me through what it was and how it plays out.
Yeah, and thank you for having me, Manus. Yeah, so I think what happened is that Ryanair, they've been fighting with these online travel agencies and trying to get their listings removed from the online websites, and they've had a couple of victories. But what I think they expected was for this to drag on for a while. And to have a gradual fight with the online travel agencies. And what happened was the online agencies like Booking.com basically folded their hands and they took all those listings off of Ryanair's website. Ryanair's happy about that, but they weren't prepared. So now what they've done is that they've started to do
주원 주제가 뭐라고 얘기하셨어요? 올라갈 거라고 얘기했잖아요. 지금 올라가고 있잖아요.
Capture more of the ancillary revenue, like car rentals and hotel bookings that were going to some of these other websites. But it's just going to take a bit of time. So that hit their earnings in this past quarter. It's going to continue to have an impact this quarter, and they had to lower their guidance.
Anthony, very briefly, Ryanair saying they'd be interested in taking other people's Boeing MAX 10s if they don't want them. I mean, is that a serious proposition, or is that slightly tongue-in-cheek?
Oh yeah, I think it's quite serious. You know, you've got two things at work here. One is simply a practical calculation on Ryanair's part. They need planes. They want to mop up capacity around Europe. I think they're aiming for something like 1/3 of the European market in the next decade, and they need planes. And they've said it over and over again. And so they're betting that Boeing is able to fix these quality problems. The planes are fine, and they'll take them if they can get them.
That's what you call Irish luck, punting it out. Anthony, we've got to draw a line under there. We've got to move on to the tech sector next. But great to have you with me this morning. Context around the results and the bid for more planes by the Ryanair Management Suite. Anthony Palazzo on Global Aviation. His column is available on
저기 되게
Bloomberg.
좋아요.
The earnings, I said to you, it's ringing a bell. $10 trillion worth of stock is going to hit the street in terms of earnings. Aggie Cantrell will be working and burning the midnight oil. What have you got for me, Aggie? Where do I got to focus on? Microsoft tomorrow night. What am I going to be most focused on?
I think the thing that's interesting about these earnings this quarter, Manus, is that really this is not a victory lap compared if you look at the big tech sector in general, but it is a significant improvement for this sector compared to where we were looking last year. In a single year, we've seen Meta increase over 150% in their share price. Microsoft is up 70% on this time last year, and a lot of that is because of AI and the companies that are able to capitalize on their initial investments, their investments that have been happening for years ahead of this current AI boom, and also being able to take a lot of their focused development and make sure that they're deploying it into their services and into their devices going forward. And so this is where the market is basically banking on big tech are really going to be the beneficiaries of AI. They already have started being so, and that's what it's going to look like going forward into this earnings season, is where they're planning to really invest going forward into different forms of artificial intelligence.
Okay, Aggie, let's see what they deliver in terms of the numbers and, as you said, the breadth of AI and what we are prepared to pay for it in terms of individual adopters. Aggie Cantrell in London
지금
HQ.
타이밍이 좀 괜찮을 것 같은데?
Earnings for you throughout the week. Coming up in the show, the market moving events for the week. As I say, it's going to be a week of reckoning or a wrecking ball through risk. Good morning from New York.
아니면 계속 기다려볼까? 타이밍을 잘 잡아야겠다. 되게 중요해요. 근데 계속 올라갈 것 같아요. 지금도 들어가도 좀 나쁘지 않을 듯.
Maybe I should go do something else. I can't do anything better than I'm already doing. I've already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups that we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you got to be smart about this.
It is Bloomberg Brief. I'm Manus Cranny in New York. A look ahead on what's today's trading slate. And it's a busy week ahead. The main event is going to be Fed's rate decision on Wednesday. And that is followed by the Chair Powell's news conference. Will he hint? Bank of England is on Thursday with Governor Bailey and his comments. Again, these central banks' conversations will be parsed over very, very closely. A slew of data coming through in the week ahead. Jobs data is the crescendo on Friday. On the earnings front, as we've been saying, you've got Microsoft, Google, AMD on Tuesday, so they will set the tone in terms of profits for five of the largest. Some other small movers for you. American Rise. The city is upgrading the stock. Deleveraging is the focus for them there. Nikkei reports NTT and Intel will join hands to develop the next generation of semiconductors using photoelectric fusion technology. And then Nicola climbs as Bird says buy on trucking and energy catalysts. So keep an eye on that. You've got Nicola up 0.9%, with American Airlines pumping away up 1.72%. Now, the commodity markets are going to be very much in focus for the reaction function. This is the past 6 days. I want to give you some context. In the past 6 days, you've had this market move higher. You've had attacks on a Trafigura ship in the Red Sea. You have had attacks on Russian oil tankers. So there is an escalation risk in the back end of last week. It's interesting that the market this morning is not reacting more significantly to the reports and the confirmation of 3 U.S. troops being killed and 25 wounded. This, again, we understand, was Iran-backed militants. Iran really pushing back against this. They are pushing back aggressively in terms of their participation in this. We wait to see what the reaction function from the United States will be to that. It's going to be a big day on Wednesday, not just because you've got the Fed, so it's 50-50 as to whether they go with the rate cut. Most unlikely seems to be the winning consensus. But this is the curve. I mean, we just had a conversation with Apollo and Torsten Schlock, and his view is very clear that this, you've had a slight drop in the curve in the past sort of 10-15 days. But his view is that do not presume that the quarterly refunding will not hold back some of those interest rate hunters from wanting to take risk. Is there enough risk premium in the Treasury market, in the Treasury price? He thinks that steepeners are the trade. That was the view from Apollo. It's Monday morning, Bloomberg Brief. Surveillance is up next with the team. I'll see you tomorrow morning. We'll do it all over again right here on Bloomberg.
아, 그쵸. 조금 좀 떨어졌으면, 여기까지 좀 떨어졌으면 딱 들어갈 수 있었는데, 아, 지금 다 너무 애매해가지고. 지금 뉴스 보니까 계속 떨어지고 있어. 나스닥이 떨어지고 있고.
One of my greatest advantages, I own my company 100%. No board of directors. I make a decision, we move. And I had a guy say to me, runs a big media company. This guy ran a major division, Warner Discovery. It was just Warner meeting at that time. He says, you know what, when we sit in our meetings, we don't talk about Disney. We don't talk about Paramount. We don't talk about Sony. You know who we talk about? I go, who? You. He said, really? I go, yeah. I go, why? He goes, we are giant map machines. And you're like like a little speedboat. If there's gold on the beach, you run rings around us, get to the beach, take the gold, and by the time we turn our battleship around, you've already taken the gold. I'm always going to be that entrepreneur. I started my company from my dining room table 30 years ago. 30 years ago. And I started by calling every television station, asking them to carry my one solution. On average, they all say
근준 씨 사실 좋은 전략이에요. 좋은 날이라서 막 그냥 에러 모르겠다 이렇게 들어가기보다는 조금씩 조심스럽게 가는 게 더 맞을 수도 있어요. 무리하게 들어가면 절대 안 돼.
Why do the biggest names in business choose Bloomberg? Great question.
Great question. Best question I did all night.
Bloomberg, top experts, great questions.
Our base case in the U.S. is for a rate cut in the second half of 2024.
I think the next leg in the recovery is when you actually start to see cuts.
June is where the market has gravitated to.
There definitely is cover for them to start to cut.
It will come in the beginning of the summer, call it June, maybe July. Not only do I think that that's what's going to happen, I think that that's what should happen.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get your week started live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance alongside Lisa Abramowitz together with Anne-Marie Hordern. I'm Jonathan Farrow. Your equity market on the S&P 500 totally unchanged after 3 weeks of gains. What a week we've got coming up for you. 5 of the Magnificent 7 reporting on Tuesday, Thursday, the Federal Reserve on Wednesday, payrolls on Friday. We begin this morning with breaking news over the weekend. Bramo, we've got to go straight to it. A big reevaluation of risk in the Middle East.
3 U.S. troops were killed on the border of Jordan, and this is a true escalation. That's what all of the notes are saying. 34 injured on that particular base, including critical brain injuries, which is a deep concern not only for now, but also for later. Now the question is, how does the U.S. respond to something that quite clearly does materially shift the calculus for how much the U.S. gets involved in this war?
Anne-Marie, foreign policy hawks in Congress straight away immediately over the weekend, saying hit Iran hard, hit them now. That's the message from Senator Graham and others.
Yeah, absolutely. Republicans are going after this administration to take a more strong approach when it comes to the Middle East. Directly, they want attacks on Iran. But this administration has for months been saying they do not want to see an escalation in the Middle East. Will this attack on these 3 service members and dozens wounded in Jordan, is this a new red line for this administration? And are they going to have to take a stronger approach, not deterrent, an actual attack?
Let's try and take the temperature of things right now.
들어가기엔 좀 너무 애매한 상황인데?
If you look at what's happening in the commodity market, crude totally unchanged. On WTI right now,
월요일은 그런 거지 뭐.
This feels like boiling a frog. That was what I thought about all weekend. The idea that there's one tit for tat, and then another, and another, and any one of them could be escalation. But a lot of people are just shrugging it all off and saying, you know what?
근데 이상하게 뉴스만 보면 올라가고 있고 차트 보면 떨어지고 있고 그리고 있다가 완전 반대로 하고 누굴 믿어야 되는지 잘 모르겠어.
How long can that kind of complacency continue? And that was in every single note that I read over the weekend.
There's 2 potential ways that this can go currently. AMH, 1, you can go hard on Iran. Or 2, you can push Israel to push back, or rather pull back out of Gaza. They are the decisions that this administration's got to make in the coming weeks and days.
Right, but Biden put out a statement, and the last sentence of that statement was, have no doubt we will hold all those responsible to account at a time and a manner of our choosing. There will be a response. But to your point, what level is this response going to look like? And we should know, to your other point about if they want Israel to back off in Gaza, there are peace talks happening as well over the weekend, and that will continue into the week between potential ceasefire with Israel and Gaza.
I mentioned things were pretty calm. They are in the equity market as well. Look at the S&P 500 equity futures shaping up as follows. On the S&P, we are positive by 0.0 3%. In the bond market, yields are a little bit low. We're down 4 basis points to 4.095%. Coming up on the programme this hour, Terry Haynes of Pangea Policy on President Biden facing pressure to confront Iran. Sophie Lunge-Yates of Hargreaves Lansdowne looking ahead to the week's big earnings. And Mizuho's Don Constant on the Fed's path forward and why he thinks this S&P 500 could break below 4K. That story a little bit later. We begin with our top story, escalating risk in the Middle East. The White House confirming 3 US soldiers killed and at least 34 injured after a drone attack in Jordan over the weekend. Iran's foreign minister denied the country's involvement. US and allied forces saying Iran-backed militants are to blame. The president vowing to retaliate, quote, have no doubt. We will hold all those responsible to account at a time and in a manner of our choosing. Terry Haynes of Pangea Policy joins us right now. Terry, good morning to you, sir. Let's get straight to it. The events of the weekend, how does that change foreign policy for this White House?
I think it changes it incrementally, but not in a major way. It's important to say what this isn't and then what it is. Personally, what it isn't World War III, as some presidential candidates have it. It's not going to be a strike on Tehran, as some senators would like. I think what you'll see from the White House is a continued proportional response, but they've got to thread the needle pretty carefully. They're going to want to have a strike that is devastating, that is a strong response, but at the same time threads the needle to make it clear that there's not going to be a huge escalation. That's going to be a difficult challenge. So I think they'll probably take a little bit of time. I would also note that Biden's time and places of our choosing is more or less the standard language, and one thing that probably means diplomatically is
올라갈 것 같은데? 왠지 지금 들어가도
How cohesive, Terry, is the approach from this White House? And I ask this at a time when there have been more than 150 attacks on U.S. soldiers in Iraq, in Syria, since October 17th, with a lot of people wondering whether the U.S. is just going to pull some of these troops out, given that they're kind of not sitting ducks, but really in the line of fire. How much has the administration really talked about that?
Well, the administration hasn't talked very much about that, but I think it implies a couple of things. One, to pull troops out at this particular point would imply weakness, which is the last thing the White House wants to do, particularly because it's stepping up attacks to try to defend the Red Sea corridor. The other thing that I think it means is that you've had a United States response or United States presence in the region for a very long time, and to pull troops out at this point would send a very bad message about the nature of the United States commitment to countries that are allied with us in the region. I'll include not only Saudi Arabia, but independently and importantly, Jordan. And I would look for Jordan's response to be bellwether, but that it is an independent country with its own independent interests, and the United States is going to have to continue to engage it carefully to make sure that whatever the United States does, that Jordanian interests are not unduly pressured as well.
Terry, Lisa mentions these 160 attacks service members have been under, whether it's Iraq or Syria, but now we have 3 service members dead and dozens other wounded. Will Washington view this as a new red line?
I think that's a very good question. I think the answer very likely is no. I think it probably increases the force of United States response. I do not think that it creates a situation where the United States is in a war or in a conflict to a greater extent than it now is, by and large.
You've worked a lot in Congress and been a liaison as well between congressional lawmakers and the White House. You see Republicans pushing Biden to attack Iran directly. Would he need to go to Congress for that type of approval?
He will say no, and Congress will say yes, and usually the interpretation of the War Powers Act varies depending on whoever party is in the White House, whoever party is in Congress. Congress, what'll end up happening is that Biden will take an action, inform Congress quickly, but in its own time. Elements in Congress will complain and the world will go on as before.
And Terry, as you know, the former president would say if he was still in power, this wouldn't have happened. Terry, how has Iran changed over the last few years? And what kind of Iran would the former president have to confront if he did indeed come back into power?
Well, you've got two kinds of issues here, John. and I want to get to the second one, I think is unappreciated markets. I wrote about it yesterday and want to comment on it. One is that you've got an Iran that not only has these variety of these proxy networks, but now is interested in deploying them, using them, very aggressively to try to make its points and its conflicts with both the United States and with Arab countries that are Western allied as well. Secondly, and I think the point that people don't appreciate is that we are now up against more warnings about the potential for Iranian nuclear capability. Again, I wrote about this a little bit on Sunday, but the idea is that Iran's going to have the ability to have nuclear weaponry, perhaps as soon as 2024, and there are a number of credible people in Washington and elsewhere that are warning about that. So, the administration is going to have to thread a needle here, not only in terms of the Iran and the proxies, and Biden was very careful to blame proxies for this, but also the looming question of Iranian nuclear capability, which could put it into a different category among nations.
Well, the International Atomic Energy Agency director joined us in Davos and told our colleagues that Iran is at a level now where they can build and generate these atomic warheads. What is the Biden policy to 60% enriched uranium under this Iranian regime?
And your interview was one of the sources that I cited on that. The policy is that they don't want it to go above that, but the reality is they're powerless to stop that. That can be seen as a failure of Biden policy. It can also, to John's question, also be seen as a failure of Trump policy, since Trump was the one who decided to not negotiate with Iran anymore. But regardless of the blame game, what you have is a muddled United States policy for about the last 10 years with Iran, and the priority has to be not only on figuring out the immediate response here, but also kind of right-sizing U.S.
네,
policy
식사
with
잘
Iran and engaging
드시고 다시 오세요. 기다리고
and friends in
있을게요.
the region in creative and again individual sort of ways, not treating them as a monolithic block, but individually to see how we can best push back and best shore up our interests and those of our allies in the region.
Hey Terry, great to catch up as always. Terry Haynes there of Pangea Policy. AMH, that last point I think is so important. The Iran of 4 years ago is very different to the Iran of today.
Yeah, absolutely, because now you have Iran enriching uranium at 60%. This is weapons grade. This is a massive concern for the Biden administration. But the Biden administration also, when they came in, actually took away the Iran Mission Center at the CIA and made that part of a more regional, cohesive desk at the CIA, and some say that was a mistake. There should have been a select group of people that just focus on Tehran.
Things felt really unsettling over the weekend. I have to say, no drama in the equity market at the moment. Equity futures basically unchanged on the S&P 500. In the commodity market, big rally last week, higher by more than 6%. WTI this morning just about positive by 0.25% at $78.20 on crude. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. Oil's on the move following escalating tensions in the Middle East. A tanker carrying Russian fuel was struck by a missile as it left the Red Sea on Friday in the most significant attack yet by Houthi rebels on an oil-carrying vessel. Meanwhile, the U.S. says 3 service members were killed and 34 wounded in a strike on a U.S. base in Jordan by Iranian-backed militia over the weekend. Tehran has sought to distance itself from the attack. Shares in China's Evergrande plunged 21% and then were halted in Hong Kong trading following a liquidation order from a Hong Kong court. The judge saying the property developer will be taken over by new management in order to carve up $300 billion in liabilities. As of Friday, Evergrande's dollar notes traded at just 1.5 cents on dollar.
계속 떨어지고 있네.
The Chiefs and 49ers are set to meet at this year's Super Bowl.
어쩌면
Kansas City aims to be
좋을까.
the first NFL repeat champions in almost 2 decades. It's not clear whether Taylor Swift will be there to support her boyfriend, Chiefs tight end Travis Kelce, as her tour schedule has her in Tokyo through February 10th, the day before the Super Bowl. And that's your Bloomberg Brief. John?
Yahara, thank you. So you do the continent a little bit earlier, get over from Tokyo. to
Are you
Vegas.
ready for it? It's a Taylor Swift reference.
Is that right? Okay.
Swifties will know. I think she'll have to go. I mean, for the NFL, they should want her there. I have friends who do not care at all about football, and now on the weekend are like, I need to find a bar to go watch the Chiefs game.
The Taylor Swift game, specifically, not the Chiefs game.
I mean, honestly, this to me is the most hilarious point. There was actually an entire article written about how they showed Taylor Swift less last night than they had in the past, and that was controversial for all the people who were just watching the show for her. Either way, there's sort of, I've got to feel the heartbreak for the Detroit Lions because they really did lose a game that they were poised to win. And then on the other hand, you've seen this movie before, and the Chiefs won. I don't know, Kelsey, Mahomes, are they going to come and then Taylor Swift comes and it's going to be, you know.
Beautiful thing.
Yeah, she can make.
Great for advertisers worldwide. Bumped into Michael Barr in the newsroom. Very, very depressed.
I was going to say.
About that second half. I went to bed, it seemed okay. And then it turned around in the wrong direction for him. Up next on this program, a pivotal week on deck.
The Fed has been very clear in terms of its forward guidance, and the market's saying, yeah, sure, but I'm not going to listen to you. That's really problematic.
That's coming up next on the program. You're watching Bloomberg Surveillance live from New York City this morning. Good morning.
멋지고 화려한 이름의 끝은 어디일까요? 우리는 얼마나 더 어렵고 복잡한 아파트의 이름과 마주해야 하는지 알지 못합니다. 그래서 한화 포레나는 생각합니다. 우리가 고민해야 할 것은 포장된 이름이 아닌 주거의 가치라고.
앞선 기술이 생활을 변화시키고 미세먼지는 더욱 세심하게 잡아주며 일상의 여유는 더욱 편리하게 걱정 없이 반려동물과 함께 뛰놀고 어제보다 더 멋진 나를 발견하는 기술은 장벽이 아닌 도구가 되도록 당신의 생활을 먼저 생각하는 것, 이것이 바로 한화 포레나가 찾은 주거의 가치입니다. 새로운 기준이 되다. 한화 포레나.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets.
아, 진짜 들어가기가 너무 애매한 지금 분위기가 진짜.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends, we're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Live from New York City, 3 weeks of gains on the S&P 500. Equities right now just about positive by 0.03%. Yields a little bit lower, down by 3 or 4 basis points, 4.1%. Tension in the Middle East. It's not showing up in crude this morning. Positive by 0.25%. $78.21 on WTI. Brent crude, 83.80, up by 0.25% there as well. Under surveillance this morning, a pivotal week on deck.
The Fed has been very clear in terms of its forward guidance, and the market's saying, yeah, sure, but I'm not going to listen to you. That's really problematic.
When's that first rate cut coming, Mohammed?
Call it June, maybe July, and it will be 25 basis points.
Investors hoping for clues on the Fed's rate cut timeline on Wednesday's meeting. In the news conference with Chairman Powell, the decision sandwiched between a slew of events, including Microsoft and Alphabet earnings tomorrow, Apple, Amazon and Meta on Thursday, payrolls on Friday. Weighing in on all of this, Sophie Lum-Yates of Hargreaves Lansdown. Sophie, what a week ahead we've got. Let's kick it off with the tech earnings. Can big tech keep carrying this equity market on its back?
Hi there. To be honest, yes, I think they can. I don't think we're going to be without challenges, and the flip side to that is I do think we're in a situation where there are a few more nerves in the market, so I do think any misses are going to be probably more punished than they are usually. But that said, I think that the fundamentals for a lot of these names, particularly the likes of Microsoft, are actually still incredibly strong.
나쁘지 않을 것 같아,
So
지금.
I am actually going to this with some pretty broad optimism. So let's see how that pans out.
A lot of people disagree. I will just say I heard a lot of pessimism in some of the notes. Jonathan Krinsky over at BTIG noting that the SPX has gained at 12 of the last 13 weeks. The last time that happened was in 1985. Clearly, upside momentum is strong, but it's starting to show some exhaustion signals here. How much are you pushing back against that? Are you actually aggressively buying into sort of a pause as people reassess ahead of this really pivotal week?
Yeah, so I think there's a couple of ways to look at this. I don't necessarily think that we're going to see like this gangbusters, huge increases necessarily off the back of these earnings. I do think there's a little bit of fatigue, you know, you're hinting there, that kind of exhaustion wording. But I do think that fundamentally the strengths of these companies is still going to be pretty robust. Now I will just caveat that with more so than usual. I mean, the outlook statement's always important, right? But it's even more so at the moment. And particularly for me, we know that obviously cloud AI is going to be the thing that's moving the dial. But what is kind of an unknown at the moment is the rate at which corporations are going to be reopening their purse strings. And that obviously has huge implications for those cloud players. But fundamentally, I do think that the demand there and the margins that they therefore underpin, those fundamentals still remain in play, in my opinion.
So what do you think is the most important
아,
of the events
진짜
this week?
들어가질
Do you think that it's
못해.
earnings given your pretty sanguine outlook, or do you think it's
들어가질
the
못해.
economic data?
어떡해.
Equally both, I think. Now really when we look ahead to the Fed, now as much as things are broadly moving in the right direction, and we look at the inflation information we got on Friday, that preferred measure, you know, things are moving in the right direction. But I don't think we're in a situation where we're going to be seeing a pivot, unfortunately, which I think is what the market is probably been broadly expecting. So I think that the Fed is probably going to remain on a pause, and I think there could be some upset there, unfortunately. But the outlook, of course, still of course relevant, but I think it's going to be that Wednesday slate.
Sophie, let's talk about how challenged the dual mandate of the Federal Reserve is right now. Clearly some encouraging news on the inflation side of things. Can we talk about payrolls a little bit more? We have some people come on the programme who point out some weakness beneath the surface in the labour market report. The breadth of labour market gains have narrowed over the last, say, 6 months or so. Sophie, do you identify the same thing? Are you expecting to see that weakness come to the surface anytime soon?
Not really.
아, 여러분, 들어가고 싶어도 들어가지 못해요. 어떡해요?
This kind of broad-based weakness that obviously policymakers are looking for. I don't think we're there yet. Particularly when we start looking at some of the consumer data that's coming around as well, that obviously needs to be read in tandem with those figures. Broadly speaking, I think, unfortunately, this macro print, including things like the job report, is still going to be supportive of the fact that we are not ready for a pivot just yet.
What's your view, your interpretation of the Fed's approach to all of this? Do you think this is something the Fed tries to get in front of or waits to see?
I think we're in a wait-and-see approach at the moment because, as I said, you know, things are absolutely moving in the right direction, but they're in this kind of circling pattern. They need to see how much heat's coming out of the economy in the current state of play, and the answer is it's not enough. So they are waiting and seeing, which I think is the prudent and correct way to be doing this. We cannot be going too fast too soon because we're going to reverse a lot of the stability that we've seen. You know, they have this really kind of narrow landing strip in which to land the economy, and at the moment they are seeming to be in the right job between cooling things down a little bit without triggering, you know, a very hard landing. That's a really hard thing to do. And to keep that on the course, they need to kind of
아마 다들 그런 마음으로 지금 주식하고 있는 것 같은데, 그러니까 현자성이 별로 없어요. 애매하네 진짜. 계속 지금 좀 올라가고 있는데 타이밍이 못 잡았어.
And YOLO is you only live once, and basically why we're not going to get either of them, and we're going to live in this sort of reverse Goldilocks. How do you sort of characterize
조원 씨 오셨어요? 오늘은 잠시 알바가 안 되실 듯. 그러니까요. 아, 오늘 좀 조금이라도 돈을 벌어야 되는데.
remember that more so than ever it's a time to remember the basics. So this is things like making sure
엄두가 안 나요.
diversification is where it needs to be, because
엄두가.
value metrics I think are being slightly left by the wayside in a lot of situations. So for example, I think Europe valuations are looking relatively compelling,
어떡하면
and
좋을까요?
that's kind of the forgotten region at the moment. So it's remembering the basics and not being overly exposed to certain risks or certain areas of the globe, for example. But in terms of navigating volatility, yeah, it's making sure that you have that broad base of assets, you're diversified, and also you're not getting hung up on moonshots. If you want to invest in game-changing trends like AI, that's fine. But go about it with a company that's also got a proven track record of the fundamentals and my personal favourite, cash flow. You know, please don't forget that.
When you talk about European equities, this is something that we keep hearing. How concerned are you? You were opening the show with geopolitical risk, and that has a much greater impact on European inflows, in particular in inflation regards to the Red Sea and shipments from there. How closely are you paying attention to that as a potential black swan event that really upends that trade?
Sure, I mean, it's incredibly important. And also, let's not forget that, you know, there's a lot of big oil players in Europe as well. So the volatility there is very much, it's intrinsically linked to this oil price ups and downs that we're seeing. So definitely, I think there are bumps in the road ahead, and we can't say for certain what the very short term is going to look like. But longer term, valuation-wise, it's looking quite compelling. And also, I would just say that there are some very kind of strong businesses, particularly they're not particularly the most fun. There's a lot of kind of very broad economic moats in the European region. I'm talking about things like telecoms, defence, you know, names of that nature. That said, of course, the inflation landscape is a tricky one. So that short term, I'm not saying there aren't going to be bumps, but longer term picture, I think, could be quite interesting.
Hey Sophie, great to hear from you.
지금 분위기 조금 괜찮은 것 같은데?
Big week ahead. Tons of earnings
5만
Tuesday,
원이라도
Thursday, Federal
벌어야
Reserve
되나?
Wednesday, payrolls on Friday. Where
들어가서
to begin?
5만 원,
Let's begin with
5만
tech.
원.
It's felt like for much of the last 12 months, the only thing
마이너스만
that has worked has maybe US tech and some
들어갈게요.
Japanese equities. Wall Street Journal over the weekend writing the S&P 500 Lisa is back at record levels for the first time in 2 years. Information technology is the only one of the index's 11 sectors that can say the same.
I saw that, and what I thought was interesting, there were a couple of stocks outside of it that also had hit records, and they've sort of surprised me. Talking about Berkshire Hathaway, Visa, McDonald's, and Marriott. So sort of this interesting other cohort. But you're right, this has held up the entire market, which is the reason why when you get $10 trillion of market capitalization reporting earnings in the span of 3 days, people take notice, given all the other catalysts in addition to this. I mean, it's pretty, holy event risk, that man.
$10 trillion of market cap across 5 companies.
I know.
Just to be very clear.
I know.
It's kind of crazy.
It's nuts. You have more than 30% of the S&P reporting earnings this week. Have earnings been good? It's been a mixed bag. And this is something that people also haven't talked about. We're not talking about a screamingly amazing situation for all companies. So, you know, it'll be exciting.
Kicks off with Microsoft and Alphabet tomorrow. Do you actually believe it will be exciting?
This week is going to be exciting.
This is not the ECB. This is like
come on.
real
This
deal.
is real deal.
Good to know.
I mean,
Good
come
to
on.
know. Coming up on the program, a massive setback in China's property crisis. Damien Sasser of Bloomberg Intelligence joins us around the table.
전 아파트에 살아요. 관리비는 신경 쓰지 않죠. 그래도 혜택은 포기하지 않아요.
여러분, 지김인 것 같아요.
아파트 아예 사니까 관리비 중에 결제.
지금 뉴스 보십시오. 뉴스도 지금 분위기가 좀 나쁘지 않고 계속 다 주식이 올라가고 있고, 아니 나스닥 어딨어? 니케 코스피 한스는 알겠고 나스닥 좀 주세요. 얼른. 제가 좀 성격이 좀 급해서 죄송해요. 손깔이 나와요. 오케이. 예. 알겠는데. 오케이. 오, 예상 반대 떨어지고 있군요. 나스닥은 참. 여태까지 계속 올라가고 있었잖아요. 지금 지금 그치 떨어지고 있지. 참나. 근데 보세요. 지금 이렇게 왔다 갔다 하긴 하는데 계속 증가할 추세를 보이기 때문에 매수를 가는 게 나쁘지 않을 것 같다.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in? I'm in.
I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
You'll hear this a few times this week. Massive week ahead. There's a big week ahead. Let's kick it off with equity markets on the S&P 500. Almost going absolutely nowhere, positive by 0.07% on the S&P. The Nasdaq positive by 0.25%. Lisa mentioned the stat, $10 trillion of market cap across 5 names, reporting Tuesday and Thursday. Tomorrow, Microsoft and Alphabet. Thursday, Meta, Amazon and Apple. That's the equity stage set right now. Let's go into the bond market. 2-year, 10-year, 30-year. Really muted price action last week, Bramo. Yields lower today by something like 3 basis points, 2 to 3 basis points across the curve. 4.1% on a 10-year, on a 2-year, 432.83.
This is a massive week, and it's not just because of the Federal Reserve, it's not because of the jobs report, it's also because we're getting the Treasury refinancing announcement coming out on Wednesday, where they're going to talk about how they're going to borrow money this year. We know that in November it was actually really market moving. Where do you go ahead of this, right? I mean, if you're going to have such a market-moving week, what do you do other than just sort of sit on your hands and prepare, get enough sleep over the weekend and get ready for some drama? Because it's hard to know which way this is going to break, given what Yellen did in November, which was basically ease some of the concerns of the market.
I'm looking forward to catching up with Don Constant of Mizuho, who thinks that maybe this S&P 500 can break below 4K, which is quite a call from where we are now.
It's a long stretch, given the fact that the economy looks pretty good. A lot of people are saying the economy has to crack for something to get to that place, or else you've got to get some really terrible earnings from some of the Magnificent Seven, which doesn't seem like it.
432.83 on a 2-year this morning. Let's turn to crude. Crude, it's what's not happening here that's interesting. We're not getting a big rally, big move higher. WTI 78.22, Brent crude 83.76. Strong rally to end the week last week off the back of the tension in the Middle East. One oil tanker struck by Houthi rebels, Bramo. That got things going. I was expecting another move this morning. Hasn't happened.
It was a Russian tanker. It was Russian oil, not a Russian tanker. It was Transfigura. But to me, that was sort of the indicative moment where even Russian assets aren't necessarily going to be immune to some of the conflict. The fact that people keep brushing this off, does it sort of represent the fact that people are complacent, or does it represent the fact that people are realistic? And ultimately, nobody has an interest in trying to disrupt the oil transport in this section.
Another escalation over the weekend. Under surveillance this morning. A top story, pressure mounting on President Biden to respond after a drone attack in Jordan killed 3 U.S. soldiers and injured at least 34 over the weekend. Iran denied any connection to the attack. U.S. and allied forces saying Iran-backed militants in the area are to blame. President Biden saying in a statement this, and Marie, have no doubt we will hold all those responsible to account at a time and in a manner of our choosing.
It really just depends, Jonathan, what this means. There's obviously going to be a menu. The Defense Department has these strategic attacks already outlined. Depends what the president wants to do. Is it going to be maybe a covert action, maybe a cyber action within Iran, or do they do what the Trump administration did, which is hit a high-level official from Iran, like Qasem Soleimani, and that would send a very clear message to Tehran about what level of engagement the U.S. is willing to go for.
The more people scream and the more people make it sound dramatic, the less the market cares. And to me, I just can't get over that. The fact that the markets keep rushing this off, given the fact that there is real potential disruption. Right now, it feels like things are escalating. To what degree, I guess people are assessing.
Well, there's two broad options here. There are many, but let's boil it down to two. One is you go hard on Iran, or two, you go hard on Israel and get them to pull back even more. And I'm not sure which choice this administration ultimately goes with.
They already have talked about possibly not shipping as many weapons. The bottom line is, it's an open secret. There is a fissure between Netanyahu and Biden. There is a fissure between Netanyahu and the bulk of the population in Israel. So the question is, how do we really sort of push forward in a conflict where we have a deeply unpopular leader that's pushing ahead with real hardline
왔다 갔다
Let's get to the
하고
latest with the Israeli Prime Minister saying significant gaps remain in talks to release hostages in Gaza. Negotiators from Qatar, Egypt, Israel and the US all looking to broker a deal. The latest talks reportedly include a 2-month pause in fighting in which women, children and the elderly would be returned first and later soldiers and those of military age. However, Israel in return would release more Palestinian prisoners and allow additional aid into Gaza.
So the U.S. is pushing for this deal to happen. We saw shuttle diplomacy over the weekend in Paris that likely potentially moved this week to the Middle East. But you have to ask, with this recent attack on U.S. soldiers,
저도 들어가고 싶어요.
can this
이게 뭐라고?
ruin this potential path?
아,
Jonathan is
진짜.
talking about putting that pressure on Israel. Could that potentially be shrugged off now because we might see more escalation in the region?
Lisa mentioned the news from NBC, the reporting that the Biden administration is considering slowing or pausing deliveries of some weapons to Israel. Is that the base case? Now, that's going to be the next development here.
아, 주원 씨 그런 사람이셨군요. 설거지도 잘하시나 봐요. 진짜. 요즘에 이런 사람이 너무 귀해. 저는 설거지는 꼭 하고 하는데 요리를 거의 안 해요. 어쩔 수 없이 하긴 하는데 별로 좋아하지 않아요.
As of Friday, Evergrande's dollar notes traded at 1.5 cents on the dollar. Evergrande shares sinking 21% before trading was halted due to the news. We were down about 20.87% on Evergrande. That is not even a penny stock anymore. Elisa, this situation, this was a bear's dream 10 years ago. It's materialized, and yet the whole thing hasn't collapsed.
Well, the whole thing being the housing market, okay, but you have seen a number of sales in China, in mainland China, direct to the lowest level in 2015. You're seeing this sort of slow burn. What I find interesting is that Chinese authorities allowed this to restructure. Is this some sort of controlled unwinding of the housing market, or is this just they don't have control anymore? And things are starting to spiral, and now it's all messaging and trying to figure out where the biggest fire is to put it out.
I'll frame just how bad Chinese markets have been relative to US equity markets. Eric Robertson of Standard Chartered over the weekend with this to say the Nasdaq 100 is up more than 60% since January 23 and more than 150% since March 2020. China's Shanghai Shenzhen Composite Index of A shares is down 15% since January 23, 6% from the March 2020 lows. 6% down versus 150% up. Night and day.
How do you have any confidence to invest in China given policy risk and given the fact that their economy has a lot of major hurdles to overcome and there isn't a cohesive way to do so? And that's why we see that one of the contrarian calls is to go into Chinese equities. It's not getting a lot of traction, I'll just say that, but that seems to be one contrarian view some people have kind of flirted with recently.
Damien Sasso with us around the table, Chief Emerging Markets Credit Strategist for Bloomberg Intelligence. Damien, good morning.
Good morning.
What do you make of the Evergrande news over the weekend?
김치, 제육덮밥. 아, 진짜 맛있겠다. 저는 오늘 메뉴는 아이스크림 하나, 커피,
mainland China actually agrees with the ruling of a Hong Court judge. My goodness. All the operating assets at Evergrande are onshore. So, whether they just keep operating and keep trying to complete some of these unfinished homes remains to be seen. But it's going to be interesting. If you're a creditor, you would say, stop everything. Let's liquidate. Let's get our money back and extract some sort of equity, some sort of return.
Yeah.
But it's just not there.
Ring fence. How ring fenced is this?
I mean, I think it's not ring-fenced at all, but, then again, China has its own ways of changing rules as we go along, and this is the real fundamental issue that's preventing offshore creditors with getting comfortable investing into China. It's not an issue that's going away anytime soon.
The judge in Hong Kong said enough is enough. Doesn't China need to take that on board if it wants to attract foreign investors?
I mean, you would think so. I mean, it's a very interesting development that's going on between the Hong Kong court system and Beijing, and you would think that the judge has some sort of is communicating, quite frankly, with Beijing and the powers that be. But, it just seems like this is really where the rubber meets the road. And again, what comes next? There's really no blueprint for taking a company of this size, this systemic importance to the economy, and pulling them out of distress in China. You're going to need help from the authorities. And remember, the authorities are dealing with $650 million of debt that's got to be repaid this year from the local government finance vehicles, which, if they don't get their ship sorted, again, these issues could just get bigger and bigger.
There's no blueprint. There are two ways to take that. One way is we don't know how this is going to pan out, so that's a problem. The other one is this is actually exactly what a lot of creditors have been looking for. A blueprint, some sort of model of some sort of unwind, a healthy kind of corporate debt market where there are workouts. Why is it not that? Why is it not the latter?
Well, you said a healthy workout, but again, when it happens for the very first time, when the court system is truly being tested, when the respect and the responsibility and credibility of a judiciary making rules on whether creditors get something or nothing, what those recovery levels are, you're right. It is a test of it, but it's not going to be smooth, and it's certainly not going to be easy. I mean, what we're talking about is a fundamental shift in how decisions are made at the top levels within China and how that relationship between Hong Kong and Beijing is going to be tested.
We've seen a number of measures, just sort of ideas of policy easing in China. How much do you buy into the idea that this is just sort of the predecessor to some sort of big bazooka that they're going to unleash to try to support the economy?
I think the Triple R cut was a step in the right direction. I think it's actually something we're seeing, not just that, let's take it a step back here. It's not just China now. This week, I mean, we're talking about the Fed, we're talking about Rick's Bank, we're talking about the BOE. What we should be talking about is Brazil, Colombia, Chile, and Hungary, because those central banks are the ones that have been cutting the most. And if anything, come on, I got to talk my ass across. But their expected policy cuts this year are going to accelerate. They're going to go from like 25 bips to 50 bips or 75 bips to 100 bips. They are picking up, the steam. And if vol does remain suppressed in these levels, dare I say, I mean, GMO's been saying this, a lot of others who are way smarter than I, that this is a very good environment to carry an emerging market local debt. And, I can't disagree.
If we can go back to what China's doing in terms of the short selling, is that going to make a difference? They tried to do this as well in 2015. It seemed to fall flat.
Yeah, blocking short sales is an interesting one. And look, and you're right, in the past it's triggered some really big corrections there, and it's given foreign investors an opportunity to kind of enter at better levels.
지금 찾아보니까 진짜 이거 무슨 난리야. 진짜 트럭 하고 싶은데.
Beyond, fundamentals, it's beyond value. It's gotten to be the
들어갈 자리가 없어요.
Right now, scale.
타이밍보다는
Should we have a moment of silence for Detroit?
Oh my God, Michael Barr. I don't know.
That was it.
Did he make it in? Yeah.
What was that second half?
I was sleeping, but I read about it. Jonathan, I have to say, it's a real shame because Detroit could have really, done some wonderful things. Apparently, Dan Campbell made some questionable calls there and said has all year long some of the work, some don't. When you're talking about the NFC Championship game, playing at the same
잠시만요.
Yeah, no, it's tough. It's tough to swallow. Yeah.
Super sad. Choke just a little bit. Damien, thank you, sir.
Of course.
Damien Sasser of Bloomberg Intelligence on the latest in China. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg brief with Yahara Akers. Hey, Yahara.
Hi, John. U.S. and Chinese officials are set to discuss the fentanyl crackdown. High-ranking members of the DEA, Homeland Security, and more are set to meet with their Chinese counterparts Tuesday. It's the first sit-down meeting following President Biden and President Xi's November pledge to restart counter-narcotics operations. Biden is eager to make progress on the issue, with opioids and border control becoming two hot-button issues in the 2024 election. Nikki Haley has vowed to stay in the GOP primary race through at least Super Tuesday. Haley is expecting a better showing in her home state of South Carolina, saying in an interview with NBC, I need to do better than I did in New Hampshire. The former UN ambassador stopped short of committing to remain in the race, through the Republican nominating convention in
약속
July.
약속이 있어서
And
가봐야
Reddit is being
되는데
advised to seek a valuation
식사는
of at
못할
least
것 같고
$5 billion in its
아무튼
IPO, according to Bloomberg sources. That's despite private trades of the social media.
사실은 좋은 생각이에요. 이럴 때는 예약 코로나 오는 게 되게 하는 거죠. 그쵸? 사실은 한번 해볼까요? 사실은 이것도 사실 좀 나쁘지 않은 생각이라서
Encourage some more IPOs down the road.
It depends what the valuation is, of course, but she's going to answer
지금
this question.
왜냐면 사실 항상 못 찾다 보니까 어디 들어갈까 생각했는데 근데 예약도
in the post-IPO world. I'm just saying,
예약도 가는 게 좀 나쁘지 않다고 생각해요.
And whether people come out to market really depends on whether they get the valuations they like or whether they just want to sit on it until they do.
Lynn with us in about 30 minutes' time. Look out for that. Up next on the programme, the race to get into bonds.
I've not had a single conversation over the last couple quarters with the client who said, oh, get me out of bonds. Every single one is saying, how do I get in? When do I get in? Where do I get in?
That conversation coming up next, live from New York City this morning. Good morning. You're watching Bloomberg TV.
가입자 수가 잠실 야구장을 229번 채우고도 남을 자동차 보험은
척하면 차! 삼성화재 다이렉트 차 자동차
지금은 내가 괜찮은 타이밍인 것 같고
착에서 차! 삼성화재 다이렉트 차 자동차
일단은
보험
예약을 매수를 해놓고 왠지 좋은 결과가 있을 것 같아요. 지금 일단은 계약을 해놓고 기다리는 거 괜찮을 거라고 생각해요.
In the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support because we are the best investment cases for this in the world.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line.
네, 저거는 생각해 많이 봤는데 월요일은 예약 날이에요. 예약할 날이에요. 월요일에 차분하게 조금씩 하는 게 중요하다 보니까 그냥 알아보겠다 이렇게 들어가는 거 아니고 뭐 예약해놓고 편하게 하면 좋을 것 같아요. 아 그치 이때쯤 좀 걸렸으면 좋겠는데 일단 보시죠. 일단 그만큼 많이 들어줘야 되겠죠? 지금은 가격은 17,570원인데 제가 해놓은 가격은 17,532원.
Live from New York City this morning. Good morning. Here's the price action on the S&P 500. Equity shaping up as follows. Positive here by 0.1%. Yields are lower by 3 basis points on a 10-year. 410.46. Under Savannah's this morning. The race to get into bonds.
I've not had a single conversation over the last couple quarters with the client who said, oh, get me out of bonds. Every single one is saying, how do I get in? When do I get in? Where do I get in? And you see it everywhere. You see it in money market fund assets. They're still at $6 trillion. You talk to corporate treasurers and pension fund CIOs. They're looking to de-risk. Everyone wants higher yields.
Everyone wants high yields and they're not getting them now. Dom Constam, head of macro strategy at Mizuho Americas, joins us around a table. Good morning, Dom. Are those higher yields coming back anytime soon?
Not anytime soon, I don't think. I think the issue is basically there's a sort of cyclical story that's evolving, which is definitely going to put down pressure on yields, is putting down pressure. But there's still a worry about the structural, which is a lack of fiscal consolidation, the election, the return of a higher term premium, these sorts of things. I think that will come back later. So it's a question of how you weight the cyclical versus the sort of fiscal structural stuff, basically.
So let's find out about the tea leaves to look for that can guide you this week when we hear from the Federal Reserve. A lot of people talking about the balance sheet and how important any kind of guidance on quantitative tightening could be when they stop doing that. The balance sheet has contracted by more than $1 trillion, still $7.7 trillion. How important is that to your view?
The balance sheet is quite important, but it's not, it's not the most important thing. I mean, we've got models that show that if they start tapering QT, you can get some downward pressure on long-term yields. And they definitely kind of want to maybe do that so that they can sort of extend the long-term balance sheet reduction. But the big issue is obviously the front end, and is the Fed going to sort of recognise that it's going to need to start cutting rates at some stage fairly soon this year, and potentially quite aggressively. And that's going to kind of dominate anything really they say on the balance sheet. I would argue definitely.
What's the link between stocks and bonds at this point? Because we've seen stocks kind of move regardless of where the bond market is in the past couple of weeks.
So we do a lot of work looking at, what I call transition cycles when the Fed's done its last hike before it's done its first ease. Risk assets generally do pretty well through that transition cycle. You have to kind of wait until earnings really turn down, and that typically can happen actually after they start cutting. So I sort of feel that right now the risk assets are in a sort of relatively safe place. Obviously, when we get the extent to which there's a harder landing and earnings are turning down, that's when you worry about risk assets. And maybe the S&P makes a few more new highs and then sort of takes a bit of a tumble later this year. But we have to wait and see to the extent to which the earnings kind of get hurt.
A number of guests have come on and said that they prefer equities over bonds at this point, that bonds feel riskier because of some of these structural concerns and because the economy is doing well. Do you agree with that?
Well, it's all about timing. So right now, I think your risk assets are okay, and the long end is going to struggle to perform really, really well. My guess is 10 years will go to 3.5% though. You're probably better off still in the sort of shorter dated stuff like 5 years, and then those are things can rally a lot more. But people have got to get out of cash. So at some point you're going to go into some sort of mix of bonds and maybe stay long equities until you know exactly what kind of hard landing you're going to get, because you're going to get a hard landing, and no point. A soft landing looks, hard landing looks soft until it's hard. It's going to be hard, I'm sure of that. It's going to happen at the end of the year. So right now it's a timing thing. It's kind of logic.
What makes you so sure? And just let's start with definitions. What's a hard landing to you?
Okay, the hard landing will be a sharp increase in unemployment. The reason why it's going to happen with a high degree of confidence, I would argue, is the way this cycle works is it comes through inflation. So a lot of people sort of get it the wrong way around. They look at growth and inflation and the idea that basically inflation might be a lagging indicator. This time I think it's a leading indicator. So it's going to be the decline in inflation that will hurt profits and earnings, and that will lead to the shedding of labour, because basically there's a lot of labour hoarding going on at the moment. And you're going to see the cracks in the labour market evolving relatively slowly, but they're going to evolve, and then companies will have to respond to that. So really the inflation decline is not a benign indicator of, oh, we've done it, we've got a soft landing. On the contrary, the inflation decline is like, oh my goodness, be careful now what's going to happen to the labour market 6 months down the road. And that's why some people who say the Fed should already be cutting rates, they're not wrong, but you're not really going to, they're not going to have the confidence to do that, basically. So they may miss March. I mean, I think they should cut in March, but that's kind of the issue. Inflation is that indicator.
Unemployment right now 3.8. Where do you see that in 9 months' time?
The Fed has its own models, which suggests that the combination of this decline in vacancies, and if you see layoff rates going up by, say, they're currently around 1%, slightly less, they don't have to go up very much. You could easily double unemployment. You could easily get unemployment up to the sort of 6, even 7% level. And that's in the Fed's own models. That's Chris Waller's model from 2022 with Andrew Figueroa. Those guys, we've looked at a lot of that, and that's kind of my concern. That's what you're going to see.
When you see a hoarding of labour and employees, is this across the board, or are there specific sectors, then we have to look at the unwinding?
It's sectors. So what we do is we look at all the sectors. We look at trends, short-term, long-term trends, and you can see where there's excessive employment. Goods sector, very much so. Service sector, less so. Within services, there's certain sectors that have really overemployed. Trade, transport, for example, professional business services, dare I say, a little bit. But then against that, you've got leisure, health. They've only just got back to trend. So you kind of know which sectors need to give it up first. And there are clearly signs that they've reduced their employment quite a bit, but they haven't yet started laying off. The unemployment rate only goes up when you get a combination of no hiring and layoffs. If you just stop the hiring, unemployment's not necessarily going to go up, and that's kind of where we are now.
When you say the Fed needs to cut in March and you're looking at the data, the issue I take is that data is not translating to the consumer. You look at polls and people still say they need to be making, say, 5% more for paychecks to afford everyday prices. Is there a risk that the Fed would cut too soon and it would be a mess in terms of inflation?
So the reason why the Fed is cutting kind of initially is because real rates are very elevated, and they're cutting initially to maintain that elevation in real rates. They don't need to have real rates go even higher. So I think from that perspective, that's the logic of them cutting. When they sort of kick up the rate cuts and they get more aggressive, that's when they really need to bring real rates down, because by then earnings will be slowing a lot, because obviously the elevated inflation is part of an earnings story. It's a profit margin expansion that took place in COVID that gave companies so much profit and allowed them to be a bit lazy on cost. So it's really that kind of unwind.
What kind of downside is there, though, in equities, even with the hard landing that you described, given the fact that it's basically 7 stocks? They're all going to report earnings, or a lot of them, 5 of them, are going to report earnings this week. Probably they'll report really good earnings because they're in a transition spot, and everybody can keep saying kumbaya regardless of what's happening everywhere else.
Yeah, well, in the end, again, we run models and we look at the interest rates versus equities and earnings, equity risk premium. You're not going to get more than, say, 20 or 30% downside, I wouldn't have thought, from a sort of fair value elevated level. So you might go back down to the sort of mid-3s or something like that, or 4, sorry. I mean, high words, high 3s, so forth. But it's not, that's your downside.
You make 20 to 30% downside sound like it's nothing. You won't get more than 20 to 30% downside. When I listen to you, Dom, I don't think many people have heard this that much at all. The idea that we can double unemployment by the end of the year. The Federal Reserve doesn't see it this way at all, does it?
No, not officially. Obviously, they only have like 4.1%, I think. But you can look at Chris Waller's analysis; it's pretty clear. And you can look at a number of other things that are kind of looking a little bit extreme compared with previous cycles. And the bank lending has slowed down massively. You certainly got elements of the service sector in the isms a little surprising. Household employment's a bit disappointing. So I don't think it's a shock to say. You also have to, I think, appreciate how extraordinary COVID was and what it did to the labour market, and therefore you shouldn't sort of rule out anything in a sense. I think it's quite reasonable.
Dom, this was thought-provoking. Let's put it that way. It's good to see you. Dominic Costam there of Mizuho Americas, looking for unemployment to potentially double. We're at 3.8% right now, looking for something that might have a 6 or, dare I say, 7 handle around the turn of the year.
The most compelling part of what he was talking about to me is that inflation is a leading indicator, not a lagging indicator. And the idea that this is what's telling people that maybe the labor market is weaker than people expect. We heard that over the weekend from a couple of Fed officials as well, that they're worried that there is going to be this weakness. We don't know, right? We're not sure. We've gotten it wrong before. We've gotten wrong again. So here's the question. Do you go with this idea of what you believe to be the case, or do you just sort of stay in this purgatory and bet on AI, which seems to be what everybody's doing?
It seems to be what everyone's done over the last 12 months. We'll throw some of those questions at Andrew Balls of PIMCO a little bit later this morning. In the next hour, here's the lineup. Norman Rule, former senior US intelligence official. Lynn Martin, NYSE president, joining us around the table through much of the next hour. And Chris Harvey of Wells Fargo, weighing in on the equity market with a big week ahead for earnings. Tech earnings specifically, Tuesday and Thursday. Your equity market right now on the S&P 500 shaping up as follows. On the S&P 500, positive by 0.07%. Just a little lift here. Yields a touch lower, down 3 basis points. Your 10-year 4.1046. In foreign exchange, the euro. OG crypto coin.
Breakout we have all perhaps long awaited, finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
What do you consider to be the biggest challenge?
Infrastructure that supports trade is the biggest challenge. Our senior brother, President Adesina of the AFDB, estimates the annual deficit, infrastructure deficit in Africa to be over $100 billion. But that over $100 billion is actually also an opportunity for investment. So it is a massive, significant challenge that we are confronting, and my fear is that we may succeed in establishing a very effective legal construct and a very effective legal foundation for trade liberalization and investment liberalization in Africa. But all of that will come to naught if the infrastructure deficit is not addressed, because you will need the goods to move somehow, and you will need to have good trade corridor connectivity, ports, trade corridors that connect countries that are landlocked to ports.
부러지기 싫은 일이? 계속 봐봐요. 이거 도대체 무슨 상황일까요? 여러분, 역시 월요일은 그런 날이죠. 그쵸?
Was going to keep winning the World Cup. This is a threat as the economic picture covering the intersections of Hollywood, Silicon
What happened was you were offered a money-losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you got to be smart about this.
I would expect the big tech dollars to start flowing.
The only sectors that have had positive earnings revisions in the last 6 months are tech and comm services. So those are the sectors that, of course, have led the market.
The parts that have gotten ahead of itself are still the parts that you can't ignore, like the tech sector.
AI will definitely be a big issue this earnings season when it comes to Meta, to Alphabet in particular, because it's driving so much growth.
The new tech bull market that started, we think tech stocks are up another 30% this year.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance alongside Lisa Abramowitz together with Anne-Marie Hordern. I'm Jonathan Ferro. Your equity market on the S&P 500 just about positive by 0.1%. A massive week ahead with tech earnings tomorrow and Thursday. The Federal Reserve on Wednesday. Bramo payrolls on Friday.
So there was this quote from a guy from Nomura. I mean, are you kidding me with this week's event risk? I mean, that sort of seems to be the feel at a time where you get all three cylinders, the economy, Fed policy, and earnings. Earnings front and center for me, because to me, that could really change the whole narrative, with tech continuing to be the bright spot and pumping out cash.
I was messaging Stuart Kaiser of Citi yesterday afternoon because the note came low. he was waiting for the Chiefs game to finish. And I said, can you just send it already? I've got to get to bed. So he sent it out.
Did you really?
I did text him. I wanted the note. Come on. He sent it out eventually. And he went through three things. He talked about the earnings, the data, and the Federal Reserve. He said the most important thing for him was payrolls on Friday. The why is obviously, so we talked about it for a while. For him, good news is good news. And he wants to see if the economic data on Friday is indeed good news.
Especially because we have heard from a couple people raising some concerns about the labor market. We have seen layoffs from a host of different companies, and it's not just big tech anymore. Yet everyone's still getting hired. The quits rate, and we get JOLTS data also this week. And I will say, even though that's not necessarily the most reliable data point, are people feeling confident enough to quit their jobs? Those are the kinds of indicators that could really shape the mood in markets this week.
Things are pretty calm. This market is not moody, so far at least. If you bring up crude, we'll take a look at WTI and Brent. WTI right now is basically unchanged at $78 a barrel. AMH, given the news we all saw yesterday, this is not where I thought crude would be this morning.
And not just yesterday, also what happened on Friday when a Houthis attacked a Trafigura cargo that had naphtha from Russia in it, which Russia was supposed to be off limits, according to these Iranian proxy groups. The issue now becomes the oil market is believing that there will not be a serious confrontation between Iran and the United States, because if they did, you would see oil markets priced much higher.
To me, the issue is there are all of these potential tail risks that are getting louder, and we keep hearing about them. They aren't necessarily materializing yet, but there they are. Are markets truly pricing in that risk, or are they priced to perfection at a time where people are just banking on the soft landing? That's the anxiety that we keep hearing from people, but not necessarily pricing into the market.
We all asked the same question yesterday with the events of Friday and Sunday lead to a big reevaluation of risk in the Middle East, and so far looking at crude, not yet. 83.60 on Brent. Coming up over the next hour, this is what things look like. Norman Rule of CSIS with the president under mounting pressure to act in the Middle East. Chris Harvey of Wells Fargo had a big week of tech earnings, and the NYSE president Lynn Martin on the ongoing volatility. We'll catch up with Lynn through the hour, starting in about 10 minutes' time. We begin with our top story. Tensions rising in the Middle East. The president under pressure to act. Iran-backed militia killing 3 American troops in a drone strike. Iran distancing itself from the attack. President Biden saying, quote, "We will hold all those responsible to account at a time and in a manner of our choosing." Norman Rule, former U.S. intelligence official, saying, quote, "Absent a change in U.S. policy, the lethal attacks against our personnel and international shipping will continue. These attacks will likely involve different weapons or locations, including the U.S. homeland." Norman Rule joins us now for more. Norman, let's start here. Will we shift from this posture of defense at the White House, in the State Department, for the Defense Department? Will that change in the Middle East anytime soon?
Good morning. It's unlikely that we're going to see a change that takes us closer to confrontation with Iran or any action that the administration would believe would involve the U.S. in a long-term conflict in the region.
Norman, do you think that that's what has to happen to prevent this from happening again?
We don't need to involve ourselves in a conflict in the region. We're now faced with a scenario where Iran and its proxies believe they've identified a series of actions they can conduct without the risk of serious reprisal. That has lethal consequences for U.S. personnel in the region, and that has significant consequences for the global economy. We need to change that perception in Iran and proxies, and that inherently requires a more significant kinetic response.
So what's a more significant kinetic response that does not necessarily ignite a broader regional conflict?
Well, we could certainly take broader steps against Iranian positions in Syria and in Yemen. We could certainly undertake a more robust attack against all Houthi facilities in Yemen. For example, an international approach that destroyed all of the Houthi missile, mine, drone capacity over time would defang this player and would provide us with greater confidence to move shipping through the area. But this takes allies, partners, cooperation, and coordination, and this is where the White House should be focusing at present, and bipartisan support, by the way.
Norm, do you think we could see the U.S. go after high-level Iranian officials the way the Trump administration did?
No, and indeed, the Trump administration's actions took place only after a considerable period of time where there was evidence and an escalatory approach of warning Iran not to conduct a massive terrorist attack. We haven't seen that at present, but certainly there is reason to believe the United States could go against Iranian facilities in Syria and perhaps Yemen. and Iranians are located there, and bad things happen to bad people doing bad things.
There's been talk of a timeline being set between Iraq and the United States about U.S. troops being withdrawn from Iraq. Where does that leave U.S. troops in Syria, in Iraq, in Jordan at this moment?
Well, we should be careful about confusing a conversation regarding withdrawal with an actual withdrawal. But U.S. forces in the region have a prominent role on not just Daesh, but stopping Iran. A precipitous withdrawal would send a terrifically poor message to a region already shocked by the Afghan withdrawal and concerned over our posture on Ukraine. So I don't think we're going to see any sudden shifts regarding withdrawals in the near term.
Norman, we mentioned this in the last hour. I'd love your insight, perspective on it. How Iran has changed over the last 4 years. The former president, of course, is going to come out and say this would not have happened under my watch. Norman, if the former president becomes the next president and gets to sit in the White House again, how different is the Iran that he will have to confront today that he confronted yesterday, 4 years ago?
Well, Iran's nuclear program has expanded significantly, and it expanded during a period when Iran had the best chance of a diplomatic solution. Iran's use of proxies has not only expanded, but it's seen that the international community will tolerate this. I think the question is not so much how Iran has changed, but rather how the international community has changed in its tolerance of Iranian activities. And that would be something that I think the Trump administration might seek to address, again, to shock Iran into a position where it would say, we're no longer confident that our actions will produce a predicted response.
Norman, what would that look like? What would they have to do to change that perception?
Consistent attacks against Iranian facilities and those facilities involved in terrorist and operations against the U.S. But we would require partners in the region and partners in Europe to support us. And I think the Trump administration will have difficulty getting bipartisan support given our politics. But the biggest thing we can do to push back on Iran is a bipartisan position on our strategy and partners abroad.
내려오다니.
You said there would be pretty significant economic consequences if this does escalate in any kind of material way. Can you walk us through what you foresee being the economic disruptions? Right now, markets really aren't responding.
Well, that's true, and I think it's because they've seen that oil flows, natural gas flows have not shaped how the consumer countries are reacting. But imagine a scenario where you see military operations in the Persian Gulf, the Arabian Sea, and the Gulf of Aden with greater frequency. Now there we're talking about a massive disruption of energy as well as container traffic in the world, and that would be difficult for people to get around. For example, Saudis and others.
내일까지 이런 가격까지 안 올라갈 것 같은데. 그러면 안 되는데.
Terrorist operations against that pipeline. So then an expanded regional conflict would have significant consequences.
Well, we haven't seen the markets move significantly. At the same time, though, we do see companies starting to move out of the Red Sea, move out of the Gulf and Aden, and actually take that longer trip around Africa. Even Qatar is doing it with LNG. What can be done to really open up the Red Sea, though, to make sure that there is a flow?
갑자기 어디가 갑자기 왜 이렇게 올라가 진짜. 진짜.
Drone capability, followed by consistent pressure against their explosive boat and any naval mine capacity they might have. This is going to be a long-term effort and would require a significant decision by the United States and Britain, our primary partner, to do this.
Norman, unfortunate that I have to ask this question, but I think we need to. Given some of the errors that have been made on the international stage by this administration over the last number of years, are you surprised by the fact that the president hasn't changed the personnel around him?
I don't comment on personal decisions, but I did work in a world where consequences came from certain actions and where we were meant to achieve certain product levels. And the bottom line is I'm not sure we're hitting that mark at present, but that's a decision for obviously others to make.
Appreciate your response, sir. Great to get you on the program this morning. Norman Rulbeck of CSIS. We've asked this a few times. The advice the president is receiving. Is it the right advice?
좀 보이자. 그러니까요. 느낌대로 올라가고 있는데. 근데 내가 느낌대로 왜 행동을 안 한 거지? 이거 문제야.
The next question that needs to be asked of the DoD is, and the CIA, was this an intelligence failure? How did we not know about these groups attacking our servicemen and women in Jordan, which is really a training facility, and it's an anti-terrorism facility?
We'll speak to the Pentagon a little bit later on this morning. Crude right now 78.11 on WTI. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg brief with Yahara Hacker. So Yahara.
Hi John, oil's on the move following escalating tensions in the Middle East. A tanker carrying Russian fuel was struck by a missile as it left the Red Sea on Friday in the most significant attack yet by Houthi rebels on an oil-carrying vessel. Meanwhile, the U.S. says 3 service members were killed and 34 wounded in a strike on a U.S. base in Jordan by Iranian-backed militia over the weekend. Tehran has sought to distance itself from the attack. Shares in China's Evergrande plunged 21% before they were suspended from trading, following a liquidation order from the Hong Kong court. The judge saying the property developer will be taken over by new management in order to carve up $300 billion in liabilities. As of Friday, Evergrande's dollar notes traded at just 1.5 cents on the dollar. London homes are the most affordable they've been since 2014. The latest data shows homes cost 13 times the average earnings of a UK worker. That's down from 15 times at their peak in 2016. However, they are still by far the most expensive in Britain. That's your Bloomberg Brief. John?
Yahara, thank you. Let's sit on that for a second. 13 times average earnings. And I get that it's the cheapest, the most affordable since 2014, but 13 times average earnings.
And this basically tells you the story of the housing market globally and the reason why people have been surprised that we haven't seen a bigger correction and the fact that people were hoping for it and it didn't happen. Where does that leave us going forward?
If things aren't getting better, they're getting less worse. You should just sort of frame it slightly differently.
That's well said, and I think that you could say that in a lot of places, which is why people aren't exactly celebrating with disinflation.
Equities on the S&P 500 this morning, shaping up as follows. Quick snapshot of the market for you. Equities look like this, just about positive on S&P 500 futures this morning. Lisa mentioned the numbers a little bit earlier. $10 trillion in market cap across 5 names reporting across 2 days. Tuesday, Thursday, Microsoft and Alphabet on Tuesday. Thursday, Meta, Amazon and Apple. Up next on this program, headwinds in the equity market.
We have to balance the fact that the names that have outperformed so much, that are having these earnings revisions, are crowded and expensive. And eventually there will come a point where that becomes a headwind.
That's coming up next on the program, live from New York City this morning. Good morning. You're watching Bloomberg Surveillance.
지칠 줄 모르던 아이가 잠들었네요. 마침내 아내에게도 혼자만의 시간이 찾아옵니다. 덕분에 녀석도 쉬네요. 가족 사이에도 각자의 공간이 필요하니까. 여유의 크기가 남다른 우리의 카니발은 3인승입니다. 우리만의 스케일대로 더 뉴 카니발.
Kia, movement that inspires.
오케이. 좀 떨어지네. 근데 진짜 내가 예약한 가격까지 안 떨어질 것 같은데. 어떡해.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Weighs on the heartbeat of the tech sector across global markets.
Real-time data aspect is going to be important. We're going to bring you expert analysis on that. Don't miss Bloomberg's interview with
Live from New York City this morning. Good morning. Stage is set as follows on the S&P 500, slightly positive by 0.07%. Yields are lower by 3 basis points, 410.46. Tension in the Middle East not showing up in the commodity market. Crude just slightly higher, 0.2% higher, 78.20 on WTI. Brent crude 83.70. Under surveillance this morning, headwinds in the equity market.
We have to balance the fact that the names that have outperformed so much, that are having these earnings revisions, are crowded and expensive. And eventually that will come, there will come a point where that becomes a headwind. There's so much momentum right now, you're sort of in the winners ride camp, but when something gets crowded and expensive, you're in the area for downside surprise.
Investors watching out for a range of headwinds in 2024. Lynn Martin, the president of the New York Stock Exchange, outlining 3 principal trends that may shape global markets this year. Volatility remaining, a reinvigorated IPO market, and US capital markets continuing to lead the world. Lynn Martin, I'm pleased to say, joins us at the table. Morning, Lynn.
Thanks for having me. It's great to be with you guys.
It's good to see you again. Let's start with the geopolitics. Clearly, the risk in the Middle East is front and center after the events of the weekend. How does that contribute to this theme of high volatility sticking around for longer, in your view?
Yeah, you know, the geopolitical environment's a quite complicated environment. I think we can all agree with that. It clearly impacts the U.S. equity markets and the global equity markets by contributing to volatility. The surprise factor, that's what's going to contribute to volatility. And this weekend's events were, you know, one of those surprises, unfortunately.
We've talked about this before, how capital markets might be increasingly polarized. Regionally, geographically, you might see a situation where it's U.S. capital markets for U.S. companies, Chinese capital markets for Chinese companies. Do you see it quite the same way?
You know, I don't. I mean, the U.S. capital markets are the envy of the world. They have withstood multiple pandemics, multiple wars, and they've really shown to be the best source of liquidity for a founder, for an entrepreneur to raise the capital that they need to change the world. That's true more than ever. In fact, you know, you see the ability to tap the U.S. capital markets as aspirational, but also when you look at the cost of capital, the most efficient way to raise capital to change the world.
Let's put these 2 ideas together.
Sure.
Do you think that because of the potential volatility, because of the unknowns later this year, are people moving forward their plans for IPOs?
Absolutely. You know, we have a tremendous amount of companies on the road. We're actually about to welcome one, a large one this week, Amer Sports, which is the holding company for Wilson, for Louisville Slugger, for a lot of the brands, you know, our children and we use every day. And just later today, we're about to welcome a UK-based company, Flutter, who is transferring their listing out of their regional market over to the New York Stock Exchange a little bit later this morning.
One of the reasons why IPOs haven't been as active as people had expected was because of just a lot of private equity companies not wanting to take the valuation cuts. And we've seen that even with Reddit, right? $5 billion market capitalization, different, lower than what some of the previous private market valuations had been. How much are people accepting a haircut, accepting not getting the price that they wanted in order to really cash out of those investments?
You know, I think you had 2 reasons really impacting the IPO markets over the last 2 years. You had the volatility, the increased volatility, when the VIX is trading at, you know, 30 handle as opposed to, you know, below 20. It's not that founders couldn't get deals done. It was, what is my stock going to do the day after I IPO, the month after I IPO? What macroeconomic factors are going to influence the way my stock is trading? Now you also see that there is a recalibration of valuations in the market. I would make the argument, though, that 2021 had inflated valuations in the market. So, you know, 2021 was one side of tail risk. This is the last 2 years were the other side of tail risks on the bell curve.
There is this structural story as well, and we've talked a lot about it around this table and in Davos as well at the World Economic Forum, that we're seeing regulation shift that will push more financing activity into private markets. When you start to think about those themes, do you think the lifespan, the arc of a company's lifespan, the timeline of it is going to change, just in terms of how long they stay private for versus how long they stayed private previously?
I think companies are going to be more disciplined about when they tap the public markets. Obviously, they're going to want to be able to articulate a path to profitability or profitability. So I think what you're going to see is when companies come to market, the public markets, they're going to be public market ready. They're going to be able to articulate a very clear message to investors, to their shareholders, that will enable them to thrive. I don't think there's any substitute, though, for the public markets, and that's been proven time and time again.
Have you seen that change already, that change you just described?
Absolutely. With the amount of companies we have on the road. We have a tremendous amount of companies on the road. We have a tremendous amount of companies that we're working with at the moment to tap the public market. So we're really excited about the prospects for 2024.
I want to talk about one threat for 2024 and beyond, AI. I've asked you about this before.
Yeah.
Let's go through it again. Confronting an era of misinformation. For someone in your position, how are we going to go about doing this?
You know, I'm really glad you made the point about misinformation, because AI is just a continuation of data-driven trends that have really existed for more than a decade. If you've got good data, that is going to enable models to add efficiencies to markets. It's something that we've seen in production for more than a decade now with the AI large language models that we employ to add transparency to the energy markets. And as a result of the large language models that we have had in production for a decade, we've seen more opaque parts of the energy market have tremendous amount of transparency, tremendous amount of liquidity added to them, particularly over the last couple of years.
Did you guys see what happened with the AI sort of renditions of her, and that basically
이 바드로 수익을 볼 수 없다는 거죠.
You couldn't search her on X because they were pornographic, artificially intelligence generated images, but it sort of shows you some of the challenges in misinformation or just false videos. I am curious how many companies that are planning to IPO are tech companies are billing themselves as such. I mean, is it like 100% they're a tech company even if they sell furniture?
You know, in this digital age, everyone uses technology. Everyone's a technology company. You sort of miss the boat if you're not employing technology in some way, shape, or form to drive your business forward.
Who do you think right now is your biggest competitor, though? I mean, to John's point, the private markets, we've been talking about that for a long time, and there was this discussion about some sort of transfer. Is it just, you know, another stock exchange, or is it another avenue of financing?
You know, I don't really think we have a competitor, because the role of the New York Stock Exchange is just very different than a traditional stock exchange or a listings venue. Our job is to be the stewards of the U.S. capital markets. And since the U.S. is such an important part of the global capital markets, we really are the stewards of the global capital markets, allowing entrepreneurs and innovators to tap the markets, to raise the capital they need in a cost-efficient fashion, and to democratize investing.
You expect there to be a much more active year in the IPO world. We have seen this with a lot of banks predicting much more active capital market activity this year. How much is that predicated on significant rate cuts by the Federal Reserve?
I think the market's already pricing in the rate cuts to a certain extent. The one thing that I'm watching is the discrepancy between the U.S. equity markets and how it's pricing in, call it 2 or 3 rate cuts, and then you look at the Fed Fund futures markets. If you go further out in the curve, you know, towards the end of the year, it's pricing in probably 5 or 6 rate cuts. So there's a bit of discrepancy there. The reason why I'm watching that is because that's what's going to impact volatility. Really, volatility is what's going to, I would say, impact the IPO markets. But for the short to medium term, I think we're going to see some good IPOs.
You wrote last year that 70% of IPOs executed actually couldn't meet the provisions on the New York Stock Exchange. What is the biggest provision that's holding some of these companies back from going to the NYSE?
Yeah, so we've got a variety of quantitative standards. A lot of those are focused on the minimum amount of shareholders, the size of a company's float that they actually put into the public markets, as well as the minimum market cap of a company. And you're right, more than 70% didn't qualify for us last year, and that number was even higher in 2022.
Amazing. Lynn, you're going to stick with us, I'm pleased to say. Lynn Martin there, the NYSE president's going to stick with us through the next 30 minutes or so. Let's touch base on the financial markets this morning. Equity futures on the S&P 500, slightly positive by almost 0.1% on the S&P. If you're not familiar with the calendar just yet, It is busy for the week ahead. It starts tomorrow with earnings after the close. You'll get numbers from the likes of Microsoft and Alphabet. Then Thursday, Meta, Amazon and Apple. The Federal Reserve is the meat of the sandwich on Wednesday. The cherry on top, Bramo, payrolls on Friday.
And in between, you get sprinkles, including JOLTS and Treasury refinancing agreement. So basically, you're talking about a completely packed week on all cylinders of potential volatility.
I say it all the time. It's my favorite week of the quarter. This is it.
And it's earnest, and I actually agree with you.
It's genuine. It's not like your description of being excited for the ECB.
Okay, you're going to keep harping on that. I was not.
I mean, I shared that view too. Coming up next, Chris Hart.
전 아파트에 살아요. 관리비는 신경 쓰지 않죠. 고지서는 필요 없어요. 모든 관리비 내역이 휴대폰 안에 다 있죠. 중고거래는 이웃 주민과 빠르고 안전하게. 그었어? 차량 등록도 집에서 바로 하죠. 관리사무소는 찾아가 본 적 없어요. 전부 다 집에서 해결하죠. 어떻게 가능하냐고? 아파트 하위에 사니까.
해야 될 것 같아요. 물론 들어가는 것도 방법인데 봅시다. 역시 바도네요. 지금 계속 올라가고 있고 좀 이따가 들어질 거고. 사실 이렇게 보면 별 의미가 없을 것 같아요. 뭐 굳이? 그러니까 일단은 저도 사실 그런 생각이 들었는데 아마 제가 좀 이따가 가야 될 것 같아서 일단 예약하는 거 나쁘지 않다는 거 좀 아무래도 이렇게 예약해놓고 가면 좀 괜찮지 않을까 싶어서. 왜냐면 지금 들어가는 거 진짜 도저히 안 되겠다. 지금 들어가면 그냥 속이 터질 수 있어요.
Weeks of gains on the S&P 500 equity futures this Monday
그럼
morning.
조은 씨는 지금 대기하시는 거예요? 아니면 벌써 들어오시나요?
Nasdaq positive by a quarter of 1%. The Russell of small caps totally unchanged. We've gone through the calendar for earnings. Let's talk about the calendar for bond issuance. The bond market looks like this: 2-year, 10-year, 30-year. Your 10-year yield is lower by 3 basis points. 4.1046. The 2-year down a single basis point. Lisa, 4.3324. The refunding announcement was a big deal last time around. And I guess we're not talking about it anymore because that 10-year has a 4 handle and not a 5.
The reason why it was a big deal is because everyone was saying, oh my goodness, the Treasury Department is going to have to increase their issuance to these record auction sizes. It's going to torpedo market valuations. Yields are going to surge. And then Janet Yellen came out and said, I'm just going to all do it the T-bill market and everything was good. This time around, she's not expected to really surprise, but I want to put this into perspective. The expectation is for the U.S. to announce $4.1 trillion of Treasury sales for 2024. $4.1 trillion. Evidently, there are not enough bonds, according to some people, but I will just point out there are others who are watching this very closely to understand exactly how they're going to be sold.
When you say some people, you mean Bob Michael's clients over at JP Morgan. Yeah. Just clearing that up. Let's turn to crude. WTI and Brent crude both look like this morning. WTI is basically unchanged. Brent crude as well. 83.60 on Brent. WTI at $78 and about 10 cents, which is unbelievable considering this top story. Under surveillance this morning, President Biden under mounting pressure to confront Iran directly after 3 U.S. troops were killed in a drone strike by the country's proxies. Iran has denied any involvement in the attack, but a person familiar with US position said the strike would warrant a stronger response than anything they've done since Hamas militants attacked Israel in early October. AMH, the what if happened over the weekend.
좀 많이 떨어지네,
this is the
이번에.
problem the Biden administration is in. You have GOP lawmakers coming out, some even saying, like Lindsey Graham, hit Iran hard now. It's a level of escalation potentially that this administration has really been trying to avoid. And you have to just ask yourself, though, is this going to be a red line where they go even more aggressive on Iran? Or is it going to be the continuation of deterrence?
We spoke to Norman Rule about 20 minutes ago. He didn't use the word deterrence. He used defense. We've been on the defense. It's not worked. It's not stopped them.
And basically the message, if they don't take some sort of harder action, is that they can keep kind of having these levels of lower grade altercation, and it's not going to warrant some sort of significant response. To me, I just want to understand what are the red lines. Because right now, I don't have a good understanding of what Iran's red lines are, and I don't have a good understanding of what the U.S.'s red lines are.
I think we can expect this to spill over into the campaign trail, that's for sure, this year. Nikki Haley refusing to quit the GOP race, vowing to continue until at least Super Tuesday, despite back-to-back losses to Donald Trump in Iowa and New Hampshire.
As long as I keep growing per state, I am in this race. I have every intention of going to Super Tuesday. Through Super Tuesday, we're going to keep on going and see where this gets us. That's what we know we're going to do right now. I take it one state at a time. I don't think too far ahead.
Haley and Trump going head-to-head in South Carolina next before Super Tuesday in early March. We were talking about whether she makes it to Carolina, South Carolina, never mind early March.
She's calling this a, quote, building situation. She says that she wants to keep gaining momentum, and her baseline at this point is not beating Donald Trump in a caucus or primary. It's making sure she does better than the prior date. But it's going to be very embarrassing for her if the polls continue to show what potentially may happen to her in South Carolina, in her home state, but she's lagging the former president 20-30 points.
New York Stock Exchange President Lynn Martin alongside me. We talked about politics, remember, in Davos, and the whole room just went quiet. No one wanted to discuss. Does this change your world, this race this year?
You know, the only way it changes our world is it's impacting volatility and the IPO window. And our job is to make sure that, particularly in years like 2024, our systems are reliable, resilient, and open so that people can efficiently manage risk.
That's how you diplomatically sort of dodge that question without addressing it.
Basically, they're going to look at the markets and not address the politics of it. I will just say Saturday Night Live will get funnier because they seem to really enjoy this. There was a great week in review. Basically, they had a picture of Trump and Biden, and Colin Joe said, "Well, guys, it's 2024." But is it? And that's sort of where we all feel. It's like 2020 was so great, we want to do it again, and that seems to be where everyone is.
It's kind of sad, isn't it? The week ahead, though, is interesting. Big week ahead for tech earnings. Microsoft and Google set to report after the bell tomorrow. Amazon, Apple, and Meta following on Thursday. The 5 companies have a combined market value of more than $10 trillion, with the tech giants again at the forefront of a rally in stocks, which has the S&P on track for its 3rd straight month of gains. It's been quite a run, Lisa. over the last year?
I mean, it's just been NVIDIA. I'm sorry, I was looking at the gains. I mean, we're talking about big tech, yes, but there's sort of a hierarchy of big tech. NVIDIA's at the top, Microsoft and Google to some degree. At the very bottom, I mean, you have, Tesla, if they consider it, but you have some of them that are really at the bottom. So the question is, how vulnerable is this market to disruption, given that so much of the rally has hinged entirely on 7 stocks?
Chris Harvey of Wells Fargo is going to make it interesting for us, maintaining his year-end S&P 500 price target of 46.25. Chris is with us around a table. Morning, Chris.
Good morning.
The path to 46.25, how difficult is this year going to be?
That's going to be not so easy, but we do expect a lot of volatility. We haven't seen the volatility yet, and the one thing that surprises us is credit spreads at 90, IG credit spreads at 92 basis points over. That's dampening a lot of volatility. The other thing is during earnings season, you have a lot of idiosyncratic information, hard for volatility to spike up despite some of the geopolitical, but on the geopolitical side, it is starting to get to be a bit of a worry.
Lynn was talking about that high volatility as well. You went straight to credit, talked about how tight spreads were. Do you have to assume for your world to play out, for things to get harder, we're going to see some credit issues sometime soon? And where do they come from?
Yeah, you have to see some credit issues.
지금 가능성이 좀 있는 것 같기도 하고.
And the bid for,
근데 저는 더 이상 안 속을 거예요.
Bid for rates for duration. Now all of a sudden, at 5%, nobody wanted to buy duration. At 4%, everybody wants to buy duration.
이런 짓을 많이 봐왔기 때문에 안소가 그렇게 쉽게 안소가
You saw shorter duration paper really, really attractive. It was hard to lose money on that kind of paper. So you have people not buying because of credit, but because of the fatter yields and because they can make a lot of money on it. The break-evens are attractive.
When you zoom out, the balance of risk seems to have shifted. At the end of last year, people were talking about maybe there was risk that things would just be so much better than expected, you'd miss out on the rally. Now it seems like it's on the other side, that if unemployment starts to pick up, if that weakness starts to pick up, that's what's going to really draw into question some of these tight credit spreads.
So at least a couple of things there.
설마.
One is we've seen a different mentality. It used to be that you wanted to buy low and sell high. Now what you do is you buy strength and you continue to buy strength. And when you see weakness, then you start pushing things down. But not until you see weakness.
갑자기 안 했던 짓을 왜 해?
We don't see weakness with credit spreads this low. We don't see a recession with credit spreads below 100 basis points. So a lot of our assumptions, 1.5% GDP, not inflation, but unemployment going a lot higher, that's not associated with these kind of credit spreads. Those credit spreads are telling you that the economy is strong and the corporate market's even stronger.
So does that mean that you are bullish? Then how do you sort of wrap yourself into a negative frame of mind if you're basically painting a Goldilocks scenario?
No, we're not bullish. What we're doing is we're putting a lot of our focus on positioning, right? What we think is we want you to be growthy, right? So we're looking for communication stocks, which have done pretty well. But we're also trying to be a little bit more conservative and saying, okay, you have some oversold situation in the market, healthcare and utilities. So you want to use that and balance in the portfolio. You want a barbell communication with something more defensive, something oversold, and that's healthcare.
고맙게도 이렇게 많이 들어지긴 하는데 제가 역시 너무 낮게 잡았나.
Unexpected weakening in the economy. Is that what you're really referring to? That is potentially the greatest supplier of volatility, or is it a lot of different things?
It's a lot of different things, and the important thing to look at when you think about volatility, so there's the VIX, which is clearly the measure of equity vol, but then there's also the MOVE, which is our index, which is the Treasury market.
주원 씨, 봐봐요. 매수 맞았잖아요.
above 100 if I look at the MOVE index, which I do
봐요. 더 이상 안 떨어지고 지금 막 올라가고 있잖아요.
The bouncing around of the 2 years is incredible. So if we don't really know what the cost of capital is that volatile.
방금 얘기해줬잖아요. 전 고수예요, 고수.
And that's surprising. At some point, you should see that spill
딱 봐도 알아요.
markets and maybe after earnings season.
Do you think that's
이건
settled
그냥
down just a little bit
기싸움이고
more recently as the Fed starts to
이것도
engage in conversation about cutting interest rates?
더 이상 안 떨어질 것
What happened after
같은데
CPI and PPI?
이런 거예요,
the 2-year
지금.
just dropped 10, 11 basis points, and then another 10, 11 basis points, and then a couple days later, we're back up. So will it change once the Fed starts talking? Maybe, but that's a lot of volatility.
At least it's like, what's 10 basis points between friends after a year we've just seen?
I'm old enough to remember when it was 25 basis points a day. I mean, I'm just saying. theoretically.
They were massive moves in October.
Exactly.
I would say relative to then, things are calmer.
All I can say is somebody wrote in, a friend of yours, Chris, who said, equity guys talking credit, you know spreads are too tight if that's the case. Just want to point that out. So someone who is bringing that up.
How many times have we seen that, though? Equity strategists focused on the bond market.
Look, right now, what is the message, though, from the bond market? And this, to me, is the lack of clarity. Both Lynn and Chris talking about volatility in the 2-year, and yet, if you look at credit, it's saying the all clear.
Yeah.
So how do you know which it is?
So you don't know which it is. It's really, it goes back to this, some of the kids shows you used to see. Which one of these things does not belong with the others, right? 92 basis points over doesn't belong with a lot of the other things, with Fed cutting, right? It doesn't belong with a GDP of 1.5%. And so there, you're right, there are a lot of confusing situations in the market, which is why we're focused more on positioning, because the macro is really, at this point, really hard to get a handle on. And eventually, we're going to see perception change. We're going to see some volatility come back in the market. That's traditionally what you've seen with volatility this low.
This is John's favorite week. I don't blame him. It's actually a really exciting week. What's the most important thing of all of the different events on the 3 cylinders that markets really pay attention to?
We're focused on what Janet Yellen has to say about issuance.
저는 초보 중에 고수예요.
Thank you.
아직
obviously
초보자지만
what Powell has to say in his
고수하는 척?
The presser's always dynamic. It's always interesting, and you can have some new information come in the presser.
Did you say Yellen just to please Bramo?
No, I did not.
Come on, you don't think that that's actually interesting? It's incredibly interesting.
It wasn't in my top 3, but I agree with you, it's interesting.
Thank you.
It's what started the rally. When she brought expectations, or she came in below expectations on November 1st, the market was already beginning to rally, but it was that really helped settle down the bond market, which helped rally equity.
Certainly one of the catalysts. Chris, it's good to see you.
Good to see you.
Chris Harvey of Wells Fargo. Equities right now on the S&P 500 positive by not even 0.1%. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahara Hakez. Hey, Yahara.
Hi, John. It's a key week ahead for the U.S. economy. The Fed is expected to keep rates on hold on Wednesday, but Jay Powell's press conference could offer clues as to when they'll begin cutting rates later this year. That comes ahead of the January jobs report due out on Friday. Low-cost carrier Ryanair lowering its profit guidance for the fiscal year, citing higher fuel prices and issues with third-party booking websites. The airline, a major customer of Boeing planes, also claiming they don't foresee any disruption to their aircraft delivery schedule and are seeing improved quality out of Boeing's Seattle factory over the last few weeks since the Alaska Airlines incident. The Chiefs and 49ers are headed to Las Vegas for the Super Bowl. Kansas City aims to be the first back-to-back champions in almost 2 decades. It's not clear whether Taylor Swift will be there to support boyfriend and Chiefs tight end Travis Kelce, as her tour schedule has her in Tokyo through February 10th, the day before the Super Bowl. That's your Bloomberg Brief. John?
Yahara, thank you. I love that for so many people, that's the only part of this story that matters. Can she make it there?
Yeah, I got some heat for calling the Super Bowl the show. But I mean, at a certain point, that's what it is. I mean,
Isn't it a show? I've got some stats.
I only tune in for the halftime part. Really? Yeah. The whole thing is kind of a
For
show.
the average NFL game.
And the commercials. And
the commercials too.
If Taylor Swift's going to be there, I wonder if the commercials going to be geared towards people like me.
The average NFL game, I think, is about 3 hours long. The action's about 15 minutes on average.
Exactly.
The whole thing is a marketing ploy.
Okay.
It's 15 minutes of continuous play,
What do you think is better, American football or British football?
What do you think?
European football. I know you're...
Next on the programme, what is better? Up next, the outlook for inflation.
We are in the sweetest spot of the inflation reduction right now. It's going to get tougher going forward.
That's coming up next on the programme. You're watching Bloomberg Surveillance.
앞차도 또? 옆차도 또? 열의 9이 다시 찾는 자동차 보험은?
척하면 착! 삼성화재 다이렉트 착 자동차 보험.
삼성화재 자동차 보험은 어디가 가장 저렴?
착에서 착! 삼성화재 다이렉트 착 자동차 보험.
And yourself, are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money, we made our shareholders a lot of money. More importantly, we've grown the business and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, and the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
J or other authorities.
Bigger challenges next.
Was going to keep Green World Cup.
This is as the economic picture.
Covering the intersections of Hollywood.
Stocks on the S&P 500 just a touch positive to kick off Monday morning. Good morning to you all. We're up here by 0.07%. Yields are lower by 3 basis points. 410 at 65. One eye on crude all morning. $78 on WTI. We are basically unchanged here, Bramo, even with that tension in the Middle East.
People are learning just to shrug it off until they can't anymore. Unclear what's going to necessarily trigger that. But right now, there's no sort of signal that the U.S. is going to materially change its defensive stature.
Unchanged on WTI and on Brent as well. Under surveillance this morning, the outlook for inflation.
We are in the sweetest spot of the inflation reduction right now. It's going to get tougher going forward. It's not out of the question that not only does inflation stabilize, but once in a while you get the rate going up, and that would really impact perceptions. It is getting harder to grow in this global environment.
US core PCE showing inflation cooling as 2023 came to a close. Andrew Balls, the global head of fixed income at PIMCO, writing the following. After major economies showed surprising resilience in 2023, we anticipate a downshift towards stagnation or mild contraction in 2024. The standout strength of the US is likely to fade. I'm pleased to say that Andrew joins us now. Andrew, new cyclical outlook. Great to catch up, sir, as always. How to navigate the descent. Can you just put a little bit more meat on those bones? Just how much of the descent are we about to encompass, confront over the next year?
지금 먹방 중이에요.
Yes, so globally in the US, but in Europe, across most markets, we're expecting interest rate cuts this year. This comes after the very big hiking cycles that we saw, and we see inflation peaking and growth peaking, and then there's a lot of uncertainty as you go into this year. The US has been a standout in 2023, stronger than the consensus expected. A lot of people thought there would be a recession last year. We think that probably the US is going to slow down.
얼마까지 떨어지는가 보세요.
With what we're seeing in Europe, and then the baseline is pretty benign.
많이 떨어져도
a slowdown,
특히 많이 올라갈 것 같아요.
a deep slowdown, a rise in unemployment, but not a really big rise in unemployment, and that should be enough for inflation to come down towards central bank targets. We've had a lot of good news already on inflation, but then just very big uncertainty about all the different parts of the puzzle and how it comes together. So it's going to be a really kind of interesting year for active managers and a lot of risks to guard against.
Andrew, you talk about a slowdown and underperforming, or at least a right-sizing of the U.S. economic outlook this year. You talk about things slowing. Do you think right now investment-grade corporate credit in the United States with a spread of 92 basis points, 12 basis points away from the cycle lows that we saw just 3 years ago, do you think that that's overpriced, priced to perfection, not something you'd want to buy?
So I think in the baseline, investment-grade credit looks okay, and I agree you're not going to see an awful lot of tightening from here, but you earn the income and very high quality issuers, very default remote. But then you have the risks around the outlook, and when economies are slowing down, you can certainly get a lot more than anticipated. Judging the impact of the tightening cycle that we had before is something which is very difficult. So I think investment grade credit looks fine, but it makes sense to guard against lower rated credit, more economically sensitive, more leveraged parts of the market. And when you have really good prospective returns from high quality fixed income, the returns on sovereigns look pretty good here. The return on investment grade credit, US agency mortgages. When you can do well
분위기 좋아요.
high quality fixed income instruments, then you don't need to go down in quality. You don't need to go to the more leveraged, more economically sensitive parts of the market. So good returns are possible. Keep your options open as we navigate this year, as we go through, to see the balance in terms of growth and inflation risks.
So before we get into outside of the U.S. and where you're sort of shifting instead of the U.S., I am just curious. I want to sit on the sovereign debt point for a second. You think that that's a steady place to go at a time where we're about to get a refunding announcement from the Treasury Department with potentially $4.1 trillion of Treasury sales. We have a Fed that is unclear in terms of their trajectory. What's the risk there? I mean, do you agree with Bob Michael that there's just a shortage of bonds and that's really the main issue in the U.S.? Or do you think that there is some sort of deficit and structural risk with yields potentially going higher in the U.S.?
So I think there's a lot going on. So I think in terms of high quality fixed income, the yields, US 10-year Treasury is close to 4%. The yields look attractive, and you look at aggregate type bond indices, 6%, 5, 6, 7, 8% with more credit type of yields for high quality bond funds look very attractive. You have supply, to a reasonable extent, the supply information should be known and it should be priced in, but supply is something which is certainly something to keep an eye on. And you have at the front end of the curve the big uncertainty over the path for the Fed. So a lot going on overall. I think definitely there are medium-term concerns on the U.S. fiscal policy. We have a U.S. election coming up this year, obviously with implications over time for fiscal policy. But when you're getting kind of 5, 6, 7% nominal yields, this is an indicator of future returns. Is one of the best indicators there is, and in that context, high quality fixed income looks very attractive.
Andrew, high quality. Let's talk about the rest of credit. We caught up with JP Morgan Asset Management just last week. Constructive on credit, taking credit risks. We heard the same thing from Amanda Lynham at BlackRock. Interested in high yield, not all the way down to triple C's, but interested in the rest of it. Andrew, where are you and the team? Where in high yield credit do you want to be? Where do you want to avoid?
So I think in high yield, it's always a case of picking the names, rising stars, the issuers which you see on the path to investment grade over time are always one of the key things that our analysts are looking for. But I would just take a step back and say that you can get high quality instruments if you use government debt, investment grade credit, US agency mortgages, private label mortgages. You can get high quality portfolios which give you attractive yields, 5, 6, 7% type yields without needing to go down in quality. So yes, there's going to be lots of opportunities in high yield, but in terms of asset allocation, that up in quality bias I think makes a lot of sense in this economic environment. And if you do get, say that we get worse than expected macro outcomes, equity market outcomes, more being priced in for the Federal Reserve, in that negative tail, which is something you should pay a lot of attention to, there may be really good opportunities later to add to lower quality credit in a market where you see repricing. But for now, I think you can achieve a lot of what you want to achieve up in quality.
Andrew, let's just finish on the Fed just briefly. I want to go back to the secular outlook that you and the team put out in the middle of last year. When you said Chairman Powell would accept 2 point something on inflation, that was slightly controversial at the time. Less so now because a lot of people have moved in that direction. We're at the 2 point something after the read of last week. Is that sufficient to say let's go in March?
Well, I think they have optionality, and I know you've talked about this on your show, but the gap between CPI and PCE is something which is important, and it gives them optionality. So I think overall, I don't see why they would be in too much of a rush. The inflation data is improving, but the GDP data still remains quite strong. The labour market data remains strong. So our best guess is that they'll certainly keep their options open for March, but it's more likely that they go later in the year. But if the PCE does clearly give cover, given the wedge, given the medical related costs there, if they wanted to ease earlier, that certainly gives them cover. And inflation coming down below 3%, it gives you the wherewithal to start easing monetary policy over the year. You don't need to come all the way down to 2.0. But I think clearly there's enough in the inflation data now that this is a matter of timing for our taste. There's quite a lot priced in for this year, given the ongoing strength of the labour market data, the broader data, but this could change obviously through the course of the year.
Andrew, thank you. Andrew Balls there of PIMCO, and thank you to the brilliant Lynn Martin, the NYSE president, joining us around the table for the last 40 minutes or so. From New York City in the next hour, Major General Patrick Ryder of the US Department of Defense, David Leibovitz of JP Morgan Asset Management, Robert
제가 좋아요 되게 좋아요. 좋아요와 구독을 눌러주시면 저는 완전 감사하겠습니다. 일단 오늘은 여기까지 하고 내일은 아마 비슷한 시간에까지 하지 않을까? 일단은 아직 잘 모르겠고 그럼 내일 뵈는 걸로 여러분 goodbye.
Obviously, we have our car business and we need to have games here and all that sort of thing. But what else can we do? How do we grow the platform? The whole ticket pricing process. It used to be very yellow sheet of paper, it'd be some numbers around it. There was not a lot of science behind it. We're now in the world and have been for many years, as most other similar businesses are, to dynamic pricing. So our pricing for a seat may change hourly if we see demand for that, all driven to maximize revenues.
The balance sheet is so important to the success of the team. And a big part of my role is to make sure that the balance sheet stays strong and that we are prudent stewards of capital. There are things that we can do that are irrespective of winning or losing. Take a look at the first budget that comes from one of the teams and ask questions about, do you really need to spend that much? Are you really shooting high enough when it comes to partnership revenue?
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
Breakout we have all perhaps long awaited, finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
Will
this be the last of its kind? No. This is the nature of capitalism. Get over it.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
This is Bloomberg.
Our base case in the U.S. is for a rate cut in the second half of 2024.
I think the next leg in the recovery is when you actually start to see cuts.
June is where the market has gravitated to.
There definitely is cover for them to start to cut.
It will come in the beginning of the summer, call it June, maybe July. Not only do I think that that's what's going to happen, I think that that's what should happen.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
People are excited about the Federal Reserve. Payrolls on Friday, the Fed on Wednesday, lots of earnings Tuesday, Thursday. Bramo. Treasury refunding. A little bit later this week. Top story. A little bit later on the program.
Okay, look, it might not be the top story, but this, did you hear? We heard that from Chris Harvey. This is what ignited the rally on November 1st when Treasury Secretary Janet Yellen decided not to issue long-term bonds. Just say.
It contributed to the move, we should say. We say that the catalyst for the move, ultimately. Chris Harvey of Wells Fargo on with us a little bit earlier, looking for 4,600 there and thereabouts on the S&P. Dominic Constam earlier on this morning from Mizuho, suggesting that unemployment can climb to 6 or 7% by year end. That is a very, very different call than what we've heard so far this year.
And it was predicated on this idea that inflation is actually a leading indicator, and the disinflation that we've seen is a leading indicator of some of the weakness that we will see in some of the economic figures. I'm also watching JOLTS. Again, some of these sleeper kinds of indicators, the idea that the quits rate has been climbing. People feel confident enough to quit their jobs. Oh, no, they don't. And I think that's a problem.
Tons of economic data through the week. I think this morning you start with the commodity market. You take a look at WTI, you look at Brent. After the events of yesterday, you were expecting a big move higher. You don't get one. We're unchanged on WTI. Brent crude right now, AMH 83.30. On Brent, we're negative on the session.
It's pretty remarkable given this was the moment that everyone was so worried would happen, an escalation that potentially would bring the U.S. and Iran face to face. But everyone's starting to look at that and say, we'll probably see more defensive structure from the United States, but they're not going to do what Lindsey Graham, the senator from South Carolina, is saying, which is go into Iran and hit them hard. But Biden said over the weekend in a statement, and also when he was campaigning in South Carolina, he said, we shall respond.
What I'm curious about is how do you price out the risk premium of all of these potential tail risks that seem to be percolating out there? Because right now, a lot of people are saying price to perfection, including Greg Jensen of Bridgewater when we went to Dallas, spoke to you, John. But to me, what is the premium and why are we not seeing it baked into things that are hitting record highs?
Well, we are seeing a bit of a premium when you want to ship through the Gulf of Aden and through the Red Sea, which is why you're seeing so many now, not just consumer good vessels, but Qatar sending LNG to Europe. This is Europe's lifeline, given the fact that they ditched Russian natural gas. They're now going around Africa, so this can start to become a bigger problem.
Prices are basically back to where they were in November, and the triple-digit calls for crude were in September. Remember those? Amrita Sen, Energy Aspects, triple-digit crude by Halloween. We then got an additional dose of risk in the Middle East after the terrorist attacks in early October. And yet here we are. We just didn't rally in the way people thought we would in crude.
It's been a widowmaker. I mean, that's one of the contrarian trades right now is to lean into oil. Well, it hasn't worked. And why? Well, some people say it's because of the U.S. oil production. Other people say because right now there isn't anything that would truly disrupt oil shipments. That's the reason why Friday's move was probably more notable than today's in response to an attack on a Transfigura oil tanker that was carrying some Russian oil.
And last week, crude, of course, rallying by more than 6% on the week. I think the biggest weekly gain going back to September. The broader price action right now on the S&P 500, we're totally unchanged, not just on crude, but on S&P 500 futures as well. In the bond market, yields are lower by 3 basis points. The 10-year 410.46. And in foreign exchange, the euro slightly weaker, dollar stronger here, 108.19. Coming up this hour, in the third hour of Bloomberg Surveillance, David Leibovitz of JP Morgan on a big big week for equities as tech earnings begin. Citi's Robert Sokin on his rate cut call ahead of the Fed's decision later this week. And Major General Patrick Ryder on increasing pressure on President Biden to act in the Middle East. We begin with our top story, markets showing caution ahead of a Fed decision and big tech earnings. David Leibovitz, global strategist for multi-asset solutions at JP Morgan, saying this: the combination of more moderate growth, softer inflation, lower rates leaves us constructive on the outlook for US equities. At the same time, however, we recognize how aggressively markets have moved since the Fed's December pivot. David, I'm pleased to say, joins us around the table. Morning, David.
Morning.
Bramo's done this already. Let's go through the top stories this week. So we've got the Fed, earnings, payrolls, Treasury refunding, ISM jolts, all of that stuff.
Job.
Thank you. What are you focused on?
So I think that we need to separate the data into two pieces. One is going to be the earnings, and the other is going to be more of the macro, the payrolls, the Fed data, so on and so forth. On payrolls and the Fed, I don't think the Fed's going to move this month. I think that they may send a signal to help people begin to ground their expectations and build a base case for what easing looks like this year, and we do think that the Fed will ease policy. Then we're going to have the jobs report on Friday, right? I think that the reason the Fed is going to be a little bit cautious here is because the economy's running hot. The jobs numbers have been good, and they don't necessarily want to paint themselves into a corner saying they expect to do something and then end up with a print that could go one way or the other. And then underlying all of this, you have earnings. And, markets have moved aggressively, like you pointed out in that note that I wrote. The earnings need to come through. And I think that that's where we're spending a lot of time thinking. You look at expectations, particularly for the big growers, the tech companies, they're pretty solid. And so those earnings need to be delivered. And obviously, this is our first glimpse at what that looks like going into the end of last year.
So far, we've gotten a slew of earnings. They've been mixed. They really haven't been consistent across the board. And it seems like with each earnings report, it really is viewed as a company-specific story, not necessarily a broader market trend. Do you expect that to continue, or do you think that these big tech names have a different kind of patina around them?
So you make a very good point, because if you look at the reaction to big beats or big misses, companies are being punished for missing, but they're not necessarily being rewarded to the same extent for delivering those earnings. Big tech is a little bit different because given the sheer weight in the benchmark, right, it's going to dictate what the market does in the fourth quarter earnings season. And so to me, it's still a very micro story, but we need to be cognizant that there's almost a sentiment overlay here where if they miss, even if they're not missing significantly, that could very well change the tone that has been pretty positive here over the past couple of weeks.
There's so many risks. This is an incredible event-driven type of week, and I just wonder if you think that there is enough of a risk premium baked into certain equity valuations that some people are saying a price of perfection. I take issue with that. It might just be a couple of the names, but in a broad sense have rallied in the face of a lot of uncertainty.
I think the bigger problem here is that the market broadly is kind of doing a victory lap on inflation, right? Everybody's like, look, it really was transitory. It's coming back down. It's where we want it to be. What they're not recognizing two things. One, on the other hand, economic growth is still very solid. Yeah, it's going to downshift over the course of this year, but given the numbers we saw last week, things are clearly not falling out of bed. The other thing that people need to weigh is that the balance of risks is now becoming more balanced. It's not just about inflation, it's about the top side and the downside risk to economic growth going forward, and I'm not really sure that that's being accurately priced in the current environment.
Dominic Kostam of Mizuho was on the program in the last hour or so. He was pretty emphatic about what he thinks about inflation. He said it's a leading indicator. Earnings go next, unemployment follows. His call on unemployment from south of 4 now to maybe north of 6, approaching 7%, potentially by year end. I have to say, we've barely heard any of that around this table on this program over the last 12 months. Your thoughts on that?
So I would push back a little bit on the idea that inflation is a leading indicator. If you actually listen to what corporations say, and I think tying it to earnings is particularly interesting, but you look at what corporations say, they say, look, we only raise prices if we think the demand is there. So the leading indicator is what pricing power is doing, but what shows up in the BLS numbers is going to be a lagging indicator at the end of the day. The comment about unemployment is interesting because there are more people that are pounding the table saying we think that growth is going to slow materially. Some people saying that growth may even have slowed materially into the end of last year, although the numbers don't necessarily confirm that. I think that the question here going forward is how much cooling do we need to see in the labor market, and can we continue to destroy job openings without destroying jobs? If we can do that, then the path to 2% without a recession should be relatively smooth. if we boil the toad and we do get that back up in unemployment, I'm not sure we go to 5-6%, but I do think that we move materially higher from here.
I love the expression boil the toad. It feels like we're in kind of this moment of boiling things. But I'm curious, his point, just to sort of stick on what he was saying that disinflation actually creates smaller profit margins for some of these companies and will actually lead to layoffs. It's not that it's necessarily a leading indicator, but that itself could cause a greater degree of unemployment. How much are you seeing the disinflation that's coming through in the numbers being a real negative for the bottom line for a lot of these companies that are reporting?
Well, so I think that I would make two comments there. One, yes, I mean, logically, that very much makes sense. Your margins get squeezed, your earnings come down. You need to either cut back on your CapEx, and there's not a lot of CapEx today, or you reduce your labor bill, and so you let people go. What we've seen over the past couple of years, though, is a real hesitancy to part ways with labor. I still think we're in an environment of labor hoarding to an extent, and when you look at some of those kind of headline job cuts that we've seen, they've been made more in a preemptive way rather than a reactive way. And so I'm not so sure that people are willing to kind of cut the cord and let it go the way that they have been in the past. That said, when it comes to the economy, it's important to remember that the S&P 500 companies aren't going to dictate what happens with the unemployment rate and payroll job growth, right? That's about small and medium-sized business. And so one of the things that we're particularly focused on going forward is, are we seeing a growing divergence between what the Fortune 500, the S&P 500 names are doing, and what's happening on Main Street across the United States?
What about consumer sentiment? You talk about Main Street. We had all of this household income, the COVID money really was piling up, and now people are actually going back to credit card debt. At some point, when is that going to be really impacting the data?
So we've seen the rise in credit card debt. You can see it in the national statistics, the Chase data, the Bank of America data, so on and so forth. Importantly, if you normalize that based on cash flow, the overall kind of income ratio doesn't necessarily look all that nefarious. But I mean, we are seeing late cycle signals. I don't want to be sitting here suggesting that we're at the beginning of some new economic expansion. We are seeing things begin to move towards that late cycle environment. I think that the deterioration we've seen in sentiment, the increase in credit card debt, the lower savings rate, I mean, the list is becoming longer and longer and more distinguished. And that's why I think bringing it back to the Fed, do they go in March? Probably not, but they likely ease at some point in the second quarter to try to get ahead of any weakness. And we all need to remember, if the Fed keeps the policy rate where it is and inflation's coming down, things are getting inherently tighter.
That's the passive tightening that the likes of Deutsche Bank and Matters have been talking about. Just before you go, favorite idea right now, what is it?
So we like high-quality U.S. equities. We like large cap in the United States. I would say that for investors who are looking to add a little bit more risk to portfolios, maybe look at the equal weight benchmark, take a little bit more value and not just that growth. But I think that small caps need to re-rate a bit further before we're willing to step back in there and take another swing.
David, good to see you.
Thanks for
joining us. David Davids there of JP Morgan Asset Management on the latest in this equity market. Tons of earnings still to come this week. Equities right now positive by 0.1% on the S&P 500. An update on some stories elsewhere this morning. Here's your Bloomberg Brief with Yahira Hackers. Hey, Yahira.
Hi, John. Oil's moving this morning following escalating tensions in the Middle East. A tanker carrying Russian fuel was struck by a missile as it left the Red Sea on Friday, in the most significant attack yet by Houthi rebels on a vessel carrying crude. Meanwhile, the U.S. says 3 service members were killed and 34 wounded in a strike on a U.S. base in Jordan by Iranian-backed militia over the weekend. Tehran has sought to distance itself from the attack. Shares in China's Evergrande plunged 21% before they were suspended from trading. All this following a liquidation order from a Hong Kong court. The judge saying the property developer will be taken over by new management in order to carve up $300 billion in liabilities. As of Friday, Evergrande's dollar notes traded at just 1.5 cents on the dollar. Blackstone is betting big on AI through its $25 billion investment in data center operator QTS. The private equity giant took over QTS in 2021 in a $10 billion deal, and now it's bankrolling the development of new data centers across the U.S. But the project is facing backlash from local communities, many of whom don't want the ugly buildings in their backyards. That's your Bloomberg Brief. John?
Yahira, thank you. Up next on the program, pricing in the Fed's first cut.
You probably do need some more weakening in the labor market. You need growth to slow for the Fed to really get back to 2% in a sustainable way. And we're just not seeing growth really slowing that much.
That conversation is coming up next. You're watching Bloomberg Surveillance Night from New York City. This is Bloomberg.
앱선의 기술은 이미 더 나은 세상을 만들어 왔습니다. 에너지를 아끼는 고효율의 기술로 탄소 배출을 줄이고 작지만 더 진보한 영상을 경험하게 하며 빠르고 더 정밀한 기술로 지속가능한 내일의 해답이 되도록 앱선은 디테일에 집중합니다. 디테일스 포 투모로우 앱선.
What happened was you were offered a money-losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you know, you got to be smart about this.
Live from New York City, 1 hour and about 15 minutes away from the opening bell. Equity futures on the S&P 500 look like this. We're positive by 0.05% on the S&P, and the bond market yields are lower by, let's call it, 3 basis points on a 10-year, 4.1027. Tension in the Middle East, 77.64. Crude is lower. Crude is lower, even with developments over the weekend. Amazing. We're down 0.5% on WTI. Brent crude, 83.14. I want to pick up on one single name. It's Ryanair. Here's the move right now on the screen, just about positive intraday by about 0.5%. We've been asking a question, Bramo. Michael O'Leary in his position on Boeing. If these planes got delayed anymore, would he cancel the order? And he said,
Not at all. He'd welcome even more. Honestly, Michael, this is a fantastic story. Basically, Ryanair is putting out the signal, the sort of bat signal, that if anyone wants to sell their Boeing 737 MAX 10 jets or otherwise, he will be there to buy them. If anyone cancels them, he will be there. He says the price is right. We're very happy with this aircraft. We'd love to get more. So, you know, that's their position.
He's a contrarian character, though.
I kind of love it.
He does come out and say this. Also, apparently he's saying that United comments last week about Boeing were, quote, stupid. So really a shot
I'd love to
fired
have a
across the
round table
Atlantic.
with Kirby and O'Leary sometime
Let's
soon.
make that happen.
To walk through that. I imagine United don't want to make that happen. Ryanair might. They might have things to say.
I'm sure.
I imagine United don't. Under surveillance this morning, pricing in the Fed's first cut.
You probably do need some more weakening in the labor market. You need growth to slow for the Fed to really get back to 2% in a sustainable way. And we're just not seeing growth really slowing that much. The balance of risks, you know, still, it's become more balanced, but maybe still is a little bit more on the side of inflation risks reaccelerating, you know, which suggests to us that maybe a mid-year cut is more reasonable.
Investors are waiting clues about when the Fed could begin cutting. Citi global economist Robert Sockin weighing in saying this: we rolled forward our call for the first Fed cut by 1 month to June, and we now expect 125 basis points in cuts this year. Citi's Robert Sockin joins us now for more. Robert, good morning to you, sir.
Morning.
Great to catch up with you. Let's just talk about how challenged the dual mandate is at the Federal Reserve at the moment, on both the inflation side and on the unemployment side of things. How challenged is it?
I think the Fed's in a really tricky spot. I mean, if you look at the amount of progress you've had on inflation, it's been really substantial. Core PCE running at target over the second half of last year. But still, if you look at some elements, like on the services side, still not, it's hard to have a lot of confidence that that's going to fall back to target in a sustainable way. At the same time, you're seeing signs that the labor market is weakening a bit. You're seeing strains among lower income consumers, stresses in credit. So you have to start wondering, when's the Fed going to put even more weight on that second leg of the mandate, given that core PCE, as I said, is running near target?
Important market-related question then. Have we seen peak soft landing optimism?
I think we are kind of at that point where, as mentioned, the growth data has been extremely resilient with almost no cost from that fall in inflation that I mentioned. So this is probably that peak Goldilocks scenario. And really the next few months are going to really determine whether that soft landing story becomes the base case or whether we move back into that recessionary scenario markets. And I think you're going to see the Fed grapple with that at the next meeting. They're going to open the door for rate cuts, but also be aware that there are still risks to the outlook.
Dominic Constant was on the show earlier, and he said that the disinflation that we're seeing is actually a leading indicator and is leading some of the weakness that we may see in the labor market. Do you agree with that?
I think it's hard to separate how much of this is demand-driven versus supply-driven. On the one hand, yes, I think that it could be a sign that things are weaker than we expect. As I mentioned, you are seeing some softness in the labor market, and really, that's what we think you need to crack that services inflation. But it may also be that just the supply side has been improving enough over time as labor force supply has been coming back. That's been cooling wage growth, and maybe that's what's helping bring down services inflation. So it's that demand versus supply debate that I think it's really hard at this stage to come down one side or the other.
Do we have an understanding of the economic impact of the Fed's balance sheet, of some of these other aspects of the Fed's tightening program that some people occasionally peripherally reference when they're trying to come up with other reasons to sort of pay attention to every granularity of the statement?
Yeah, absolutely. I mean, we think in the background, the Fed's balance sheet unwind has been pushing up long-term rates. And that's another important story. I mean, it hasn't been the primary story, but you've seen this Fed start to shift that narrative as well. We think they're going to start talking about it more, maybe stop that unwind sooner than expected. That should mean less pressure on long-term rates, and that should also support growth.
Does QT need to end before you start cutting interest rates?
Yeah, that's the difficult balancing act. I think you need to at least signal that they're moving in the same direction. So you can start cutting rates and signaling that you are slowing down the pace of running off your balance sheet. I think it'd be very awkward if they were moving in opposite directions.
You remember last time around, it was like that in reverse. They had to wind down QE before they started hiking interest rates, even though it was pretty obvious they were incredibly late. Why does sequencing like that matter to them so much?
I think here they're trying to learn from their past mistakes. I think that was probably a past mistake. And I think they want to send a consistent message to markets that if policy is going to start moving in an easing direction, that's consistently moving in an easing direction.
Do you think that it's been a consistent message to markets that markets matter or don't matter in order for the Fed to achieve its ultimate goals? I mean, I was really struck the December news conference with Fed Chair Jay Powell, the fact that he did not come out and push back against some of the easing that we saw in financial markets. Do you think he's going to try to walk that back?
This is a Fed that pays a lot of attention to financial markets, and as things have been priced, they've paid a lot of attention in their communication to either trying to walk it back if they think they need to, or kind of ride into it if they think it's the right pricing. I think what you've seen is a Fed where communication has been in a fair amount of disarray. You saw, at times the Fed chair come out fairly dovish, and then other people within the committee trying to walk that back a little bit. The question is, how much do they do that in January? I think what they do is they recognize that they probably don't want to cut in March, and they're seeing that reflect in market pricing, but they don't want to shut the door completely. So I think the market pricing kind of makes sense for where they are right now.
On Friday, the jobs report, the survey calls for 180,000 jobs created. Where is that number? Where does it have to be to put March on the table for your team?
That's a great question. I think it has to be looked at with the combination of data. So it's not just the job gains, but what's happening with the unemployment rate and wage growth. So for example, if it comes in at 180,000, but you've seen some softening on the unemployment side, and you see wage growth continue to come down, I think that starts to feed into that soft landing scenario, and then maybe that also puts March on the table. And then of course, another scenario be that's a very weak report, and then the growth side becomes the dominant story, and that also puts a March cut on the table. So it could go either way.
So at the moment, no base case is June start.
Yes.
And we get more than 100 basis points of cuts this year.
Yes.
Okay. So that's the back half of the year, more than 100 basis points of cuts as we start to see the election campaign really ramp up. I'm sure you're getting questions about this from clients. How relevant is the election calendar to your call?
We're getting it a lot, and I think it's a really important question. I think there's an argument to be made that, that December meeting where Chair Powell came out much more dovish than expected, that if he knows he's going to have to start cutting rates this year, why not signal it a bit sooner to get as far away from the election if you're going to start that process? So, in our call, we have the economy going into recession around mid-year, and that sort of dominates the discussion for the Fed, and really they're going to cut if they need to cut. However, it's not a good political scenario to be in, as you mentioned, cutting that much right into election, especially because the closer we get to election, that's really when voters start to form their opinions. And so it's a tricky balancing act in a bad situation.
I'm thinking of that September 18th meeting when they put out the projections. Ramo, we're going to get a rate cut in September, 2 months before we've got an election.
I know it sounds crazy right now, but if the unemployment rate's moving up and we are in a recession, as our call says, then that's really what's going to dominate. However, I think if the economy is much more resilient, then that trade-off becomes much more extreme.
I think it's just going to be absolutely fascinating. Absolutely fascinating. Brahma, you try and avoid the politics, but ultimately the politics brings you in.
Oh, there's no way for them to avoid politics one way or another. All I can say is if we're going to be doing this general campaign for the longest period ever, with a campaign that's already been run before, I mean, at a certain point, they're just like, you guys have already figured out what you want.
They're in a tough spot. Robert, it's good to see you. Thanks
Pleasure.
for the update. Thank you, sir. Robert Stocking there of Citi. Coming up next on the programme, Major General Pat Ryder, Press Secretary for the US Department of Defense, on mounting pressure for President Biden to take action in the Middle East. That conversation is just around the corner. Your equity market, 1 hour and about 4 minutes away from the opening bell. Equities totally unchanged here on the S&P 500. Crude lower on the session.
저는 지금 요즘 세대들의 자유분방함을 마음껏 느껴볼 수 있는 신촌 한복판에 나와 있습니다.
테레비 나오는 거예요? 저희 같은 트렌디 피플들은요, 패션 말고 껌도 아무거나 안 씹거든요. 사랑은 주스처럼 달달하게, 우정은 민트처럼 상큼하게, 인생은 스피아처럼 프레시하게.
요 세 개를 씹으면 기분이 아주 지대 캡슐 짱이거든요.
멕시코 치클처럼 부드럽게 말해요. 또 떼똥처럼 향기롭게 웃어요. 주시 프레쉬 프레쉬 민트 스피아 민트 롯데껌 좋은 사람 만나면 나눠주고 싶어요. 껌이라면 역시 롯데껌.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had used, but never used the phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one. Okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need to we need investment support because we are the best investment case for this in the world.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Live from New York City this morning. Good morning. 60 minutes away from the opening bell in New York to kick off a brand new trading week. 3-week winning streak on the S&P 500. Looking to see if we can add to that. Plenty of obstacles in the way. Loads of earnings, a Fed meeting, news conference with Chairman Powell, payrolls on Friday coming up as well. Equities go nowhere on the S&P, going somewhere on the Nasdaq, higher by 0.14%. In the bond market, 2-year, 10-year, 30-year. Shape of things as follows. Yields lower by 3 basis points. On a 10-year, 4.1046. On a 2-year, down a basis point or two to 4.33. And just to round things out with crude at the moment negative on the session lows, just absolutely unbelievable. We're down 0.6% on WTI to 77.50. On Brent crude, just about holding on to 83, negative 0.6% even with this developing story over the weekend. Under surveillance this morning, a busy week for markets. The Fed is widely expected to hold rates steady Wednesday, but investors are expecting guidance about when rate cuts could begin. This ahead of the January payrolls report due out on Friday. Bloomberg Economics expecting slower job growth and the unemployment rate to tick up slightly. That's the outlook for the week. In the Middle East, Israeli Prime Minister Benjamin Netanyahu saying significant gaps remain in talks to release hostages held in Gaza. International negotiators looking to broker a deal this week, with current talks including a 2-month pause in fighting. Women, children and the elderly would be released first under the terms of a ceasefire, and Israel in return would release more Palestinian prisoners and allow additional aid into Gaza. And it takes you to our final story, really our top story, and the question mark as to why crude isn't rallying. President Biden under mounting pressure after a drone attack killed 3 U.S. soldiers. Iranian proxies attacking troops stationed in northeast Jordan, but Iran has denied involvement in the attack. The strike presenting Biden with a decision likely to be consequential for his presidency. A choice to punish the perpetrators could put the U.S. in direct confrontation with Tehran. Anne-Marie, that is a big, big issue for this administration.
Yeah, absolutely. How is this administration looking at this? Is this a red line, Jonathan, because of the fact that now 3 U.S. service members are dead? It is no longer tit for tat and deterrence. You actually have individuals dead and dozens wounded and some even evacuated from Jordan.
Joining us now to discuss is Major General Patrick Ryder, Press Secretary for the U.S. Department of Defense. General, thank you for joining us. Just an update, if you can, just to begin on the well-being of the 34 wounded. That number has risen overnight. I think the last number we had was 25. Could you give us an update, sir, just to begin the conversation?
Yeah, sure. Thanks very much for having me. As you highlighted, 3 U.S. service members killed at a facility in northeast Jordan along the Syria border. The number of injuries has risen to at least 34. 8 of those had to be evacuated outside of Jordan, all of whom are in stable condition at this point in time. There is the potential that the number of injuries could rise as individuals are further diagnosed, for example, from concussive impacts. So we'll continue to keep the public updated on that front. I do obviously want to offer our thoughts and prayers to the families of those who got the most terrible news over the weekend and lost loved ones, as well as those that were injured.
Absolutely. General Ryder, thanks for being with us. It isn't now the case that the American people need to prepare themselves for more deaths, for more wounded American service members at the hands of Iran and Iranian proxies?
Well, as we've said, and will continue to be the case, we will take necessary action to protect our U.S. forces, no matter where they're serving around the world. I'm not going to telegraph or forecast any potential response from the United States because of this attack, other than to say there will be a response, and this kind of action will not be tolerated. You know, U.S. forces are in this region for one reason only, and that is to focus on the lasting defeat of ISIS. And so, again, we will do whatever we need to do to protect our forces going forward. But certainly, at the end of the day, we are not looking to engage in a wider conflict, merely to ensure regional security and stability.
Does the administration think proportional attacks will change the situation in the Middle East?
Well, again, what we're going to do is we will take deliberate, appropriate action. Our focus here is not to broaden a conflict from the very beginning. We've been very focused on ensuring that the situation in Israel does not broaden into a wider regional conflict. Unfortunately, what you have here are Iranian proxy groups that are exploiting the situation and conducting these types of illegal attacks against forces that are in the region to actually preserve peace and stability. So again, we're going to do what we need to do to protect our forces, while also cognizant of the fact that what we don't want is a wider regional conflict.
But would you consider what happened over the weekend, given the fact that in Jordan, this is a facility about terrorism, this is a training facility, we have Americans dead now. Is this now a red line for the administration with Tehran?
Well, look, again, as I highlighted, any attack against U.S. forces is unacceptable, and certainly the loss of 3 of our warriors is something that saddens us all, and we will respond in a time and a manner of our choosing. But again, our focus in the region is not to be there to widen conflict or to create more instability. It's the opposite. So again, we will take necessary action to protect our forces while also working toward that end of regional security and stability.
General, you said that any attack on our troops would be unacceptable. There have been more than 150 attacks on troops in Iraq and Syria since October 17th. How much do you think that what you've done so far, what the administration has done so far, has effectively subdued additional attacks, has sufficiently protected some of these troops?
Well, to your point, there's been over 150 rocket and UAV attacks, and to this point, those air defense systems have worked extremely well in terms of protecting our forces. We're taking a look at this situation here and how this UAS was able to strike this facility and kill and wound U.S. service members. But again, everywhere that we have forces, we're going to take all necessary measures to protect those forces.
Is this an act of war by Iran?
Well, look, it's certainly a horrific act, and it's certainly something that's unacceptable, and we will respond appropriately. But if you take a step back here again, the United States' focus is not to go into these regions to instigate war and escalation. Our focus is to work with regional partners and allies to ensure security and stability. That's why these forces were there. You all remember about 10 years ago when ISIS was 24 kilometers outside of Baghdad. We don't want to go back to those times. And so that's what our focus is. But when our forces are threatened and when they're attacked, we will take appropriate action.
Who conducted these attacks? Can we just start there and really get into the detail of that? General, who were the perpetrators behind these attacks?
Yeah, so what we know right now is we are very confident that these attacks, this particular attack against this facility was by Iranian-backed proxies. We're working through the actual attribution piece right now, but of course it carries the signature of Kataib Hezbollah, which has conducted attacks in the past. But this is something that we continue to look at specifically.
And when you look at this, just for people following this and listening to what's been developing in the Middle East over the last month or so, how big is the difference between those groups and Iran themselves?
Well, for a long time, Iran has used proxy groups around the region to enable itself to have plausible deniability, enable itself to implement policy, and importantly, to essentially try to expel the United States and other countries that are at odds with its own policies and views from the region. And so this is, in a large part, what you are seeing in Iraq and Syria is that these proxies, and to a degree Iran, exploiting the situation, the tensions in the Middle East in an effort to try to expel the United States and the coalition from Iraq and Syria. And again, those forces, particularly in Iraq, are there at the invitation of the government of Iraq to assist in the lasting defeat of ISIS. That is the mission that we're there for, and that's what we continue to remain focused on.
Does Iran have plausible deniability this morning?
Look, we know that these groups are backed by Iran with the support of Iran. They organize, train, and equip these groups, and we will hold them accountable.
You will hold Iran accountable or these groups accountable? And I think, Major General, as you know, this is the issue. Which one is it?
Look, again, I'm not going to telegraph or forecast our response. We know that Iran is behind these groups. We're not seeking conflict with Iran. We don't seek war with Iran. But again, we will take necessary measures to protect our forces, and we will respond in a time and manner of our choosing.
I think we understand that's the position of the government this morning. So, Major General, forgive me for following up on this, but I understand the US doesn't seek war with Iran. Does Iran seek war with the US?
Well, look, I'm not going to speak for Iran. I'm not an Iranian government spokesperson. We know that their actions and their malign activity around the region are certainly contrary to peace and stability. But we will continue to remain focused on our goal, which is regional peace, security, and stability. But again, if our forces are threatened, we will take appropriate action. We will ensure that those forces will be defended.
General, we know that Lloyd Austin is expected to return to the DoD today. Can you just give us an update on his health after he was missing for about a month outside of the Pentagon?
Well, I wouldn't say he was missing. We've known where he's been. But yes, he is expected to return to the Pentagon today, and we'll be working from here. We'll be hosting a bilat with the NATO Secretary General a little bit later this morning, and we're certainly looking forward to him coming back into the Pentagon. As you saw in our statement last week, he continues to recover well. His prognosis is excellent. He does continue to have some physical therapy associated with some lingering leg pains, but he's doing very well.
Besides the NATO Secretary General, what kind of meetings is he expected to have, or potentially has he already had, with Congress to build some sort of bipartisan support, coalesce around an idea of what the policy should be going forward when it comes to this issue that Jonathan's talking about on how to deal with Iran and their proxies?
Well, the Secretary has been actively engaged with multiple leaders to include the White House, with U.S. Central Command, with the Chairman of the Joint Chiefs of Staff, and of course maintains regular contact with Congress on a variety of issues. Look, we all understand the serious nature of what we're dealing with here. Again, working very hard to prevent a wider regional conflict while at the same time ensuring that our forces can operate safely and securely. And so that will continue to be a main focus going forward. The Secretary is, of course, actively engaged on all those matters, as well as other issues around the world, to include Ukraine and the situation in Gaza.
Major General, appreciate your update this morning, sir. Hopefully we can continue the conversation through the week ahead. Major General Patrick Ryder there on developments in the Middle East. I think I can speak for all of us. Our hearts and minds are with the families affected by the events over the weekend, and now it's about a response. Anne-Marie, what is that response going to look like?
That's the question we asked him, and he didn't want to forecast it just yet. The question is whether or not the United States is going to do a response of deterrence and defense, or an actual attack against one of these proxy groups. And I'm not just talking about taking out their missile equipment and degrading how much they can strike American individuals or vessels going in and out of the Red Sea, but actually going after a senior leadership position to send a message.
Well, the senior leadership of who? And I think that this is what you were asking about. Is it from some of the proxy groups, or is it Iran directly? How do you have a tit for tat where you don't cross a red line but you don't know what it is? When neither group really wants full-out war, but both group really is, I guess, trying to escalate on a sort of smaller scale levels. It's a very difficult situation to get your hands around.
Super, super complex. Continues to be. That's the latest on the Middle East. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg brief with Yahara Hackers. Hey, Yahara.
Hi, John. Amazon will back out of a $1.4 billion deal with Roomba maker iRobot after a veto threat from the EU. European Council Vice President Margaret Vestager told Bloomberg earlier this month the burden was on the companies involved.
In any merger, it is so that if we have concerns, it is for the businesses either to address these concerns by debunking them, or by addressing them by coming up with remedies that will solve the problem. And if a company say we will not come up with remedies, well, then of course we expect that they have good arguments.
The EU warned Amazon would be tempted to demote similar products on its marketplace. Amazon is expected to pay iRobot a $94 million termination fee. In the wake of the announcement of iRobot, the CEO is stepping down and the company is cutting jobs. Shares in Philips fell after the company announced it's suspending sales of sleep apnea devices and ventilators in the U.S. the Dutch manufacturer making a deal with the FDA over its faulty medical equipment. Speaking to Bloomberg, Philips CEO said the company doesn't see any notable harm done after extensive tests done on the devices. Still, Philips is facing thousands of lawsuits. U.S. and Chinese officials are set to discuss the fentanyl crackdown. High-ranking members of the DEA, Homeland Security, and more are set to meet with their Chinese counterparts on Tuesday. It's the first sit-down meeting following President Biden and President Xi's November pledge to renew counter-narcotics operations. Biden is eager to make progress on the issue, with opioids and border control becoming two hot-button issues in the 2024 election. And that's your Bloomberg Brief. John?
Yahira, thank you. Coming up on the program, it's bigger than the market cap of most benchmark indices worldwide. It's 5 names in America reporting earnings, $10 trillion of market cap over just 2 days, Tuesday and Thursday. Up next, big tech on deck.
When you think about what has been holding up the market, has been propelling us higher, it's those big tech companies.
That's next on the program. You're watching Bloomberg Surveillance.
Regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content, had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it, Peacock?
Yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was when the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
multi-trillion-dollar industry. There's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Stocks on the S&P 500 totally unchanged. The opening bell 43 minutes away. Yields are lower by 4 basis points, 4.0969 in the commodity market. I just keep scratching my head every time I see it. We're down by 0.75% on crude, 77.45 even with the tension in the Middle East. Under surveillance this morning, big tech on deck.
When you think about what has been holding up the market, has been propelling us higher, it's those big tech companies because they really have an outsized influence, not just in terms of price performance, but in terms of earnings. So we certainly do hope that those companies deliver.
Earnings from 5 of the magnificent 7 stocks due out this week. Microsoft and Google coming tomorrow, ahead of Apple, Meta, Amazon on Thursday. Mandeep Singh, senior technology analyst at Bloomberg Intelligence, joins us now for more. Mandeep, these stocks have had quite a run, haven't they? Are these earnings going to back it up?
I think so. And look, in the case of Microsoft and Meta, the top-line growth expectations are the highest. You compare it to Apple, flat top line. So clearly, you know, there is a divergence in expectations. The key for me is how much incremental revenue is Meta going to generate from Gen AI or Microsoft. In the case of Microsoft, they're the only ones who have quantified it's 2% from Gen AI workloads. It'll be interesting to see how much they ramp up their CapEx. and what that would mean in terms of top-line expectations.
So let's pick out Meta. We used to say you can't cut your way to growth. Meta's got different ideas, doesn't it?
I mean, look, their business model is such where they can cut a lot, which they've shown in the past year. And, if they keep launching new products, the core business, even though they have engagement issues, they've been able to ramp up ad loads. Look at your ad feed for the Blue app. It's full with ads. And still they have 2 billion users logging into the app every day. So clearly, it is a sticky product. And they're able to pull that lever where they increase the ad loads, lower the cost base, and that's what's driving the stock here.
When it comes to Meta, and to some degree Apple, and not so much, we'll get to Microsoft and Google in a second. How much are you listening for what they say around artificial intelligence, and how much is that really going to be noise versus some of the advertising that you're talking about and the actual revenue-producing aspects of their business?
Yeah, so to me, Gen AI monetization right now is clearly around workloads. You want to run your large language model workloads on these clouds. And these clouds are the ones who are buying the NVIDIA GPUs. There's a real inflation on the chip side. In fact, Microsoft did say their gross margins is going to take a hit because they can't match the revenue that's being generated from these workloads. But these workloads are sticky. These are multi-year workloads. So once they have the customer, the margin expansion will happen.
Hold up. Are you saying that NVIDIA's gain is Microsoft and Google's pain right now?
All of the software companies. Software is an 80% gross margin business. What is happening with the inflation in GPU prices is it's going to hit all the software guys who rely on chips because they have to pay up more. The gross margins will come down. Question is, can they pass it to the customers? And the answer right now is Microsoft has the best mousetrap because they have the OpenAI partnership. So they give you the best cloud to run your LLM. And over time, they'll be able to monetize it. The other ones are still figuring out, do I use Llama open source approach? Do I use Anthropic? And that's something to find out.
Where is Alphabet in this race? I think if you'd asked us a couple of years ago who would win here, I think a lot of us would have said Alphabet and Google. Where are they?
Well, so Alphabet has that vertical integration where they have their own large language model, Gemini, and they want it across their cloud portfolio on the devices. Think of Android. So they want to bundle the large language model with your Android ecosystem. And I think it's a very good strategy. The problem they're having is the search business is getting attacked from all angles. Everyone, look at Bing, what they have done. They have partnered with Meta. They have partnered with every company out there to provide search because large language models are not real-time searches. You need real-time search component. That's coming from Bing.
And yet when I want to find out news about Bing, I probably search on Google still because Google for me is just a superior product, Bramo.
I recently Binged.
Did you? How did that work out for you?
Actually, I didn't enjoy it as much as Googling, and I did the Bing. And
personal reviews that count here.
I don't think I've ever Binged. I need to do it. You do, because it's the default on any PC. So that's the reason why they get some attitude. They get some eyeballs. I am curious though. Google is potentially really in trouble. I mean, that's what I heard, at least from other tech people in Davos, who were saying, this was actually someone who actually could be disrupted. Do you believe that?
I mean, I think the narrative right now is Google is getting attacked because they have the 90% share in search. Everyone feels the value of large language model is in search and summaries. So technically, yes, their business model should come under pressure, but when you look at the engagement metrics, Google still has the engagement on Chrome, on mobile. So clearly, there is a threat that someone like Perplexity is an app that has become quite popular because people feel it's a better way to summarize content. And in some use cases, you are going to use a large language model instead of a Google search, but that doesn't take away the overall use case of search. And I think that's where Google definitely has an advantage.
We haven't mentioned Apple. And I find it interesting because right now we're talking about AI and we're talking about search and advertising. Does Apple belong in the Magnificent Seven, or should it be really lumped in with LVMH?
I mean, Apple's reliance on iPhone is very obvious here, that the fact that they don't have a cloud pivot or anything else, it's really device-based, but they still own the distribution. If you have to roll out your large language model or new search, you need that distribution that Apple has. So they will still call the shots. Problem is, they would love to buy a company for a large language model. M&A would be a great strategy, given there are so many large language models out there. They haven't done that. Anthropic, or all these companies that, Amazon has partnered or Google has had a minority investment in, and there are a number of large language model companies. So they need to beef that up. they have the distribution. The users will use whatever they offer because it's vertically integrated.
We've talked lots about market caps. Can we just finish on valuations? Just how stretched are valuations for some of these names?
I mean, look at what happened to Tesla. Everyone thought they would keep growing over 20%. When you have that kind of a miss where they lower the expectations, the multiples compress. And so right now, all these companies are priced for double-digit growth. And we know they can't keep growing at double-digit because the math doesn't work at their size. You know, the top line can't grow double digits. So some of them will disappoint. Tesla was the first one. I think expectations are low for Apple. That goes in their favor.
Okay.
But clearly Meta, 21% top line growth. Can this sustain if they keep showing more ads on the feed?
Is that the lesson from earnings season so far for you, that we've rewarded beats maybe less than we've punished misses?
Oh yeah, the bar is much higher this earnings season than it was last time. And with the multiples where they are, they better beat. I mean, that Gen AI component is huge for Microsoft. They better come out and say it's going to contribute at least 3% to our growth.
Mandeep Singh of Bloomberg Intelligence. Mandeep, good to see you. Front page of Barron's this week, and Satya Nadella crushing it at Microsoft. Bar's pretty high for them. And I'm with Mandeep, relative to, say, Apple. We got 2 downgrades, remember, to start the year. Apple struggling even after a massive run-up in the stock, something like 48% higher in 2023.
Yeah, but everybody's still going out to buy their iPhones, and they're captured in the ecosystem. I do think the most interesting one to me is going to be Google, because you asked the question, Alphabet, how much can they really compete with Microsoft, especially if they're being squeezed with NVIDIA chip prices and trying to pass it along to their cloud customers?
What does it say about Bing that you actually have to say that I binged? And that's like a thing, that you went on Bing once and searched for
I
something.
just like saying I binged. Is it I binged or I bing? I binged.
Sticking with Google.
The fact that we're still trying to figure this out.
No, I know, but
there's a steep hill to
but
climb.
it's the default search, you know, and at a certain point, if they try to get it to be a better kind of look, maybe they'll switch the name to, you know, Moogle.
Moogle. Okay, thanks for that, Bramo. That kind of coverage coming up later this week. Don't miss it. Coming up through the week, those big 5 companies reporting Tuesday and Thursday, a Federal Reserve decision Wednesday, payrolls on Friday. Coming up tomorrow, through tomorrow morning, Brian Levitt of Invesco, Jill Castell, CEO of Citizens Bank of Edmond, Nikolai Tangen, Deutsche Bank Investment Management CEO, and Stephanie Roth, Chief Economist at Wolf Research. All of that and a whole lot more from New York City as we kick off a brand new trading week. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I'm part of the baby boomer generation, and this generation is now increasingly dealing with problems relating to Alzheimer's, dementia, and so forth. Not particularly my age, but maybe some people my age, even younger, but obviously in their late 70s, 80s, and 90s, more and more we're reading about Alzheimer's. Is this an epidemic that you can't really do anything about, or is it something we could deal with in some way?
It's a real challenge for a lot of families, mine included. I have a 90-year-old grandmother at home who's struggling with dementia, and providing care for her has been a real challenge. And for my family, we love her dearly, we want to be there for her, but it's painful for us to see the toll dementia has taken on her. So this is rightfully a concern for families across the country. We're investing a lot in studying dementia, to not just Alzheimer's, but other forms of dementia, to understand what's driving it. But very interestingly, there's also some research that's taking place, lifestyle research, if you will, on the impact of diet, of social connection, of physical activity, and sleep on dementia as well. Dean Ornish, professor at the University of California in San Francisco, has been actually one of the key folks who has been leading some of that research on the impact of lifestyle and dementia. And this is a promising area.
Have you thought maybe I should go do something else? I can't do anything better than I'm already doing. I've already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself.
Are you happy doing this? You're going to do this for the foreseeable future? I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money, we made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
From New York City for our viewers worldwide, I'm Manus Cranny in for Jonathan Farrow. Caution on the markets. The risk is a wrecking ball arrives on risk from the Fed, from tech, from that jobs report.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Coming up on the show, a cautious start to a blockbuster week for earnings. Traders looking ahead to the Fed and U.S. jobs report. And President Biden faces mounting pressure to confront Iran. We begin with the big issue, gearing up for a huge week ahead.
We're in a situation where there are a few more nerves in the market.
An important week. The Federal Reserve, its payrolls, 40% of the S&P market cap reported.
All the mega cap companies, Amazon, Apple, Alphabet report.
When you think about what has been holding up the market, has been propelling us higher, it's those big tech companies.
From a profitability perspective, tech is likely going to be the sector that can deliver.
When we look ahead to the Fed,
officials will more clearly outline how they're thinking about rate cuts over the next year.
Is this a Fed that's looking to cut rates as early as March, or is this a Fed that's waiting to kind of take their time?
I think he's going to say that there's been progress.
There are some signs that because inflation has come down so much that we should already begin to see soon the Fed begin to cut rates.
One of the key pillars to economic activity remains the labor market.
Under the surface, the labor market is cooling. That's a lot of event risk for this week.
Many swords of Damocles across these markets. JP Morgan's Jack Manley weighs in on the road ahead for the markets, writing this. The recovery thus far has been narrow and driven by multiple expansion. We're looking for a broadening out, agnostic to sector or style, with the emphasis on security selection. My guests this morning are Jack Manley, uttered those words, joining us alongside Morgan Stanley's Brian Weinstein. Okay, so here we are. You want to go for breadth, Jack Manley, but there's a certain constraint on you. You've got to have a certain proportion of Mag 7. How much breadth do you want to take? Good morning.
Well, good morning, Manus. And, you know, the good thing about this problem that you pointed out here is that there's nothing wrong with the Magnificent Seven, right? We like these large, growthy technology names that are domiciled here in the United States. You know, I don't think anybody would look at you and argue with a straight face that technology will be less important in a decade from now, that artificial intelligence doesn't have the potential to fundamentally transform the world. I think the big question that we're all asking ourselves right now is what to look for over the next 12 months, and have some of this future innovation kind of been pulled forward over the last 12 months. When I think about the broadening out of the recovery, yes, there has to be this emphasis on security selection. I don't care a whole lot about style boxes at the moment, but the thing that kind of underpins the overall story here is going to be a bias toward quality. And quality in this case, Manus, means things like dependable earnings growth. It means strong balance sheets. It means reasonably attractive valuations. And that emphasis on quality is going to be linked directly to the interest rate environment. You know, a lot of talk this week about what the Fed may be doing, whether they cut in the first half or the second half. The general story is that rates are moving lower, but we also know that they're not going back down to zero anytime soon. And if money isn't free, we have to be more thoughtful about how we're allocating our capital. So some of that Mag 7 in the returns this year is totally fine, but we want to look beyond that, given where the interest rate environment is going.
Okay, so there's look, the daily conundrums of when will the Fed cut, how much will they cut by. Brian, good morning, good to see you. For you, what would breadth and taking a slightly broader perspective on risk be?
Totally agree. I mean, you can see it in the fixed income markets, right? There's been a broad-based rally in high yield spreads, IG spreads, and so I think you are seeing a broadening out of the rally. And AI is not only going to help the Mag 7, it's going to help any other number of industries and companies that can survive a non-zero rate environment. So I think with that backdrop, broadening out makes total sense. And rates have probably peaked. The Fed will be easing, I think, in the first half of this year. So there will be more supportive borrowing, even for companies that aren't quite as high quality as the ones we've seen rally so far in the last year.
I think it just depends on what kind of cuts we actually get and whether they're preemptive or prudent at the Fed. And speaking of which, all eyes will turn to the Fed on Wednesday. As we brace for the decision from the Chair Powell and his team, the news conference will follow. Mike McKee will be locked and loaded and ready to go on this. Mike, so what are the nuances that I need to focus on?
Well, not a lot of nuances at this meeting because the Fed has pretty much told us what they're going to do. We can expect an unchanged Fed funds rate, and they'll probably drop any additional policy firming language to make themselves neutral and not leaning towards higher rates. Talking about QT policy ahead, that's what the market wants to hear. Are they discussing any kind of taper? And then any hints from Jay Powell on rate cut timing. Here's the debate that's out there. The case for holding rates steady. You mentioned it earlier. We're seeing GDP rise. We're seeing consumer spending stay strong. And the white line there is the Atlanta Fed wage tracker. As you can see, it's still elevated, 5.2% gains for people on wages. Are we going to have higher inflation because people are still getting a lot more money and the economy is a lot stronger than people thought? Wall Street tends to think so, or at least that's the bet right now, that we won't see it because they're not betting on anything in March, but May, June, and July. By the time we get to July, they think we'll have 3 cuts already done. But the case for cuts is this, that at this point, because the Fed has raised rates and inflation is going down, real rates are moving up, and the Fed doesn't want to make conditions any tighter, even though the economy is strong. So in order to keep financial conditions about the same, they will cut. That's the debate out there, and that's what we'll be asking Jay Powell about on Wednesday, even if we don't get any moves from the Fed on Wednesday.
Okay, Mike, thank you very much. It's still a towing cost for the market, whether we go 50-50 on Wednesday. Jack Manley, Brian Weinstein is with me to debate this. So 3 cuts by the market by July, which some would say is prudent, practical, and protective to the landing. Jack, would the 3 Ps stack up for you? 3 cuts by July?
I like the 3 Ps, Manis, but I don't agree with it necessarily. I don't think it's prudent. I think it's aggressive, and I think it is largely unnecessary. You know, this is an economy that is very clearly slowing down, but we are not slamming on the brakes at the moment. We don't need that extra stimulus that would come from a lower Fed funds rate, and I think the Fed is going to be very comfortable holding interest rates where they are right now, looking for further improvement, not just in inflation, but in particular on the wage picture. And we're going to get a little bit more clarity on that this Friday. I am very much in the camp that our first cut is going to be a back half cut. I'm looking for 75 basis points lower on the Fed funds, maybe a little bit of upside risk to that number there, but not by a whole lot. And the problem there is that the market pricing in all these cuts ahead of time may be a little bit disappointed. We could end up with some multiple compression if they don't get what they're looking for out of that Fed rhetoric.
And if we take it across to you, Brian, I mean, here we are. They've got all the reasons in the world to go ahead with these cuts. PCE is being well behaved on a 3-month, on a 6-month basis. It's acting beautifully. You've got a fairly robust consumer, but they have got the cover to be prudent, don't they?
Listen, I think I've been in the May camp. I'm moving more to the March camp. I think they're only going to do 100 this year. So, and I totally agree that the market may be disappointed when it's all said and done. But I think what the Fed wants to do here is just say, listen, if neutral rate is somewhere between 2.5 and 3.5, and inflation is slowing, then you don't stay at 5.5, right? You have to start to lower the rate. And if that's true, it's not going to be more true in May, right? It's true now. In fact, inflation could start to tick up by the middle of the year. So I think you get them front loaded. I think 75 25 in the first half of the year actually makes sense, with not too much more to follow. So we end up in the same place, but I think those rate cuts come sooner.
Brian, I'm drawn to your view that we get a change in leadership in energy banks and slightly more defensive. I mean, are you waiting for some kind of a mini drawdown, a mini draw for breath in these markets before you step in and load up in a change of leadership?
Yeah, it's been a rough strategy to wait for dips in this market. No, it's not. I don't think that you're
going to get... It's called weaponized FOMO. It's called weaponized FOMO, Brian. I have it on good authority.
Yeah, that it feels like that. No, I don't think you need to get. I don't think you need to get big dips. I think you're seeing idiosyncratic pain when companies miss or disappoint. But no, I think this could broaden out if the Fed does ease early. I think this could broaden out without I mean, obviously you can get some dips here and there, but I don't think you're going to get super cheap valuations if the Fed plays this the way the Taylor rule says that they should.
And, you know, Jack, to take it back to you, you say large caps are more expensive relative to smaller, but then you would say large caps can play, they can take a lot more rough and tumble, a lot more of punches relative to the small caps. So you're not a buyer of value relative to growth at this stage, I take it.
Not a whole lot, Manus. I mean, I do like that large cap story right now. Yes, they are expensive, but I think in particular when we look at the composition of the large cap index, it is a duration heavy index. It is an interest rate sensitive index. It is very long-term focused because it is technology biased. And what that means is that investors aren't buying these names for what they're going to do over the next 12 months. They're buying these names for what they're going to do over the next 5 to 10 years. The valuation environment doesn't really scare me a whole lot. But beyond that, there is a lot of quality behind those large cap names, right? We look at the composition of their debt. A lot of it is fixed rate, not floating. A lot of it matures after 2030 as opposed to before it, which is in contrast to what you're seeing out of small caps. These names are profitable, and if they have good balance sheets, they're able to absorb some of this wage pressure that we've been seeing and will likely continue to see on Friday. So large cap, I do think, still makes a whole lot of sense. And, you know, on the value versus growth story, I'll bring it back to that earlier comment. It's not one or the other. It is going to be both. I guess if I had to pick one style box, if I had to get pigeonholed, I'd lean more into those value assets, those cyclical parts of the market. But there are, I'm sure, plenty of high quality, reasonably valued growthy names out there as well. That's why this emphasis on active management is so important as we move through this year.
Jack, you make me chuckle inside that you remind me that investing is in theory, you know, a 3 to 5 minimum year horizon, in which case it's only when age hits you, gentlemen, that you begin to realize what 5 years forward means. Briefly to both of you, would you pick off some 10-year paper at 410? Is that a reasonable return? Because I haven't seen yields like that. I missed the 5% both. Should I pick up the last 4 handle? Jack?
On me, yeah, I think so. We had such a rally in the bond market in the last couple months of last year. I think the duration trade is mostly played out. I'm looking for coupon this year, and that's a pretty decent one.
Clip me up. We'll come back to you, Brian. Don't worry, there's more work to do. Jack, Brian, stay with me. Your morning selection of risk on Bloomberg. Joining me now to look under the hood, ahead of the opening bell, it is Abigail Doolittle. What have we got, Abby?
Well, we had the U.S. futures basically flat, but beneath that benign surface, Manus, we do have quite a few movers, starting off with the shares of SoFi. They are soaring, heading to their best day potentially since July of last year. The online bank posted its first ever profit of 2 cents, a small profit, but nonetheless better than the loss expected. And they also talked about how 2024 is to be a transition year of growth toward financial services, a little bit less lending. American Airlines up 1.3%. Citi has upgraded the stock to a buy from a neutral on the airline's ongoing deleveraging process. And then finally, iRobot plunging down 19%. Amazon has dropped the $1.4 billion deal on a clash with European regulators who were threatening to block the deal. This stock, since that deal was first announced back in August of 2022, well, Manus, it is now down about 72%.
Okay, thank you very much, Abby. Let's see how we open today. Coming up on the show, it is a big week for Big Tech.
When you think about what has been holding up the market, has been propelling us higher, it's those big tech companies.
We take a look at the 5 heavy hitters on the slate this week.
will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Ways on the heartbeat of the tech
spread across global markets.
Real-time data aspect is going to be
We're going to bring you expert analysis on that.
Don't miss Bloomberg's interview.
When you think about what has been holding up the market, has been propelling us higher, it's those big tech companies because they really have an outsized influence, not just in terms of price performance, but in terms of earnings. So we certainly do hope that those companies deliver.
In case you haven't noticed, it's going to be a big week for tech. You got Microsoft, Apple, Alphabet, Meta, Amazon, all reporting. Now, the 5 of them have a combined market value of $10 trillion. Joining me now is Katie Greifeld to go through what we can expect. Katie.
I'm going to say that one more time because I think it's amazing. You think about Microsoft, Alphabet, Meta, Amazon, and Apple, $10 trillion in market cap, all due to report between Tuesday and Thursday. Like you said, it's going to be busy. So let's talk about positioning here, because when you focus on just the Magnificent Seven, you have 5 represented here in that grouping. You take a look at the group's average 30-day implied volatility. It's actually been rising compared to the VIX, which is going absolutely nowhere. But then you take a look at the volatility on these specific names, and it's pretty historically cheap, man. It's most dramatically in Amazon and in Meta. If you take a look at Amazon options, they implied a 6.2% one-day move after earnings. That compares to an average move of about 9%. Then you focus on Meta, it's even more dramatic. You have options there implying just a 6.5% post-earnings move. That compares to 14.9% on average. So it's interesting here that you don't see traders really reaching for protection, even though a lot of these names are trading close to or at their all-time highs. You remember Microsoft last week hitting $3 trillion in market cap. Of course, we're going to find out soon enough whether or not that was the right move to kind of forego insurance here. But of course, it's going to be very, very consequential these next couple of days to figure out how sustainable this big tech rally truly is, Manus.
Yep. Well, certainly, you know, volatility is cheap. There's no doubt about it. It could take a little bit of a spike later on this week. Katie, thank you very much for setting the stage. My guests this morning are Jack Manley, Brian Weinstein, to discuss these markets. 2 things that go through my head when Katie lays out the board of risk, which is I've had various people come on and they say, I want a little bit more cash. I don't quite want to buy volatility because it's a waste of money. But how do you protect yourself for a mini jolt in this market? Jack?
Well, I think the first thing is to step out of cash, but you don't have to take a whole lot of risk on that front, man, is to find some pretty attractive returns. I mean, we look at high quality, intermediate duration fixed income as almost a slam dunk trade this year. Yes, a lot of that return happened in the last couple of months of last year, but with where coupons are right now, I still think you have a pretty decent floor in terms of return potential without taking on a whole lot more risk than maybe traditionally associated with a cash-like investment, if you want to call it that. But I think it also is about finding those names in the S&P 500, call it, that are now actually punching above their weight class from an earnings contribution perspective. You know, this is a very important week for earnings, of course, because these are the largest names in the index. It's also because this earnings season has been pretty disappointing, and earnings in general have been somewhat disappointing. You know, we look at the 10 largest names in the S&P 500. They are bigger than they have ever been in history, accounting for around a third at market capitalization, but they're only contributing contributing about a fifth of overall index earnings. There's a disconnect there, and that's reflected in those multiples. So finding those other names out there that are actually punching above their weight class from an earnings contribution perspective, that's another element of this strategy as well.
It's interesting because you put context around what's going on below that index hood level. Brian, if I said to you, are you disappointed with the earnings season so far, or where do you see the other opportunities?
Yeah, listen, I'm not disappointed. It's hard when you come into January and everyone wants the themes to change, and then you have the same stocks take leadership again, and people get frustrated. But no, I think under the hood, you can see investors are looking to move that cash. I think the way you protect yourself is you do move out of cash a little bit, right? That yield's not going to be around forever. So totally agree on short fixed income. By the way, I'd throw some tips in there. I think real yields are cheap. The Fed wants them lower, so that's one way to play it. And then yes, you have to buy some of the parts of the market, the S&P or whatever index you choose, that haven't participated in the rally as much, that investors haven't chased, that have good earnings, and some of them have great dividends too and great yields. So you can find ways to earn income in this market and find some safety away from just owning the same stocks that have worked. And I do think that theme will play out in the next couple of months.
Can I ask you briefly, we're up against the clock, so I want to get a sense from both of you. I'm always curious. We talk about the flow, the most concentrated stocks, the Bank of America survey, the most concentrated since 2021 on tech. To what extent do you look at flow and concentration risk, Jack?
I think concentration risk is a big problem right now. It's not going to be a big problem forever. This disconnect that we see between earnings and price, I guess you could say, is a temporary one. Those big names are high quality. They will get that earnings growth back. They will get those earnings numbers better. They will grow into those multiples. So for now, it's an issue, but I don't think it's a permanent one.
And Brian, for you, are you bothered by the flow show? I love the flow show. Don't break my heart. Don't shatter my dreams.
No, I don't think it's fascinating, right? And there are examples of when parts of the market have gotten so large and investors have owned them at exactly the wrong time. So that fear is in the back of your head. But no, I think in this case you want it to resolve itself in a positive way. Other companies doing better, catching up a little bit, but I don't think you're going to see a big change in the leadership in terms of the percentage breakdown of the market for a long time.
Look, we're constantly trying to understand geopolitical risk. You've got freight rates rising, the Red Sea tensions rising. I don't want to get lost in the mire of how America responds to the most recent incident over the weekend. But I do want to contextualize your view on the risk of a respike in inflation here in the US as a result of geopolitics, or is it a very European problem? Jack, brief and sweet.
I think it's mostly going to be a European problem unless we see some problems with energy, and then that becomes a global issue that becomes a little bit insidious.
And Brian, for you, wrap it up.
I think you file at the back of your mind as, you know, when the Fed does start to ease, is inflation going right back to 2? Is it going to stay down there? I think there's some reasons to believe that late in the year you want to start worrying about that story playing out. For now, it's more of a European issue.
Okay, well, we'll keep an eye on those folks. It's interesting to see the oil market this morning. Did 6% last week, but actually very, very little this morning. And we wait to see what the substantive, if at all, substantive response it is from the White House in terms of blaming Iran on these attacks over the weekend. Jack, thank you very much. Jack Manley, Brian Weinstein. Their thoughts this morning on markets. Coming up on the show, your morning calls a little bit later on. We're going to catch up with Laurie Calvasina on her calls in this big week for tech earnings. $10 trillion to hit this slate between Tuesday and Thursday, right here on Bloomberg.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why, part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Quick snapshot of what's going on in markets. We know there's $10 trillion worth of equity risk coming down the pike, but you have a quarterly refunding statement. You have a Fed which could pivot even more aggressively to an even easing stance. Yields are dipping ever so slightly, but it is the quarterly refunding and the jobs report which can materially move these bond markets. You've just heard from our guests talking about 4.3% and 4.1% as being appealing for them as far as taking in some coupons. Let's roll it over, have a look at the equity market. You'll hear it time and time again. There is $10 trillion worth of equity market cap coming to bear on the market. At the moment, you've got 3 months of a rally, up 18%. Is there any sign of exhaustion of that in the market? NASDAQ is up an 8 to 1%. It is big tech risk that is going to drive sentiment after the close of business tomorrow evening. In the meantime, this is what the scribes of Wall Street have got for you. We have Warner Brothers downgraded by Wells Fargo to equal weight with a PT of $12. Lower earnings is the citation. Norfolk Southern is cut at both Morgan Stanley and Stifel. Analysts flagging that the company needs to catch up with its rail peers. And finally, Colgate-Palmolive, raised by Raymond James to outperform. The analysts see the upside opportunity for the household products this year. Have you bought a tube of toothpaste recently? The price is incredible. There you go. Colgate-Palmolive up 0.6%. Coming up, how rich is Lori Calvasino's blood for a little bit of tech, or is there breadth on the way? What does she expect from the earnings this week? Nearly 40% of the S&P market has reported. The results are in. My last guest says it was slightly underwhelming. Will she agree? On Bloomberg.
London will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually, the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material. And so I do think both will basically continue to grow and continue to be very relevant. What will change, though, and the big thing that's changing, is actually the risk-taking is what's going to move. And so we've historically had risk-taking in the UK. That risk-taking and the assets that go with it, not the people alone, but the assets that go with it, that's the next phase of what we're now moving into. And that will be a material change.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
Breakout we have all perhaps long awaited, finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question this industry is composed of some bad actors and some good actors.
the transactions,
Volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep Green World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond. We bring you American culture and markets here. The Gronk from the Patriots. I learn something new every day. There you go, Flutter.com. They're on the move. You've got equity markets up 18% in the past 3 months. We know it's going to be a big week for tech, but there's also Fed risk. What will the Fed deliver in terms of perhaps a dovish pivot? There we are. We're rolling over to the cash opening. You can see he draws a cry. That's not for me, that's for him. Equities are up, as you can see. Can we hold on to the gains? And a number of stocks that are going to be on the move. We'll go through those in just a moment. Keep an eye on the euro. The euro is down, the dollar is bid, because you have Francois Villeroy de Gallo again commenting over the weekend about the proclivity for rate cuts in Europe. Will they go first? Will they do more? Is April on the slate? We will have to avoid two risks that become balanced. So they are talking more about the timing of rate cuts in Europe relative to the US. 10-year yields trade flat at 410, and crude is down 0.75% despite the heightening tensions and geopolitical risks. Will Kennedy will be with me very shortly to discuss the nuances of the oil market. Two stocks that we are watching, iRobot and Amazon, the tech giant, dropping its deal with Roomba, the maker, after clashing with EU regulators. Abigail Doolittle is with me. I think I have a Roomba.
Do you really? Maybe I should get one, make life a little bit easier on the weekend. Relative to iRobot, it's a rough day. The stock down more than 17%, down 4 days in a row over that time period, losing about 25%. But this is not the only news. The CEO has stepped down, and they are cutting 31% of their workforce. Now, clearly the big news, though, is Amazon dropping the $1.4 billion deal. This after, as you mentioned, EU regulators questioning or threatening to investigate whether or not it would keep away competition from the marketplace. And this is a sign of the intense pressure that Amazon is under to not create a lack of competition. So instead of answering to some of the questions in the investigation by the EU, they are choosing to walk away and instead pay iRobot the $94 million termination fee. This is similar to a decision made by Adobe walking away from a $20 billion potential acquisition that did not happen, of startup Figma. Another reason to not go through with the deal, though, is that recently, and over the last year or two, Manus, iRobot has really seen a reversal of fortunes after the pandemic boom of people being home. Not so much sales, a lack of profitability. The stock, since announcing the deal back in August of 2022, is now down more than 75%.
Okay, Abby, thank you very much. Shifting tides of the EU on regulating deals. Let's turn to the chips, and never far from our mind. Elon Musk says he plans to buy semiconductors from AMD as the EV maker loads up on AI hardware. Ed Ludlow, good day to you. Back in your hometown. What's going on? What's Elon buying now?
Well, this is curious because, as you can see on your screen, AMD is now softer by 0.9%. It had been up 1.5% in the pre-market, and that was partly a gain driven by a single word, which is yes. Elon Musk was asked on X, the social media platform, will Tesla buy AMD chips? And he just responded saying simply yes, but it was in the context of some commentary from Musk about their $500 million spend on NVIDIA hardware, which is a reference to not just their H100 GPU, but DGX or HGX, the server design that goes into data centers and powers both LLM training and on the inference side as well. There were some other catalysts in the market that are kind of interesting. There were two stock upgrades on AMD, which is continuing to be down 0.9%. One from Susquehanna, which is bullish on the prospects of AMD's AI accelerator. It's the product that they want to compete with NVIDIA on, but it only just started shipping in volume in the quarter gone. And similarly from Morgan Stanley raising its price target, also bullish on the long-term AI opportunity. I'm trying to work out what's going on. You look on the Philadelphia Semiconductor Index, most of the names there are in the green, and it's a pretty even split of those names in the green and in the red on the NASDAQ 100, but AMD's decline's accelerating 1.4% now, having been 1.5% higher in the pre-market. Happy Monday.
Happy Monday, go figure. You know, there's a couple of analyst notes out there as well to consider. Thank you very much. Let's stay with the chip makers. The Biden administration expects to announce billions of dollars in new subsidies to chip makers that include Intel. Now, this is according to the Wall Street Journal. Katie Greifeld is side by side with me here. Katie, what are the details here? What's the ambition?
Well, according to those reports, of course, those grants could be awarded in the coming weeks to the tune of billions of dollars, as you say. And this is really part of the U.S. CHIPS Act. You think about the goal of that act, and it's to bring chip making back to the U.S. and also counter China's growing chip making industry. So that's the ambition, and that's getting a little bit of a boost to Intel, or at least it was pre-market. You can see it's down now, and that's because Intel is really fighting against its own fundamentals here. Remember, we heard Intel's earnings report last week, and it gave a disappointing first quarter forecast for both sales and profit. That really sparked fears that this long-promised comeback bid for Intel has been derailed at some point. Now, you have the PC business when it comes to Intel, that's recovering, but when it comes to data center processors, you see the demand is weakening there. You add it all together, and that translated to a nearly 12% plunge for Intel on Friday alone. Of course, the CEO, Pat Gelsinger, he told Ed Ludlow and Caroline Hyde last week that reaction was overstated, but that's the overhang today. You can see Intel bouncing back and forth here, of course, even with that potential White House support in the offing. We'll see how this plays out.
Yep, underwhelmed, and this market will quite literally be vicious with you. Katie, thank you very much. Katie Greifeld there. Turn to the earnings. You've got SoFi reporting first ever profit earnings, topping out on the estimate. So Foxman is with us. So what have we got? The stock's up 16%, Simone.
Yeah, an enormous surge this morning, Manus, after results that Mizuho called outstanding. The company able to turn a profit of $48 million in the fourth quarter. That's up from a loss of $40 million, and that equates to about 2 cents a share. Adjusted net revenue also coming in ahead of expectations, up 34% year on year, and your membership count rising 44% year on year. Now, SoFi describing this as a year of transition in their earnings statement, where tech and financial services are going to start outweighing the growth of its traditional lending space. So expecting like a 50% compound revenue growth for financial services, mid-20s for its tech platform, which has to do with banking infrastructure. While it still sees mid-teens growth in lending, and we saw some of that in the earnings, where originations were really the only thing that kind of missed the overall consensus estimate. But Anthony Noto, the CEO, saying that growth in high-quality deposits has actually lowered the cost of funding for the company, also announcing some new business lines, investments in alternative funds, mutual funds, through its SoFi Invest platform. Now, it's worth noting that shares are still down about 10% roughly month to date, after there were concerns about the prospects of consumer finance. Morgan Stanley had expected, for example, that most of those companies would miss, but clearly not the case with SoFi, and we're seeing the reaction in the market this morning, Manus.
Yeah, a plum move, up 18%. Well, thank you very much, rounding it up there. Let's stick with the earnings theme. RBC's Laurie Calvasina weighing in on what to expect. Companies have tried to strike an optimistic tone in the first batch of earnings calls with consumer resilience, macro risks, and the theme of normalization emphasized. There's nothing normal about these markets, Laurie, is it? 18% in 3 months. It's record after record. I mean, I'm breathless trying to be enthusiastic about it. How priced to perfection is this? Or when you look at the PEs, you would actually still say elevated, but you're not alarmed.
Yeah, so thanks for having me as always. I would say from a valuation perspective, I think markets have been fairly priced. If you look at data going all the way back to the 1960s and look at where PE should be in light of moves in inflation, interest rates, GDP, and where those things are expected to be at the end of this year, our model would tell you that stocks ended basically where they needed to be at the end of last year, and there's still, a decent amount of upside through the end of this year. We actually found in the update of that model that we published over the weekend, it's pointing to a bull case of 5,500 on the S&P. That's not my target, so don't get too excited. I'm still 5,150, but that just gives you a sense of, maybe how much more one of our bullish models has been saying we could actually go, and it would still be rational. I think if you look at it from a slightly different angle, from sentiment, things do seem a little bit more precarious. And so if you look at CFTC data on U.S. equity future positioning on the buy side, we're basically a little bit above highs that we saw back in 2018 and 2020 pre-COVID. If you look at NASDAQ futures positioning, that's back to the 2013-2015 highs on the buy side on a notional dollar value basis. And if you look at the AAII survey, that started to come down a little bit the last couple weeks, net bullishness, but it's been at a level about 1 standard deviation above the long-term average, where markets are typically flat over the next 3 months.
Okay.
So I think valuations are okay, but sentiment is a problem.
So you're only leaving me 200 points on the upside on the index. So that must fill you with dread on how to allocate, does it?
Well, look, I think that there is some upside between now and year end. Again, we've got that 5150 target. There are some headwinds we have to work through, right? Expectations for a sluggish economy. I think that's dissipating. If you believe that GDP forecasts are going to continue to move up as they have been since the fall, as they have been since last summer, that would, kind of push you into some of the more cyclical areas of the market, like financials. But I will admit to you, I do think that it is a very uncertain year, and I think that we do have there's a lot of difficulty, I think, with picking sectors at this point in time. We have a few of our favorites, but I think this is the toughest sector picking environment that I can remember.
You mentioned the sentiment surveys, AAII. You talk about the retail investor. We're coming up to that time of year when bonuses will get paid, when people will think about what they want to do with their 401ks, and you're going to get chunks of money arriving. So is March and April a sort of a pivotal period of time on the next evolution of bullishness?
So I think it's interesting that bullishness has started to wane just a little bit. I actually feel, if I look back over, the time I've covered equity strategy on the street, right, and I think about big moves and funds flows to start the year, I feel like those really happen in January, to some extent February, and by the time you get to March or April, it really feels to me like you've run the risk, actually, frankly, of seeing some of those reallocation trades peter out, and then people go back to the same old themes. So I think we'll see what ends up happening. We certainly did see a rush of money into things like small caps and value in the final couple months of last year, and that sort of turned on a dime as 10-year yields started to back up again. I think that, frankly, we're just going to have to be prepared for a whiplash in narrative again this year, the way we experienced last year.
What does whiplash mean for investing?
Whiplash means that you have to be diversified. And so if you think about our sector overweights and underweights, we do have a little bit of a tilt towards value. We have a little bit of a tilt towards defensive. But on the defensive side, we've got an overweight to healthcare, which tends to be a little growthier. And we've also got an overweight to utilities, which tends to be a little bit more value oriented. If you think about some of my market weights, we're actually neutral, all three of the big growth sectors, tech, comm, services, and also consumer discretionary. And I think you really don't want to go underweight those areas. I do think it makes sense to pull back on them a little bit, to trim, to add more to the value and cyclical part of the markets. But at the same time, I do think underweighting them could be pretty dangerous.
When you look around the world, we're going to deal with some other global stories this morning, which is China stimulus, which is about blockages in the Red Sea, the risk of divert and freight rates rising. Within an American construct, within the U.S. equity construct, are any of those a material headwind?
So I think we always care about the inflation story, right? I think a lot of the repositioning we saw at the end of last year, a lot of our calls, frankly, and I think a lot of the calls around the street hinge upon the idea that the Fed will start to cut later this year. And for the Fed to cut, you do need the inflation story to cooperate. I don't think the Fed is going to be that forgiving if inflation rears its head again. They view that as really the central part of their job right now, and they're not wrong about that. So I do think we have to keep quite a close eye on that. I do think the China story is quite interesting. We haven't really had too many conversations with people about China. It felt like a very, very crowded trade on the long side this time a year ago. But money flows did improve when we looked at China at the end of last year, and now it feels like, you know, the narrative is starting to change there just a little bit. So we're watching that one very, very closely because I do think laggards have generally been interesting to people recently.
Okay, you're the first one in a while that's actually it suggested that maybe it is time to review the positioning on China. Laurie, thank you very much. Laurie Calvasina, my guest on the markets this morning. Coming up on the show, the US mounts a response after a drone attack killing 3 soldiers at a base camp in Jordan.
I'm not going to telegraph or forecast any potential response from the United States because of this attack, other than to say there will be a response.
We have the details on the options that will be on the table right here on Bloomberg.
At the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
I do think what we are going to find is that outside of a very few industries and sectors, governments are not going to be willing to subsidize indefinitely production that brings it home or brings it to allies. And so the benefits of international supply chains that we've seen over 40 years, from economies of scale, from specialization, from innovation and the like, those aren't going to go away. And so if you don't have an international supply chain, you will be beat out by competitors who do.
So I think what we're looking to do is to maintain a trade policy which is based on openness, which is based on sustainability, which is assertive where we need to be assertive and defend our rights, but certainly not one which is going to be closing down unnecessarily our trade and investment relationships with the rest of the world.
Globalization, that open supply chain, global supply chain is really important for the life science industry, particularly pharmaceutical supply chain. You think about the stress the pharmaceutical supply chain has been under since COVID-19, the war in Ukraine, not to mention the geopolitical tensions, if you will. We don't have the luxury of saying we can temporarily stock out on our product, because these products, these medicines keep people alive.
You were offered a money-losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you got to be smart about this.
We will take deliberate, appropriate action. Our focus here is not to broaden a conflict from the very beginning. We've been very focused on ensuring that the situation in Israel does not broaden into a wider regional conflict. Unfortunately, what you have here are Iranian proxy groups that are exploiting the situation and conducting these types of illegal attacks against forces that are in the region to actually preserve peace and stability. So again, we're going to do what we need to do to protect our forces, while also cognizant of the fact that what we don't want is a wider regional conflict.
That was the U.S. Department of Defense press secretary speaking to the team a short time ago, and it comes as President Biden is under pressure to confront Iran after 3 American soldiers were killed in a drone strike on a U.S. base in Jordan. The attack claimed by Islamic Resistance in Iraq, a group aligned with Iran. For its part, Iran says it had nothing to do with the attack, saying in a statement, the resistance groups in the region do not take orders from the Islamic Republic of Iran. Katie Lyons has been checking the various responses and is in Washington. I mean, this is the standard cover note from Iran. The question we need to ask ourselves is, are they still in control of the proxies? Here we are. And indeed, what response, what scale of response will America bring to bear?
Well, Manis, that's what we're waiting to find out. The U.S. has vowed that there will be a response. The president yesterday saying those responsible for this attack will be held to account at a time and in a manner of our choosing, keeping in mind here that this is the first time we have seen American troops killed since the war erupted between Israel and Hamas on October 7th. And of course, dozens more were injured as well, which is why there is much pressure on the president to respond in an appropriate and significant way. What that response could look like can vary. Obviously, there is less provocative approaches like hitting perhaps Iranian targets abroad, but there are some on Capitol Hill that are pushing the U.S. to strike Iran directly on its own territory. The likes of Senators Lindsey Graham and John Cornyn saying hit Iran. The thing is, the U.S. has not conducted a strike in Iranian territory in decades. And as we were just hearing from General Pat Ryder there, the U.S. very much does not want to see this conflict escalate any further. So they have to take that into account. Now, of course, Tehran, for its part, has also said it doesn't wish to see the conflict between Israel and Hamas erupting into something more wider regionally, but they have also said that they aren't going to prevent groups they back from doing what they think is appropriate to protect Palestinians in Gaza, retaliate for that, or to defend themselves. They say that anything suggesting that Iran is directly responsible for these attacks over the weekend is baseless, but still that is going to be the tension here. Something else to keep in mind, Manis, as we watch what is happening in the Middle East, is there was a summit in Paris over the weekend as well between Israeli officials, U.S. officials, Qatari and Egyptian officials as well, trying to work out a potential ceasefire deal in exchange for the freeing of 100 Israeli hostages that are still being held in Gaza. Israel's Prime Minister Benjamin Netanyahu has said that there was progress made, but there still are gaps remaining. So just watch for developments over that in the coming days as these conversations will be continuing. We potentially see a ceasefire deal once more.
Yeah, those spy chiefs from Qatar, Egypt, the US and Israel meeting in Paris. Katie, thank you very much. Katie Lyons with the very latest. Let's turn to the impact on the rising Middle East tensions across the commodity spectrum. Will Kennedy is Bloomberg's senior executive editor for energy and commodities. He's here in New York for the week. What better man to bring into the conversation? Will, good to see you this morning. You know, you look at the oil price this morning and you go, sorry, did I miss something of size, or has the market, if I look at the performance over the past 6 days, we're up nearly 5%. Why is there not a more aggressive pricing response to very heightened events over the weekend in the oil market? Good morning.
Morning, Manus. Great to be here. There has been a response over the last couple of weeks, as you say. I mean, oil is trading higher, and it's made high for the year on Friday. Obviously, it hasn't gone higher today, and I think that comes back to something that you and I have talked about several times this year, is that none of these events have actually impacted the production of oil. So the oil continues to flow. Now, there are some blockages and delays in getting it to market, but ultimately it's taking longer to get there, but it is all getting to market. So there's no barrels yet lost in the market, and I think that people are cognizant of this idea that no one wants a wider war, and I think most people still expect it's unlikely there will be an impact on production.
Which then takes us back to the more prescient issue, which are the additional cuts that were promised to the market by OPEC+. And your responsibility is to monitor that. And the story today is there's a slow start to the new oil cuts. That's not going to make Prince Abdulaziz bin Salman incredibly happy.
No, but I mean, I think it's important that the Russians came out at the weekend and said that they are adhering to their cuts.
That was Novak over the weekend.
Absolutely. Yep. And, you know, when we look at the Russian exports, they are probably pretty close to what they said they would do. I think that one thing the Saudis will take heart from is perhaps the strength of demand as well, because, you know, there's always a balance to the market, and, you know, the economy here in the US is doing very well.
It is indeed. That's the IEA versus OPEC debate. But we'll talk about that offline. Will Kennedy there. Thank you very very much. Good to see you in New York for the week. And some sector price action this morning. I wonder what's hot to trot. Abby, what have we got?
Well, it's interesting, Manis, because we have a very small gain for the S&P 500, but beneath the surface, quite a bit of action, starting off with the energy down 1.1%. So sticking with the topic of oil, again, that's the worst sector for the S&P 500. The rest of the sectors, though, smaller moves, but whether to the upside or the downside. Tech is the best sector right now, up 0.3%. So again, small moves. Over the last number of days, though, in fact, in the month of January, the top sector is communication services, up 8.5%, heading to its best month, Menace, since July of last year. A lot of this on Netflix's big quarter. We have Meta and Alphabet up. Will they continue the trend for communication sector? We'll have to see.
Okay. Abby, thank you very much. I really am trying to get into beef at the moment, but it's not happening. I'm lost on Netflix. Please send your suggestions in on IB. Coming up, the market moving events that set your agenda for today and the rest of the week right here on Bloomberg.
How are you feeling right now about the state of the industry and what it's going to look like in the next couple of years?
The big picture is it has never been more, I would say, volatile. I mean, it has, but it continues to be volatile. But like you said, we did see real signs of life this summer. So generally speaking, box office is down globally around 20% for 2019, so pre-pandemic levels. But this summer, it was 5% down. Right, so it would suggest that even though there were winners and losers of this summer, and obviously we had the two big juggernauts with Barbie and Oppenheimer, movie-going begets movie-going, right? So when there's a season filled with, good movies that people want to see, I was made to feel pretty optimistic about what we saw in the summer.
This is Ringcliffe.
Trading diary for the week. Tuesday, it is all about tech. Alphabet and Microsoft deliver their results. Roll on the Fed decision on Wednesday with the Chair Powell's news conference. The nuances are key. We then switch over to the Bank of England, and Governor Bailey will give us his view on the world. Amazon, Apple, Meta report earnings on Thursday. And finally, the crescendo for risk analysis. Jobs report in the USA.
This will probably go down in history as one of, if not the largest financial crime ever. I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried had pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in?
I'm in.
I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fats?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, good Monday morning from the Bloomberg Interactive Brokers studio in New York City to our worldwide audience. Alex Steele, she is on assignment and is such a nice place. She's over in Italy somewhere. So
she was only here a week.
I know, and then she bails on us and she goes off to Tuscany. I don't know where she's going, but she'll be back in a few days.
But we've got a good substitute.
We have a great substitute. Molly,
thank you so much.
Molly Smith joins us. Molly Smith, she's our economics reporter for Bloomberg News. We've had her on the air all the time. And she is our resident go-to tennis expert. So we're going to get a wrap-up of the Australian Open. We're also going to check in with Jen Rhee, Bloomberg Intelligence Senior Litigation Analyst, to talk about all these antitrust issues that are sidelining a bunch of deals in technology with Amazon and then the airlines industry, so we'll talk about that. And then Austin Reed, we're going to talk a little crypto stuff with him as well. And then Adam Coons, Chief Portfolio Manager of Winthrop Capital Management, will give us his market call. But let's kick things off this hour with Mr. John Tuckman of Bloomberg Business Week.
All right, the major stock averages higher right now. It's a little change as we await a slew of earnings. Fed decision, a raft of economic reports this week as well. 5 in the S&P 500. 5 of the 11 major industry groups are higher right now. Information technology in the lead. That's where you're going to find shares of Adobe. They actually hit a 52-week high this morning. Energy, the biggest drag right now. And then, of course, you have 5 of the 7 magnificent 7 tech stocks reporting earnings this week. Microsoft and Google parent Alphabet releasing results tomorrow. And it really does matter for the overall market, according to Anastasia Amoroso of iCapital.
Those 5 tech companies are hugely important in terms of delivering results this week. And I say that because you look at their expected earnings, those 5 companies combined should report earnings that are up 53% year over year in the fourth quarter.
Ahead of that, Microsoft shares right now, they're up 0.8%. Google shares dead flat right now. S&P 500 is up 4 points. That's a rise of 0.1%, 48.95 on the index. The Dow Jones Industrial Average is 30 points higher, and the Nasdaq 100 17 points higher, up 0.1%. Two-year yield 1 basis point lower, 4.33, and the 10-year right now 2 basis points lower. That's at 4.11. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Molly and Paul.
John Tucker, thank you so much. We appreciate it. Tim Craighead, who runs our European research for Bloomberg Intelligence. He's our strategist. He's based in London. He just walking around. What's he doing in New York? I mean, you never know who's going to walk through here.
I was wondering who just waltzed in right here. Thanks for telling us all.
Like, no, it's okay. We're on the air.
Yeah.
Come in and say
John
hello.
was busy, but yeah, we all wanted to know.
That's Tim Craighead. He was one of the original dudes at Bloomberg Intelligence 14 years ago. He swiped up from Goldman Sachs, where he had a great career there. So anyway, he covers the research strategy, like the strategist of the Gina Martin Adams for Europe. So we're going to get him in here over the next couple of days here. But we've got Molly Smith sitting in for Alex Steele. Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Tom's all over the YouTube. He's all over the Apple CarPlay. Why not? We got some good technology here. So just head over to youtube.com and search Bloomberg Radio. As John Tucker's just reporting, not much going on. A little bit of green there on the screen. Lots of economic data, lots of earnings data this week. Maybe the market's waiting to get some direction there. But let's check in with Nora Melinda. She covers equities for Bloomberg News. She joins us here in our New York studio. Nora, what are you looking at this morning?
Let's take a look at iRobot. I know we spoke about this a couple weeks back, but there's actually been some developments. So iRobot is in focus. Those shares are plunging as much as 19% for their lowest level since 2009. And this all comes after Amazon abandoned its planned $1.4 billion acquisition of the company. We've been talking about all of these antitrust issues. That's the issue that Amazon ran into. The company has been clashing with EU regulators who had threatened to block the deal. And we know that iRobot is really known for its Roomba vacuum. If you like those little circular vacuums that move around in your room.
Oh, yeah, definitely.
Yeah.
You would think, right? But sounds like Amazon has finally given up.
One? Do you have one?
We do.
I'm thinking about it.
We do. We've got it. You just turn them on. The dude just kind of
everything
rolls
you
around.
need.
Yeah, I think it does an okay job, but it's like in between cleanings, you can just let it.
Does he get the corners?
Yeah.
Okay.
He does.
Good dog here?
I don't know. But if I'm the European Union, why do I care about $1 billion deal about vacuum cleaners? It's just like ridiculous.
And you know what's interesting? That this actually would have been Amazon's fourth biggest deal. That all comes following Whole Foods, MGM, and One Medical. But this would have been his fourth biggest deal in history. And it's really interesting. Now we're having iRobot. The CEO has stepped down. And the vacuum maker is now vowing to cut as much as 350 jobs. So it looks like a bit of turmoil over there.
Yikes. Well, that is a mess.
There's a reason there's no technology in here.
Let's go over to SoFi. What do you see over there?
SoFi shares are surging as much as 21% for their biggest one-day gain since July. They're climbing after the fintech company reported earnings that showed it reached profitability for the very first time. This is a great sign for the company, especially as it's taking the fintech one step closer to the CEO's goal of turning it into a top 10 financial institution. That's really been his goal. And listen to this blowout. Analysts were expecting the company to report fourth quarter net income of $9.9 million. SoFi reported $48 million. So this is the first profit under generally accepted accounting principles since the company went public in 2021.
Wow.
That's
all right.
good. I mean, it's a great technology platform, and it's just a question of scaling up, I think, is my understanding.
Right. I mean, the company said that this 2024 will be a transition year, and it seems as though it's well on its way.
And it's got Mr. Anthony Noto as CEO, who's a good dude, smart dude. So they got some good management there, good board ownership as well. So good news there. Anything else?
I mean, we got the Fed later this week.
Yep.
Lots of eco data coming before that. You're constantly following that, Molly. But
oh, yes.
I mean, that's
Big
really
week.
what's in focus this week. Everyone's waiting for Wednesday. What are we going to hear from Powell? Are we going to see another hold there? What's going to happen? So that's really what the market is focusing on. Not too much going on this morning.
Right. Yeah. And remember, we're not going to get any new projections at this meeting. That's not until the March one, where we'll get
no more dots.
No
more
dots.
dots?
March.
Okay.
No dots till March.
Okay.
So stand by.
Okay.
But yeah, I think more like as well as the Fed this week. We have a lot of different reports on the labor market, of course, culminating in the job report on Friday, but a few others leading up to them, especially the ECI, that's the Employment Cost Index, coming out Wednesday morning before we get the rate decision from the Fed. Not going to obviously change the expectations for them to hold, but that is their preferred wage measure. So it'll be interesting to see what that is.
Norma Linda, thanks so much for joining us there. Norma Linda, she covers all the equity markets for Bloomberg News, so we appreciate getting an update there. What are you going to be looking at, Molly? Again, you economics reporter. I mean, there's a lot here. I mean, is the jobs number, I kind of always feel like that's kind of a big one here, and they're still looking for 210,000 jobs, so still a solid.
Oh yeah, more than solid. I mean, right now, well, it looks like 216 was the prior, looking for 185 right now on Friday. That would still be, well, pretty robust, and I think what more of the economists are looking for in order to kind of get more toward a level of payroll growth that's more in line with 2% inflation is probably more in the 100K or lower area. So this is still pretty robust and well above what economists have been looking for. But then again, inflation has been cooling and the labor market hasn't slowed down. That's a pretty ideal outcome.
Yep, it is. When I saw this Amazon iRobot news this morning, I just yelled at or shouted at anybody who would listen, get Jen Rhee, because I blame her for this stuff, because she is the antitrust analyst for Bloomberg Intelligence. She is the expert when we talk about some of these big merger deals and what are the antitrust challenges, and maybe what are some of the remedies to the extent that there is challenges there. So I yelled, I said, get Jen Rhee.
And here she is.
I mean,
amazing.
Our producers are the best here. So, Jen, there's a lot to talk about. We got to get the airlines. But first, let's just start with the news of the day with Amazon and iRobot. Was that a surprise to you that the EU? No?
No, well, it wasn't at all, because back in July, the EU said, we have concerns about this deal. I mean, they're concerned about competition in the market for robot vacuums.
Wow.
Listen,
top of my list of concerns as well.
I mean, isn't the competition John Tucker with his old, sweeping?
Yeah, I don't actually have a vacuum. That's true. It's just a big broom.
I think there's this idea that antitrust is only interested in really big deals. But at the end of the day, no matter how small the business is or how few consumers it might impact, if there's an antitrust problem, they still have concerns, and it's still an illegal deal in the eyes of regulators. So here, they said in a couple different countries in Europe that Amazon was a particularly important distributor for robot vacuums, and they could foreclose competitors.
I mean, but Amazon's in the market for everything, obviously, not just, the robo vacuum market. So I mean, surely there must be other real competitors out there that have a more narrowed focus on the robo vacuum space than Amazon.
Well, likely, and that's probably what they argued. But the thing is, the European Commission said that this is a particularly important channel, because you won't only own the vacuum, but you're going to own distribution, an important distribution. It's like a vertical acquisition, right? It's an integration that they had a problem with, because that would give them the ability to foreclose some of these other smaller makers of these vacuums that need to sell on Amazon. And apparently, in some countries, there wasn't enough other competition. So they had some concerns. There could have been a remedy offered, but the company decided not to do that. So it was kind of a stalemate. And honestly, they were going to get sued in the U.S.
Really?
That's what I think, yes.
Okay.
I kind of feel like this sets a bit of a tone maybe for, I would think there's got to be other similar consumer electronics companies where Amazon is a big competitor that, does this set some kind of a standard maybe that this could be an issue going forward in the antitrust world?
Well, I think what it tells you in terms of mergers, I think it'll tell you that anytime these big tech platforms, particularly Amazon, try to continue to expand their businesses this way through mergers, they're going to have trouble. They're going to face hurdles in the EU, UK, US. The UK didn't have too many problems with this one. But I think it does tell us something about the FTC's lawsuit. They have now this ongoing lawsuit against Amazon, and they're looking at all these different businesses that compete with Amazon but also sell on the marketplace and have some concerns about it. So, some of the concept that went into the concerns here will be part of that lawsuit in the U.S. We're a long way away from an outcome there. That's pretty new, but it's pending.
Jen, when you talk to some of your friends in the business, the M&A attorneys out there, is the feeling like almost it really is different out there? It is really appreciably harder to get anything approved proof these days?
Oh, Paul, absolutely. It is so much harder. There's so much more scrutiny. It takes longer, and that we're seeing that in the merger agreements. They are different than they were 5 years ago. There are much bigger breakup fees for sellers because they're concerned about the investigation, which can take a year. They're concerned about a lawsuit. You have much longer end dates. I mean, it used to be the end date of a year seemed like a really long end date. Now we're looking at like 2 years in some of these agreements because they know they might have to go to litigation. So yeah, there's a big difference right now.
And is that a sense that this is a short-term reflection of who's in the White House, or is that just a sense that, I don't know, Congress or society is anti-big deal, or?
It's more about who's in the White House because it's about the appointments at the FTC and DOJ making these antitrust decisions, right? So it just happens that we have two people making decisions at the DOJ and FTC that are particularly activist, particularly progressive in this area, believe antitrust enforcement's been way too lax for years, and they're trying to change things.
Are these people's jobs potentially at risk if Biden doesn't win re-election?
Absolutely.
Okay.
100%.
And what would the potential other candidates' view on antitrust be?
So the interesting thing is that it really depends on who's appointed. So let's just say the next president is Republican, right? Trump or somebody else. Right now, the Republicans are kind of a mixed bag. I mean, it used to be you could always think they're going to be way more business friendly. They're going to appreciate the efficiencies that come from consolidation, right? But now you kind of have this populist side of the Republican Party, and some of the people in that group also believe we need to crack down on antitrust, like sort of the Josh Hawleys of the world. So I think if you get a Republican, it's going to depend exactly on who they put as the chief of antitrust at DOJ and who the commissioners are that get appointed at the FTC.
All right, so I can see Amazon blocking their deal because maybe Amazon just can't get any bigger. You know, nobody wants to see them get bigger. But how about like the regional airline business? Where are we with JetBlue and Spirit Airlines? I think they've got Spirit. If they don't get sold, there is a risk that they go out of business. They got this debt looming. Where are we with that deal?
Yeah, no, the interesting thing is that they could have argued that in court. You know, this is a defense to an otherwise anti-competitive merger, that firm is going to fail if they don't do the deal, or they're flailing. But they didn't really do that. I mean, the judge who decided, this has been through court, this has been through litigation, a judge decided this is an anti-competitive deal. We are concerned about the consumers that depend on the ultra-low-cost, unbundled fares that Spirit offered that JetBlue is going to take out of the market. And he said, look, they kind of said Spirit's having financial difficulty. They mentioned it, they talked about it, but they didn't really meet the elements for a failing firm or a flailing firm. And so he was concerned about that. He said, I'm worried about what's going to happen to Spirit, but he went ahead because he thought it was more important, right, to keep that ultra-low-cost carrier.
I would just show them the DDIS screen, the debt distribution screen for Spirit. They got like $1.5 billion of debt due in 2025, and it, you know, from the research I read on the street, it's unlikely that they can, you know, fund that as currently.
And I'm going to take a wild guess here that they're not investment grade rated. I mean, I haven't taken a look, but I'm going to take a guess.
So why do you think at the end of the day?
Triple C. Wow. Okay.
Wow.
Yeah. Very far from investment grade rated.
So I mean, what's JetBlue say about why they are pursuing this so aggressively? I mean, what's JetBlue saying?
Well, so right now, based on the terms of the agreement, they had to appeal. It's right in the agreement. They said if we face a block, if we face a lawsuit, we will appeal, and that's up until July 24th. So if they haven't managed to win an appeal, which I don't think they will, and get clearance by then, they can walk away. They have an initial trigger date of January 28th. We've seen some of that in the news for other stuff, not antitrust, but if other conditions to closing aren't met by January 28th, which was yesterday, they could also terminate the deal. And they're claiming there is something. There's 100 pages of agreement. They could, you know, their corporate lawyers could go through it and say, okay, Spirit has breached in some way, but we haven't seen what they've alleged yet, and Spirit says, no, we've abided by this agreement.
So we're at January 29th now. Is the deal still a possibility? Where does it stand?
So it's still a deal. They still have an agreement. They still have an appeal pending. That could take 5 to 6 months, so they could get a decision in that before that final end date in July.
Or again, before JetBlue pulls out.
Yes, or before JetBlue pulls out. Now, I believe if JetBlue pulls out, they might end up in Delaware court because Spirit might contest that they had the right to pull out before July 24th.
What else are you looking at? What deals are kind of?
Alaska,
Kroger
Hawaiian,
and Albertsons.
That still hasn't closed?
Oh, no, and I think the FTC is probably going to sue there. That's been pending a long time.
Thank goodness. Grocers, too.
See a lawsuit. Yeah.
So, but that one, I would think, is just divesting stores.
Exactly, Paul. I would think it's just divesting stores too, and they are willing to divest up to 650 stores, which is a lot. So I suspect they have a decent shot if they end up in court, because the judge is going to look at that and say, okay, if you've divested enough into the right buyer, maybe we can do this. There's some questions about their buyer, which is a wholesaler called CNS.
Oh, that's right.
But if they can bring CNS in and CNS can show they can do this, then they have a shot in court.
And so attorneys bill by the hour, right?
Yes, a lot.
So this is a
lot.
All right, so I guess it's not such a bad thing for them. All right, Jen Rhee, thanks so much for joining us. Jen Rhee, she is the litigation analyst, really following antitrust for Bloomberg Intelligence in a vital role, because so many of these big M&A deals, which have big implications for investors, at the end of the day, it comes down to the regulators and who's going to win in court. So you've got the expert. Appreciate that. We'll have more coming up. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. For now, green on the screen. Bit of cautious note hanging over the markets this morning. The focus is instead on earnings, economic reports, and of course the Fed meeting this week. Brown-Forman, the laggard in the S&P 500 in terms of index points. The stock rating was cut by analysts at Morgan Stanley. And then you have ResMed. That is the leader on the other side of the ledger, with Philips suffering from earlier problems with his sleep apnea machines. Analysts are looking at ResMed's digital approach to treat sleep apnea. Walmart offering a new incentive for store managers, annual stock grants. Starting in April, all U.S. store managers will receive as much as $20,000 in Walmart stock every year. S&P 500, 3 points higher, 48.93 on the index. The Dow is up 20 points. The NASDAQ 100 right now is 8 points higher. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. So instead of being a greeter, become a manager at Walmart when you retire, Paul. $20,000 stock grant.
That might be too much for me, though.
Oh,
You know, I
too much responsibility.
Too much responsibility. I think I'm just going to be a greeter. I think I'll be great at it. I think people are going to love me. I'm such a people person. Don't you think? Do you see that, John?
Oh, yeah. Sure.
The eyes are rolling for all of you who aren't here.
All right, Molly Smith, John Tucker, thank you so much. Molly Smith and Paul Sweeney were live here in the Bloomberg Interactive Broker Studio, streaming live on YouTube as well, so you can head over there and check out us there. Big news several weeks ago in the crypto space was they finally got approval from the SEC for a spot Bitcoin ETF, and that was huge for the crypto space and big for the ETF space as well. So let's dig in and see how things are progressing there. Austin Reed joins us. He's Global Head of Revenue and Business at Falcon X. What is Falcon X, you asked? The largest institutional crypto brokerage in the world. Austin, thanks so much for joining us here. Where are you based? Where is Falcon X?
Yeah, first of all, thank you guys for having me. So excited for the conversation. I'm actually based in San Francisco.
Okay.
The team is spread globally. We have an office in Silicon Valley, New York, Chicago, Singapore, Hong Kong, and London. So a little bit of everywhere.
Who trades on your platform and what do they trade?
Yeah, so we trade with a wide variety of institutional market participants. That's everyone from today and topically ETF issuers who are active within the cryptocurrency space to hedge funds, asset managers, venture capital firms, really anyone that's looking to access liquidity in the spot markets or in the derivative side of the cryptocurrency space. Our options business has seen substantial growth over the past couple of quarters as well. So basically, if you're looking to get access to the asset class, hedge your exposure, either in spot or derivatives markets, we work with a lot of those market participants.
Now, tell us, Austin, why that recent news from the SEC regarding Bitcoin ETFs was so important, and what that's meant for your business.
Yeah, for sure. Look, I think if you look at what the ETF means in the mid to long term, really the unlock with the ETF is net new pools of capital that historically haven't had access to the cryptocurrency or digital asset market. Specifically, RIAs and financial advisors within the US. So $30 trillion markets, roughly 40% of US capital markets. And within that, they haven't had an instrument to access this asset class yet. And so the thought is the ETF provides a regulated instrument through which these different market participants can get access, and that will increase overall adoption over time. So in relation to our business there, where we service, we're a spot liquidity provider for the ETF issuers. Within that, we partnered to provide liquidity, and we did about 30% of the day one issuances from the trading perspective itself.
Interesting. Oh, okay. Very good. I wanted to know, how has that impacted your business? So you saw it day one.
We saw it day one. Look, this is something we've been preparing for years.
Okay.
Right, in terms of building out the liquidity at scale, the ability to transact significant size within this market. And so we've been working with different issuers, larger asset managers, as they've been preparing their crypto strategies. And I think day one saw a significant amount of flows, and we continue to basically see consistent trading activity from those issuers.
All right, so just for our listeners and for me, you're a prime brokerage. You're not an exchange like FTX.
Correct.
Now you traded on FTX at some point.
Yeah, correct. So we're a prime brokerage.
Right.
What that means is we aggregate liquidity from a number of different liquidity pools globally. Exchanges, proprietary trading firms, market makers. And so we trade with all major venues around the world, depending on the structure where the client is in the regulatory jurisdiction. And our goal is to basically provide our clients the most seamless trading experience possible and an aggregation of that global liquidity within the market.
Yeah. And your clients, you said, are mostly institutional money?
Correct, all institutional.
Okay, so tell me then about where the retail Bitcoin trader stands right now and their access to ETFs.
Yeah, so it's an interesting question, right? And I think with the initial ETF rollout, perspective would be that this would get broader access to the retail side of the market, as well as segments of the institutional side of the market. What I would say is we're still early in this ETF cycle, right? It was approved earlier this month, and within that, you're still seeing some platforms not actually allow their end clients to trade with us, right? Vanguard is an example, $7 trillion in assets that are invested there. You're not seeing them basically now allow access to Bitcoin ETF vehicles. You've seen some of the other brokerages still working through that cycle. And so from a retail investment perspective, it should open up access, but I think it's also a longer term cycle as to how these really open up over time.
So we had Bitcoin ETF. Do you expect other crypto spot ETFs to get approved?
Yeah, so I think the next ETF that the market is looking at right now is the Ethereum ETF. And specifically within that, there's a perspective from some market participants that you could see an ETH ETF approved later this year. What I would say is, in contrast to the Bitcoin ETF, that realistically through Q3 and Q4, the market consensus was this was likely to happen. The ETH ETF, there's not the same level of consensus right now. So I think what we'll see right now, we have some clients that anticipate this happening later this year. Others think it's a longer road ahead. I think that the market's still waiting to determine what ultimately happens here.
Looks like another catalyst potentially that the SEC is seeking comments on a proposal to allow options trading on BlackRock's ETF. So how do you see that one unfolding?
Yeah, so I think one of the interesting elements in relation to the ETF approval itself is the potential to catalyze greater options market activity domestically in the United States. We've actually seen substantial options growth in our own business. Just for context, Q3 to Q4 and so currently one of the largest option is the institutional side of the market. And if I look at why that matters, right, people are looking for different ways to express their views within this market as well as to hedge their exposure. And over time, what you see as these options markets evolve around ETFs is actually greater liquidity going into those ETF instruments itself, and in the future, potentially a lowering volatility, right? So if you look at gold as an analogy, gold ETF options markets around those ETFs, what you saw is over time it's a more liquid market, lower volatility within that market itself, and that actually attracts more capital, gives them more investable asset that it wants to do.
Largest institutional crypto prime brokerage in the world.
How do I define
largest?
Yeah.
Is it
by volume?
Transaction volume? How does that
yeah, so defined from a volume perspective, right? So like I mentioned, we're active both in spot markets, derivatives markets, and partnering with clients both in the US and globally.
So what are other, who do you compete with for that market share?
Yeah, so look, if I look at the crypto market and where prime brokerage sits within this ecosystem, you have different players that are providing different products and services across the board, right? It's not like traditional financial services where you can go to Goldman Sachs or JP Morgan and get basically most things that you need from an institutional market participation perspective. So where we're focused is trading, spot and derivatives markets, the extension of credit and solving capital efficiency for our customers, and providing technology to facilitate risk management. As it relates to competition, what you see is we compete with different players in each of those different segments. Those could be some of the proprietary trading firms in one, it could be other trading market participants in the other. But from my perspective, look, there's a huge market opportunity here. The question is how we grow this over time. I think the ETF is a great catalyst, and we're excited to continue with partner with a wide variety of market participants to grow the pie.
So I know that you're working with institutional clients, but I got to ask on behalf of myself and maybe other retail participants who are maybe a little bit hesitant to get into crypto. There's obviously, I think since it began, just been a lot of skepticism around the asset, and obviously with FTX imploding, a lot of concerns about the viability of it. So what's your pitch to somebody who's not involved in crypto, why they should?
Yeah, so I don't spend much time actually convincing people to be active within the crypto space.
Probably because they already are with
well,
the people you deal with.
A lot of the people that come to me, right, they're actually active already.
Yes.
But look, within that, if I think, what's the value within crypto, right? And where's the value within Bitcoin? And why are people excited about the ETF as an example here? What you're looking at is a non-sovereign store of value that's digitally scarce and solving what many refer to as a digital gold. right? Why does that matter today, right? We're looking at a macroeconomic landscape of 70 plus elections globally, not just in the US. Within that, we'd anticipate loosened monetary policy that could lead to inflation. Do you want to protect your assets against that? And then the other area that we see, our clients investing within crypto is some believe it could be a good geopolitical hedge over time. An increasingly uncertain geopolitical landscape, as you guys know. Question is a portion of your portfolio make sense to allocate to this asset class? But obviously, always recommend people look at all the risks and corresponding volatility associated.
Read the fine print, I'm sure.
Austin Reed, thanks so much for joining us. Really appreciate it. Austin Reed, Global Head of Revenues and Business at FalconX. FalconX is the largest institutional crypto prime brokerage in the world. And we're getting a lot smarter on crypto and the ETF space with crypto. So I asked Eric Balchunas to come up and say hi to you. So we'll do that. Right now, let's head down to Washington, D.C. We'll get world and national news with Amy.
All right, thank you, Paul. Iran is trying to distance itself from a deadly attack on a U.S. base in Jordan by a Tehran-backed militia. 3 American soldiers were killed, dozens wounded, and President Biden is facing growing pressure to order a harsh response against Iran. Now, during a campaign stop in South Carolina, the president said, quote, "We will respond." Meanwhile, Israeli Prime Minister Benjamin Netanyahu set a summit in Paris to negotiate a return of hostages held by Hamas in exchange for a ceasefire in Gaza was constructive, but he says significant gaps remain. Those differences will be discussed at additional meetings this week, according to a statement from Netanyahu's office. More on this now with Bloomberg News editor Bill Ferries.
This latest attack on the U.S. forces and the possible escalation with Iran, that will throw a lot of this into question. If there is a broader conflict, Iran is likely to strike out at a range of targets, and that's really not gonna make things easier in Gaza.
Bloomberg News senior editor Bill Ferries. Former President Donald Trump returned to the campaign trail over the weekend. At a rally in Las Vegas, he used the spotlight to talk about the state of the southern border.
We have no choice. Within moments of my inauguration, we will begin the largest domestic deportation operation in America. We have no choice because this is not sustainable.
A Democratic senator helping negotiate a bipartisan border deal says Republicans can choose between border reform or Trump chaos.
We are going to pass legislation which would be the biggest bipartisan reform of our border and immigration laws in 40 years.
Senator Chris Murphy of Connecticut tells CNN's State of the Union that the bill is also tied into U.S. military aid for Ukraine in its war against Russia. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. This Bloomberg Business Flash. Major averages right now. Little changed for the 11 major industry groups. The S&P 500 higher. And healthcare is the leader right now. Energy, the worst performing industry groups. Investors could be on the sidelines waiting for the earnings, the economic reports, and, of course, the Fed meeting this week. Economist Dennis Garvin doesn't expect any action from the Fed anytime soon.
I think the Fed passes on tomorrow and Wednesday. I think the Fed passes in March, and I think the Fed probably will pass in June. It'll be, in my opinion, late in the summer into perhaps early in the autumn before the Fed begins the process of easing monetary policy.
Well, the earnings of the so-called Magnificent Seven expected to have grown 47%. That's according to data compiled by Bloomberg Intelligence. You have Microsoft and Alphabet. They open their books tomorrow. Apple, Amazon, Meta Platforms, they report earnings Thursday. And, of course, the results go a long way toward setting the overall tone of the market. Tech is now some 30% of the weighting in the S&P 500. S&P 500, 3 points higher. That's at 48.94. The Dow up 19 points. NASDAQ 100 right now, 21 points higher. That's up 0.1%. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Molly and Paul.
John Tucker, thank you so much. We appreciate that. Molly Smith, Paul Sweeney, live here in the Bloomberg Interactive Brokers studio, streaming live on YouTube, so you get to see John Tucker. How good is that? That is.
I was told today that starting, I think, next week, it's mandatory I go to makeup.
No.
Why would you want to cover this up?
That's what God gave you, right?
Damn. A loss for all of us, really. I might not recognize you, John.
Exactly. All right. Our next guest, we usually talk via the Zoom thing, but he's in the big town today. Adam Coons joins us from Winthrop Capital here. We talked to Adam about the markets and so forth going forward. Adam, we had that big September, really kind of November, December last year that just ripped. Equities just went through the roof. Bonds actually turned in positive performance for the year, What are you telling your clients here as we kind of start off another year? Do we just kind of start from zero and try to find some winners out there? What's the theme for you this year?
Yeah, I think this year is going to definitely be a stock picker's year. I think fixed income will continue to be a primary story for returns. And that's going to come despite what the Fed does, even if the Fed doesn't lower rates as quickly as some are saying. And we do believe that. We're thinking really fourth quarter before they make any cuts at all.
Wow,
maybe
that's
one.
a ways off.
Yeah, so we're a little bit divergent from the consensus, and that's really driven by if you look at what the Fed has done through the cycle, they obviously got it wrong with the transitory nonsense. And we think they're going to act slow to do the same thing, right? They were slow to raise rates, suddenly did it. We think they're going to be slow to decrease interest rates because they don't want to be wrong again, right? They don't want to lower rates and then see another flash of inflation. So I think that's really going to squeeze the economy. And so that's going to be good for long-term bonds. I think it's going to be somewhat of a difficult year for stocks, and that's driven by two things. One is what I just highlighted, is that you're going to start to see economic weakness. But secondly, coming into this year, you nailed it, is we had that rally coming into the end of the year that really drove valuations to some somewhat unsustainable levels for specific companies. And I'm highlighting your Teslas, your NVIDIAs, and obviously you're seeing the result of that with Tesla missing and dropping quite a bit.
So you're saying it's going to be a good year for long-term bonds. I'm looking at the 30-year right now. Yield peaked a little bit above 5% in October. That's when the pivot story started to become a bit more clear. And now we're at 4.35. Think that's still attractive to get in?
I do. Look, it's really asymmetric right now in bonds, which is the attractive part of it. The worst case scenario is you get a fairly high yield to carry until we start to see that, the secular trend in rates is not changed. Rates are going to go back down. Demographics and all those things are pushing that. So Worst case scenario is I get to hold bonds at a pretty high yield. Corporate bonds I'm getting 5%. So I get to hold that and wait until I'm right. And so ultimately, I think that's the easiest, like I said, from a risk standpoint, asymmetric trade.
I was surprised, looking at the performance in fixed income last year in 2023, that the best performing sector was high yield.
Yeah.
And that's in a world where everybody kept talking about a recession. I would have thought going into the year that maybe high yield would not be the place to be, but it really outperformed.
It did. I mean, and I think that goes hand in hand with what equity markets did, right? They tend to correlate in certain pockets of the market. And so I think when we saw that rally, that helped tighten credit spreads. I mean, we really aren't seeing big increases in delinquencies. Yes, they're going up a little bit, but recovery rates are stable. So it's just, it was a place to be because credit markets still look pretty solid.
So in a year when rates are broadly going to be coming down, you think that's pretty accommodative for everybody? Is there really a place that you would say you would not benefit from that and to avoid?
Well, I think it really comes down to commodities. I'd stay probably away from that in the short term, especially kind of the oil commodities. But if you're looking at stocks, I think once again, I think you want to stay away from the narrative-based companies, like I said, NVIDIA, or where the AI narrative has really gotten out of
we're
hand.
over it?
Yeah, I've been over it for a while.
I feel like it's just starting.
I think there's going to be a pause, right? And then, because everyone's going to figure out, well, there's no monetization of this story of AI right now. So I think there'll be a little bit of a pause with that. You'll still see the companies like Microsoft and Alphabet that have an AI component, but have a real business model. Those will still do well. But the companies that really just kind of got over their skis last year, that's where I would stay away from right now.
So, big earnings week this week from a lot of the high-profile names, including Meta and Alphabet, as I call them, Facebook and Google. Why change a good thing out of rain? But in any case, I know they're names that you guys have an interest in. How do you think about Facebook, Google, that whole, digital advertising space?
Well, I think it comes down to, once again, these are business models that have been able to adapt. Meta's gone through a little bit of an identity crisis, but I think they're back on the right track where they're able to adapt to what the consumer behavior and those shifts are. We still think the consumer can kind of push this cycle out, and that's what's going to drive stocks like that, where advertising is really, at the end of the day, the revenue driver. So that's why we think those companies can outperform relative to some of the hardware type companies.
All right, so those ones are the communication/tech sector. How about healthcare? It looks like that's one that you've got your eyes on too.
It is. I mean, if you look at valuations, and I keep saying that word, it's obviously something that matters to this year. A company like Merck, where it is trading very attractively relative to other companies in healthcare and then also just in the S&P 500. But it ran up significantly through COVID, obviously with their vaccine, and then basically has given away all those gains. So what we see here is a company that has a nice amount of cash flow. Yes, the pipeline in the short term is a little bit questionable, but we think that they can pull off an M&A strategy that will kind of help prop up their pipeline in the future.
I don't know. I mean, we just had our antitrust expert in here. I wouldn't be trying to get into M&A right now.
That's fair. That is fair. It's hard right now.
It still seems like you can get healthcare deals done, because usually what it is like a big pharma company buying a little guy who's got some cool new thing coming. So
maybe just not in healthcare as far as insurance. Obviously the Humana Cigna, that didn't go so well.
I mean, does Merck have? It seems like if I'm going to have exposure to healthcare, it's got to have a GLP-1 angle, an obesity drug.
I was going to say they need an Ozempic.
Does Merck have that?
They don't. I mean, and I think that Lilly would be my pick behind that. The valuation is really what's giving me pause there, but I would still own Lilly. I probably wouldn't add to it, or
particularly in Indianapolis, dude. You
have to own it. Yeah, I get it. Yeah,
Elon
gotta love Lilly.
In Indianapolis, because I know that because a lot of my friends from business school went to Indianapolis begrudgingly, but they went there because it's Eli Lilly.
Yep.
That's the place. Yeah.
Exactly. So, but still, your highest conviction trade is that high grade, long duration bond.
Boring.
So
boring.
I know. So what's what's a piece of paper that you guys hold that you feel really comfortable with?
I mean, I really do like tech, TMT. When you're looking at corporate bonds, you can go out there and
are you buying you own the Comcast and
yes, absolutely, Comcast,
Charter.
I like Cox Communication.
Yeah, I like Cox Communication.
Yes,
absolutely. For 30 years.
Look at some Dell. Yeah, I mean, Oracle. Oracle is honestly one of the cheapest. It's BBB, but you're getting a lot of spread. So you're getting well north of 5% for a well cash flow company. And just it's a no-brainer for me.
Nice. Cox Communications. I made a lot of fees on Good people, smart people. They made you work for it, but they paid all the time. Adam Coons, thanks so much for joining us. Adam Coons is Chief Portfolio Manager for Winthrop Capital Management, located in Indianapolis, Indiana. Do you know what a Hoosier is?
From the university. That's their
Hoosier
mascot.
is just, no, a Hoosier is somebody who's from Indiana. That's it.
Oh, really? Okay.
company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom with some of the company news we're following. Well, just walk away. Amazon abandoning its planned $1.4 billion acquisition of iRobot. It comes down to European regulators. They threaten to block the deal. So iRobot's CEO Colin Angle stepping down as a result. The company also restructuring. That's going to result in about 350 job cuts. Amazon comes with a $94 million termination fee. Amazon facing intense pressure, of course, to prove its actions don't harm competition, as its influence is growing in retail, cloud computing, and just about everything else. Amazon and iRobot have been close partners for years. The retailer has long been iRobot's biggest customer. Boeing CEO Dave Calhoun has to face analysts and investors trying to quantify the financial fallout from the near catastrophic blowout of a door plug from a 737 MAX 9 jet. Boeing is reporting results on Wednesday. The challenge facing the CEO when Boeing is going to appease investors enough to stem a hemorrhage in the stock while not appearing too preoccupied with the financial metrics. And the social media platform X blocking searches about Taylor Swift. Days after explicit digitally fabricated fakes of the singer began proliferating on the site, X says in a statement that it prohibits the sharing of non-consensual graphic imagery and has a zero-tolerance policy for such content. The statement didn't mention Swift by name. And Reddit weighing feedback from early meetings with potential investors in its initial public offering that it should consider a valuation of at least $5 billion. That's some of the company news we are following. I'm John Tucker.
You're listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, getting a look at these markets here. Absolutely unched on the S&P 500. Nothing happened in there. Same pretty much on the Dow, off about 15 points. NASDAQ up about 0.2%. So very quiet on the index level here. Yields coming in just ever so slightly, about 3 basis points on your 10-year. We're now at 4.1%. I'm going to take a look at the energy space. We've had a little bit of a pullback in oil. WTI crude oil off 1.2%, just above $77 a barrel. Brent, $82.66. Bitcoin, it is up 1.2%, 42,400. So kind of getting out of that selling range pressure that it's seen over the last 10 days or so. Right now, let's head down to Washington, D.C., because we're going to get world and national news with Amy Mars.
All right, thank you, Paul. A verdict is expected this week in the New York civil fraud case against former President Donald Trump. That judgment, on top of last week's $83 million verdict in the E. Jean Carroll case, stands to wipe out most, if not all, of the cash the former president says he has on hand. We get more on this from Bloomberg's Laura Davison in Washington.
Potentially, if these legal damages that he's facing, could hold, he could pay, somewhere north of $400 million in legal damages. Trump, per the Bloomberg Billionaires Index, is worth somewhere around $3.1 billion, and they estimate he has about $600 million in cash. Though it is famously hard to estimate Trump's wealth. It's all private businesses, and for real estate developers, just generally, they famously don't have very liquid assets because a lot of it is tied up in properties.
Bloomberg's Laura Davison reports Trump is promising to appeal both cases, but he may still have to put up the cash in escrow while those play out. Income tax season is here. Internal Revenue Service Commissioner Danny Werfel says they're ready to make tax filing as smooth and easy as possible.
So we are going through a process of rewriting virtually all of our letters and notices and putting them into plain language. And we've been piloting a few of these letters and sending them out, and we're getting much better response from the taxpayers. A lot happier with how clearly we are articulating what they need to know.
You can start filing your 2023 federal income tax return today. The CDC is warning healthcare providers across the U.S. to be alert for measles cases. The Federal Health Agency says there have been 23 confirmed cases of measles from December 1st to January 23rd, and the CDC says there's a growing global threat as the uptick in cases in the U.S. reflects a rise in infections globally. And the San Francisco 49ers rallied from 17 points down at halftime to beat the Detroit Lions 34-31, and they're going to the Super Bowl. They'll face the Kansas City Chiefs, who beat the Baltimore Ravens 17-10. Super Bowl 58 set for Sunday, February 11th. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Paul and Molly.
All right, Amy Mars, thank you so much. We appreciate it. Molly Smith is not only a top economics reporter for Bloomberg News, but she's also a resident expert on all things in the game of tennis. Yannick Sinner, he won. Sinner, yes. Thank you.
Yeah, two
Sinner.
N's.
He won the Australian Open Men's Championship. Who is this guy? Do I have to pay attention to him going forward?
Absolutely. He is coming off of, this has been an incredible winning streak for him. I think he's won 20 of his last 21 matches. This is like going back in a couple of months now, and he's just really an incredible kid. He's 22 years old, wow. So I think we can call him a kid. Yep. I think he was one of the picks to win this title as the 4th seed, and he still will remain number 4 in the world, even with the ranking points coming out of this. But really just an incredible story with him is really, I think, since he added Darren Cahill, former player himself, to the coaching box, has been really just had some incredible results. This is somebody who a year ago we were questioning his fitness. He was 0-6 against Medvedev, who he played in the final not too long ago, and now has won their last 4 meetings.
Really?
So,
wow, because Medvedev's really
yeah, and had now just never, I don't think, beaten really any top players in a Grand Slam before this tournament. So really just an incredible turnaround for him. Very excited to see what he does in 2020.
So the expectation is he's going to be something to watch.
Yeah,
Sam's going.
I mean, him and Alcaraz, I think, are very much right now the future of the Mets game. So in good hands.
Okay, good stuff. I mean, it was on 3 o'clock in the morning, so I didn't get to see a lot, but I did see the highlights. I mean, Djokovic.
You weren't up? What do you mean?
Medvedev, exactly. So that's a big news, and so we'll get ready for the next one. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, lots of good stuff. Mark Champion, he's a Bloomberg opinion columnist. He's going to give us the latest on what is happening in the Mideast, a very fluid situation, but he is on top of it. And then we're going to get the market call from Katerina Simonetti, Senior Vice President at Morgan Stanley Private Wealth Management. And then we're going to talk about Amazon. We got Amazon earnings coming up this week. We're going to round table this discussion because this is a technology company. It's also a retail company. So we'll go to Anurag Rana. He covers the technology, the cloud, and Poonam Goyal, she covers for Bloomberg Intelligence, both of them. She covers the retail side. So we got it all covered there for you in this hour. Let's kick it off with Mr. John Tucker.
All right, thanks Paul and Molly, and this Bloomberg Business Flash being brought to you by Interactive Brokers. IBKR's redesigned Fundamentals Explorer provides comprehensive worldwide fundamentals data to clients at no cost. Take your research to the next level. Visit ibkr.com. Well, the major stock averages mixed to little change as we await a slew of earnings, the Fed decision this week, and also a raft of economic reports. Right now, 5 of the so-called Magnificent 7 tech companies will be delivering earnings this week. That starts tomorrow. In the S&P 500, we have 3 of the 11 major industry groups higher right now. Healthcare, the best performer, and energy is the biggest drag right now. Dominic Constant, meantime, at Mizuho Securities, isn't too worried about stocks.
Right now, the risk assets are in a sort of relatively safe place. Obviously, when we get the extent to which there's a harder landing and earnings are turning down, that's when you worry about risk assets. And maybe the S&P makes a few more new highs and then sort of takes a bit of a tumble later this year.
With the news that Amazon's dropping the iRobot deal, shares right now of iRobot down just about 10%. Overall, the S&P 500 2 points lower, 48.88 on the index. The Dow Jones Industrial Average down 30 points, and the Nasdaq 100 right now, call it dead flat, absolutely unchanged. And check markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Molly and Paul.
I mean, John, you look at the indexes. I mean, there's nothing going on there.
I don't want to say boring because news is never boring. We have to find something to spice it up a little bit.
A big unched on the day, as Paul likes to say.
Yeah, I like it because that's what used to come up on your screen.
There's
no
change.
UNCH.
Yeah, it still does, I think.
Does it? Okay. Does it? Okay.
All right, well, we've got our equities reporter here, Norma Linden, to fill us all in. And you get the news straight from Nora. She will tell you right here live in the Interactive Broker studio. Nora, what are you looking at this morning?
Let's take a look at Western Digital. Those shares are up as much as 3.8% after Kyoto News reported that Kioxia Holdings is exploring ways to revive merger talks with the computer hardware and storage company. Analysts have expressed that this is some positivity around this on the prospect of industry consolidation. An analyst over at Wedbush said a consolidation should yield longer-term market dynamics benefiting investors in both Kioxia and Western Digital.
I mean, I just hear consolidation all the time. I'm like, where is Gen Re?
Where's Gen Re? I mean,
I just feel like this is not
deal
a good
get
idea.
approved?
I don't know.
I mean, can this be pushed through?
And that these analysts are positive that this is going to happen? Who are these people? Have they not seen this isn't working?
So here's a call from Mizuho Securities on this. Quote, I doubt WDC wants to merge with Kioxia, given they know China regulators would have final approval and would unlikely grant it.
Check that out. All
There
right.
you go. There's always that. I mean,
Gordon Klein knows what he's talking about.
Yep, very good.
Mizuho there.
Mizuho, very good. Okay. So, yeah, I mean, anytime you hear a deal talk, you got to step back and say, okay, who's got to approve this thing and where are we? It's not just the European Union and the U.S. Now you have to do the UK because the UK now out of the European Union, they've got their own regulatory.
And China regulators,
And the
too.
China regulators for a lot of those businesses.
And speaking of the EU, looking back at iRobot, we've got iRobot really taking a nosedive this morning.
Because a deal didn't go through.
Of course, back on the topic. Shares are tumbling as much as 19% for the lowest level since 2009. And this all comes after, as John mentioned, Amazon dropped its $1.4 billion deal to acquire the Roomba vacuum maker. Amazon has really been tussling with these EU regulators over antitrust laws for some time, but has ultimately thrown in the towel. The company is now agreeing to pay iRobot $94 million in termination fees.
I mean, iRobot, this is the Bloomberg reporting, as John Tucker touched on in some of his earlier reports. iRobot, which has been struggling recently, said Chief Executive Officer...
Stepped down.
Yes, stepped down at the company as the company embarks on a restructuring plan that will result in about 350 job cuts, or 31% of the workforce. So that's not good for that.
I gotta say, this kind of sounds a little bit like Spirit to me, you know, like when they're just, this is like the lifeline for this smaller company.
Yep.
You know, JetBlue in that situation probably going to be okay. I think safe to say Amazon will be more than okay. But what happens to these smaller companies that are depending on a deal like this to go through?
And it's super interesting that you bring that up because Amazon and iRobot have been close partners for quite a few years. And actually, Amazon has been iRobot's biggest customer, at sometimes accounting for more than a quarter of its sales.
Yep, good stuff. How about our friends at SoFi Technologies?
Yes, on the flip side, surging.
Fintech. Is this fintech?
And no deals here.
No
Just
deals.
on
We're
their
moving
own.
along.
Organic growth.
Organic here. So, SoFi is surging as much as 24% for its biggest one-day gain since August of 2022. It's climbing after the fintech company reported earnings that showed it reached profitability for the very first time. This is huge, as we spoke about earlier. Analysts were expecting the company to report fourth quarter net income of $9.9 million, and SoFi reported $48 million. So that's a massive blowout.
Whoa.
No one was really expecting this, as you can see. And the company said that 2024 will be a transition year, and it definitely seems as though it is right on track for that.
Sounds like a positive transition if today's any note of it. Yeah.
Yeah, CEO Anthony Noto, former banker at Goldman Sachs, former executive at the NFL, West Point graduate, played football for Army. He's had a heck of a career, and he's the CEO now of this company and doing a good job there. We appreciate it. Norma Linda, thank you so much. Good stuff there, getting the update on what's happening out there in the markets. Again, the indexes are pretty much unchanged on the day, perhaps awaiting the raft of economic data this week, as well as obviously the big tech earnings. Of course, investors also grappling with geopolitical tensions, which seem to be escalating, if anything. Let's get the latest from Mark Champion. He's a Bloomberg opinion columnist. Mark, what's kind of the latest news here? What's getting your focus amongst all the various moving parts that make up today's Middle East?
Well, you know, obviously there are sort of two big pieces here. The first is there are negotiations underway led by the U.S. together with Egypt, Qatar, where they're trying to get to a ceasefire in Gaza. And that would really create an opportunity really to just sort of change the direction of travel in the Middle East, which is a very damaging one for the U.S. and for U.S. interests, and ultimately for Israel. So if they can get to a deal there, that's probably the most important thing that can happen right now, is just to create a kind of breathing space where people can start to try and solve some of the escalatory problems that are happening to do with Hezbollah in Lebanon, the Houthis in Yemen, and so on. And then the second part is, kind of working very much against that, is the the drone strike over the weekend by Iran-backed militias that killed several American troops. That is going to force a response from the Biden administration. The pressure on them to do something pretty dramatic will be very high. And yet they will also, have to kind of tread high wire there, because the last thing that they need is another, escalating war with Iran, which is, a whole different ballgame from dealing with a player like Hamas, a non-state actor like Hamas. And, then you're really sort of moving into areas of big movements in the oil price and so on if you get major escalation there.
Hey, Mark,
so very difficult moment.
Your fellow Bloomberg opinion columnist, James Stavridis, Navy Admiral, former Supreme Allied Commander of NATO, has a piece on the Bloomberg terminal today saying the U.S. must strike back at Iran. A deadly drone attack that cost American lives requires a swift, precise, and meaning military response. I mean, he's talking something on the lines of perhaps a 5 to 7 day concerted program there. Is that type of response, is that kind of, are you hearing that that's being discussed in, the Pentagon?
The details, I mean, it's interesting that it's a great piece in which he goes through the options that they will have to look at. And there are a lot of options there. It starts with, cyber attacks, the kind of covert attacks that can be done that would hurt quite significantly Iranian interests, but not, have the public profile that would force the Iranians into an escalatory retaliation. And then, then he moves on to, the other options, which are much more public and much more aggressive. But neither he nor I think, know exactly where the Pentagon is going to fall down on its recommendations, and they will always give a range of options to the president, from which he will choose according to how much risk he wants to take. I'm sure that it will come in the next few days, and or at least in the next couple of weeks. But what it will be, it's quite hard to predict.
I wonder also, is there a role that Congress plays in all of this too, or can Joe Biden and the Pentagon really act with the authorities that they have in the executive branch here? Because of course we've seen a lot of these issues of aid and other funding for wars overseas really get tied up with stalemates in Congress.
Yeah. Well, I mean, in a sense, this is easier than money, in that the president does have discretion to take quite, fairly significant action. If he's going to start a major war that would, require land forces and so on, which is really not on the table, then he'd probably have to go to Congress. But in terms of a retaliatory strike against the militias that were responsible for killing American soldiers, or Iranian interests, the U.S. has done this quite often before.
Hey, Mark, in your Bloomberg Opinion piece today, there's so much great work out there from you and your Bloomberg Opinion columnists today and every day. You kind of talk about the issue of the Gaza ceasefire deal, from your perspective, matters more than deterrence. What do you mean by that?
So what I really mean there is that, the U.S. is going to have to do something, and it's going to have to put down a marker. But we're in a long cycle of these kinds of events with militias like the Houthis in Yemen and with Iran over the years. It's very difficult to deter these kinds of rogue states and rogue militias. The Houthis are a classic example. The U.S., has been firing, to destroy their missiles and arms depots and so on, and is trying to, set some kind of deterrence. But the Houthis don't seem to care in the least, and have sort of celebrated, the attention that they get as a result. So I'm not saying that they shouldn't do anything. I'm just saying that if you really, the biggest thing that has changed in the last few months, the reason why until October the 7th, there had not been for months and in Iraq for a year, any strikes against U.S. assets, U.S. troops. And suddenly we've got, like 150, 160 of them in a few months. That is the war in Gaza. So if you want to try and start turning this around, probably the most efficient thing that you can do would be to get a ceasefire in Gaza, and that will make a lot more things possible.
So, Mark, we've rattled off of several involved parties here, and just to keep myself and all of the listeners tuned in as far as like who's who in this conflict, we have, of course, Israel and Hamas, the primary actors in the war in Gaza, but then we've also have Hezbollah in Lebanon. There's the Houthi militia out of Yemen. There's the drone strike that just happened in Jordan. I'm trying to keep track of all of this. Can you maybe help talk us through who all of these different parties are, and is this all related to the same initial conflict of fighting over Gaza?
It's a really good question. So there's two questions in there. Who are they and how are they related? There's like a wide circle or an arc around Israel, and these are what they call themselves, the axis of resistance. And they are loosely organized by Iran, and they are armed by Iran. And they have a kind of common agenda with Iran, which is to do with driving the U.S. out of the region, and what they also have in common that they're opposed to the state of Israel. So you have Hezbollah in Lebanon, which is just to the north, on the northern border of Israel. Then you have these various militias. I won't try and name them all at the moment, but there's a whole bunch of them in Iraq and operating in Syria also. In Syria, they're also on the border with Israel. Then you have, going south, just south of, at the bottom of the Red Sea on the Saudi Arabian Peninsula, you have the Houthis who are in Yemen. They also work closely with the Iranians, are armed by the Iranians. And so you have all these, and that's why, people focus on Iran, because it's, as the Saudi king once says, Iran is the head of the snake. So that's the one part. Then, how are they all related to Gaza? Gaza has given them a cause and a kind of license to act out against U.S. interests, against Israel, and it has given them some kind of protection and cover. So, it's very difficult for the Saudis or the UAE or Jordan or other Arab states, which would normally be much more friendly towards U.S. interests. It's very difficult for them to do anything. Saudi, which was fighting the Houthis for a long time, for example, in Yemen, has now sort of stood aside and has been very neutral about, hasn't supported the U.S. strikes on the Houthis in Yemen. And part of the reason for that is that what's happening in Gaza is so unpopular in the Arab countries that it makes it very, politically, the leaders in those countries find it quite dangerous to publicly be seen to do anything that would be interpreted as supporting Israel.
All right, Mark, wonderful stuff today, as always. Mark Champion, thanks so much for joining us. Mark is Bloomberg Opinion columnist. You can check out all of Mark's work and that of our other Bloomberg Opinion columnists, like Admiral Stavridis, whose work we referenced earlier. You can find that on the Bloomberg Terminal or Bloomberg.com/opinion. Some fantastic work there from our opinion columnists, augmenting what the day-to-day reporting from Bloomberg News. So we've got the geopolitical issues around the world covered extremely well, because they are important. They are important to investors and to the markets. We'll have more coming up. This is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg News. What is Bloomberg Business Flash? Red and green on the screen. Not a lot of movement. The S&P 500 is fluctuating near its all-time high. And if you keep it score at home, after a 3-week advance, the S&P 500 is up just about 20% since late October. This marks the busiest this season for earnings this week, that is, with results from Microsoft, Alphabet, Amazon, Apple, and Meta Platforms. And then you have Amazon abandoning its planned $1.4 billion acquisition of iRobot, sending shares of the Roomba maker tumbling about 10%. Treasury 10-year yields dropping 2 basis points to 4.1%. Then you have oil giving up the earlier advance. Traders awaiting the U.S. response to the attacks we were just talking about. And going into this week's two-day Fed policy meeting, investors assigning roughly even odds to the prospect that the central bank will start lowering borrowing costs at its next decision in March. Might get some hint of that with this meeting. S&P 500 right now unchanged, 4890 on the index. The Dow 21 points lower. The Nasdaq 100 9 points higher right now. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Molly and Paul.
All right, John Tucker, thank you very much. John, you'll be shocked when I admit that I wasn't really paying attention to one of your earlier stories. When you said about Walmart managers, what they're making, $400,000.
And you still want to be a greeter, Paul?
Well, now, that changes everything.
Okay.
Well, but that's not unusual for some of those big box stores. I know there's Lumber 24. You ever hear of that?
Yeah.
That's a big one. I know managers there. They start off somewhere in the high 300s.
Yeah, because you got like gajillions of people working for you.
And it requires a good degree of expertise also. So
the truckers there too, I think, among the best paid in the business. Yeah, I mean, definitely starting salary in like the $100,000 range for sure.
Walmart is offering annual stock grants as a new incentive for store managers, bringing potential pay for the most successful ones more than $400,000. That gets your attention. But I'm going to be the best greeter I can be. That's kind of my strategy.
Probably not as lucrative, but we will cheer you on, Paul.
Okay, very good. Let's take a look at these markets here. Again, I mean, you kind of think about 2023 and the rip we had there at the end of the year. It's like almost coming to 2024. Now what do I do? It seems like I might have gotten all my performance at the end of 23. Let's check in with Katerina Simonetti. She probably has some good views here. She's the Senior Vice President at Morgan Stanley Private Wealth Management. So Katerina, what's kind of the message you started off 2024 with your clients here after a pretty good 2023?
Paul and Molly, thank you for having me on the show. Yes, surprisingly good end of 2023, where investors seem to be so excited about the potential for the rate cuts. We saw this, pretty remarkable year end, and also, somewhat unusual was the fact that the 7 large stocks essentially carried the market. So if you look at the performance that investors experienced in some of the broad indexes like S&P 500, for example, there were 2 stories of the index. There was a story of these magnificent 7 stocks and then the rest of the market. So when we look at 24, it definitely continues being the story of the Fed. And it is really the timeline of the rate cuts that we're looking at, first. And then, of course, the earnings, because to some degree, it is a little bit confusing for investors to figure out what they're hoping for. Are they hoping that rates are going to start coming down soon? And we have significant doubts that the Fed is going to start cutting in March. Or are they hoping for good earnings for the stocks that they have in their portfolio? We think it's a little bit of both.
Well, let's delve into that timeline for the Fed rate cuts, because I feel like you can ask 5 people and get 10 different answers on this of when the Fed cuts are going to start. We hear March the earliest. Our previous guest said fourth quarter the earliest. So where do you stand in all that, Katerina? What do you think?
Well, we think that March is a bit aggressive. And in our view, we expect that the rate cuts are going to start in June. And of course, economic data will be something that will have to support it. So we're going to have to see some weakness, because after all, we can't forget that the rate cuts, it's economic stimulus. This is what we do to stimulate the economy. But the question, of course, also is, would Fed be willing to do something preemptively? If this week is a huge week, we have earnings, we have job data, we have the Fed meeting that is coming up, and perhaps they give us some guidance as far as what they think on the timeline, because if economy remains strong, is it something that they're going to be willing to do? But in our view, we expect less rate cuts that market is pricing in.
All right, Katerina, what are you telling your clients here in 2024 in terms of maybe stocks versus bonds? Is it client specific, or do you have a kind of a balanced approach you like to take? What's your message?
Well, our biggest message to clients right now is get out of cash. We tend to have a little bit of, get out of cash, because we tend to have a little bit of a short-term memory. And, when we think about it, it seems like we've been earning 5% on cash forever, but reality is that it hasn't even been a year. And our biggest conversations right now is extending the duration of fixed income portfolios, getting out of cash, positioning both in high quality equity, not necessarily the stocks that have done so well in the previous year, but maybe taking some profits there, but making sure that we have a nice high quality, well-balanced portfolios on the equity side. We like healthcare, we like industrials, we see opportunities in financials, but on the fixed income side, even more importantly, we're looking at extending the duration and the quality, because this is this remarkable opportunity of picking up some of these high quality bonds and enjoying that 5% yield for longer.
Is there a lot of that out there? I mean, especially looking at corporate issuance, like you seeing much in that longer duration tenor?
Well, Molly, there is longer duration, but there's also intermediate. And when we're looking really about, that message of getting out of cash, even getting a CD that is few years out, looking at some corporate bonds, investment grade corporate bonds, just kind of trying to get as much of that yield as possible. We might not be able to get that yield going out 15, 20 years, but when we look 5 years out, 7 years out, this is really something that is still out there. Absolutely.
So on the equity side of the equation here, are there some sectors that you and your team like right here that you're trying to convey to your clients?
Well, Paul, the first message is, of course, trying to, again, getting away from the tech names that did so well, right? And it's the hardest thing to do, to know when to take a profit and to reallocate, to the areas that maybe have not done well but are positioned, in our opinion, better. And when we look historically, usually, after the rate cuts, large cap is this sector, that usually just performs better immediately, but small and mid cap stocks, are not that far after. And in our view, with the potential for rate cuts, but also with some of the geopolitical concerns that we are dealing with, especially, some of the news that came out over the weekend as example, we really, our return expectations for this year, the risk reward, are kind of low. We are setting expectations to the clients that this is going to be the year where we position, where we get those quality positions, where we make sure that our portfolios are well diversified. We do like healthcare, we like industrials, we like financials, we like just generally dividend paying stocks as this core building block of the portfolios, but we're also setting timeline expectations that this is the positioning that is going to be more for 25 and even 26, after the rate cuts, after that stimulus hits the market, when there is another wave of growth that clients will be able to enjoy.
So Paul is a huge fan of the Russell 2000, and I know it is a burning question for him. Is there a magnificent 7 of the Russell 2000?
That's, how many 7s would it take to really make an impact, in the index that has 2,000 stocks? That's the question. So I think that the answer there is just broad index versus stock picking. And in our view, this is very much the year for the stock picking, where valuations and earnings and competitive positioning of these individual names, of the individual stocks, will make all the difference in the world for the the investment portfolios for that alpha, that excess return above the market. And we actually would encourage investors to, some would take profits and decrease their positions in the broad indexes that benefited from some of the stocks that, performed well last year.
Katerina, one last question, about 30 seconds. What do you do with alternative investments? How do you kind of position them for your clients?
We think alternative investments, as far as diversifier or even return amplifier, play an essential role in the portfolio where appropriate. It just really takes time to get educated in that space. But we think that at least 10-15% of the portfolio, could really benefit from some alternative exposure.
Katerina, thanks so much for joining us. As always, Katerina Simonetti. She is a Senior Vice President of Morgan Stanley Private Wealth Management, joining us to give us her thoughts on these markets here. And again, we think about the 60-40 portfolio. It performed last year.
Yeah.
Thanks to that rally
Very much
in
so.
Bonds in November, December. Not so much in 2022, though. I mean, those historic losses in the fixed income space.
I mean, but you're always looking for, a rebound year, right? I mean, that was like a rebound to the max. You just have to wonder, if you're sitting out here now, is this too good to be true? Can this keep going? I mean, I think, to our previous guest was saying, clients are anxious and wondering those same questions right now. I get it. I'd be nervous too.
Yep, absolutely. So and Katerina, they're the folks at Morgan Stanley, get out of cash. That was a clear message as well. Right now, let's head on down to Washington, D.C. We'll get world and national news with Amy Mars.
All right, thank you, Paul. And Molly, President Biden under growing pressure to confront Iran directly after a weekend drone strike killed 3 U.S. soldiers over the weekend. Bloomberg opinion columnist Mark Champion says the president has a number of options.
Possibly the most effective way that the Americans could do this is to do it covertly, to hit something very sensitive that the Iranians really care about, but then they aren't driven politically to respond and create an escalation. But in an election year in the U.S., doing something covertly may not really be politically viable for President Biden.
Mark Champion of Bloomberg opinion, Iran is denying any involvement in that attack. A Republican lawmaker involved in negotiations on a bipartisan Senate border bill says a number of senators are making judgments based on internet rumors and misinformation. Oklahoma Senator James Lankford tells CBS's Face the Nation a bipartisan Senate border bill will pass.
Do not have a vote count yet on this because everybody's got to be able to read it to be able to go through, but I do feel very positive about it because even the initial feedback has been good.
Senator Lankford downplayed any influence of former President Trump, who, former president said, has a substantial stockpile of cash at his disposal. But 2 major verdicts in New York threaten to wipe out most, if not all of it. Bloomberg's Laura Davison.
If he is ultimately has to pay all the damages that that has so far judges have ordered, but I'll note that all of these are under appeal. It could really wipe out his cash. He could be forced to sell some properties. These are things like his golf clubs, Trump Tower, and this could be a real damaging blow to the former president.
Bloomberg's Laura Davison tells us that under a worst-case scenario, Trump stands to lose up to 15% of his net worth on the Bloomberg Billionaires Index. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major averages right now, a little changed. Investors kind of on the sidelines waiting for earnings, economic reports, and, of course, the Federal Reserve delivers a policy decision this week. Torsten Slok, chief economist at Apollo Management, thinks they should signal that lower rates are headed our way.
If you use the traditional frameworks, the traditional way of thinking for the Federal Reserve, there are some signs that because inflation has come down so much, that we should already begin to see soon the Fed begin to cut rates.
Microsoft, Alphabet, they open their books tomorrow. Apple, Amazon, Meta Platforms report earnings Thursday. The results will go a long way towards setting the overall tone of the market. Remember, tech about 30% of the weight in the S&P 500. Right now, the S&P 500 just 3 points higher at 48.94. The Dow Jones Industrial Average 1 point higher. The NASDAQ 100 up 28 points, and that's a rise of just about 0.2%. The two-year yield 1 basis point lower, 433, and the 10-year, the benchmark, that's down 3 basis points. That's at 410 right now. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Molly and Paul.
All right, John Tucker, thank you so much. We appreciate that. Molly Smith and Paul Sweeney live here in our Bloomberg Interactive Broker Studio. Also streaming live on YouTube, so you can head over to youtube.com. You can search Bloomberg Radio. You can go to the search podcast, and you'll find a link there and all that kind of good stuff. All right, big earnings week this week. We've got Amazon, Molly, after the close Thursday. So I think it's time to get a preview of what we might see from Amazon. And when we talk about Amazon these days, it's both a retail story, e-tail, and a tech story.
E-tail, I like that.
With its cloud. So what do? How do you get an expert on both? Well, you go to Bloomberg Intelligence. Because we have Poonam Goyal. She's a Bloomberg Intelligence senior analyst for e-commerce and all that retail stuff. She joins us here, as does Anurag Rana, senior analyst on the tech side for Bloomberg Intelligence. Poonam, let's start with you here. I'm going to go back to the roots of Amazon as a retail story here. What do you expect to see and hear from Amazon this quarter about that core retail biz?
I think the retail business will be very strong for the fourth quarter. We already saw it in some of the industry numbers that were reported back in November and December, with really strong online sales, especially in November, and that momentum kind of continuing into December. So from the retail side, we expect Amazon to report a much stronger 4Q, and they'll still be driven, Paul, by the third-party marketplace. So, Amazon's business is 1P and third-party, where they sell stuff on their own, and then they have sellers sell on the platform. We think the third-party business will continue to outpace first-party, but both will have strong growth rates.
And that's just, that's just one piece of Amazon's business. I mean, granted, a big piece, but just one of them. So, Anurag, why don't you tell us a bit about the Amazon Web Service component and what you're expecting out of that?
Yeah, thank you. So, AWS is the biggest cloud infrastructure vendor out there. And what we have seen over the last 2 years, it has been a bit of slowdown in the growth rates of AWS. And the reason for that is it's a variable pricing model. You pay what you use. And in this economic downturn in the last, I would say, 1.5 to 2 years, companies are dialing back on their cloud usage. It's one way for them to control their costs. So that doesn't mean that they are not embracing cloud at the same pace. They're not just using as much. But we think that takes a U-turn either in this quarter or the next quarter. We are fairly optimistic based on a survey we did. We think we are coming to a point with easy comparisons. So we are fairly optimistic that over the next 12 months, we'll see a rebound in growth rates for AWS and by default for Microsoft also.
So, Anurag, if I'm Amazon Web Services, how do I position myself in this AI discussion here? I mean, if I'm the IR person, what am I telling my executives to say when they get on this conference call?
One of the most important things, I think the message they have been telling people is, you don't really need just OpenAI to go out and build your AI, you could say, strategy. they work with a lot of open source companies or AI vendors that have the large language models. They work with Meta, for example. They really promote a lot of Meta's large language model. So if I'm a company, you can go out and choose whichever raw material you want, whichever large language model that you want, but you can host that on AWS, and that's how they're going to make money, is by giving the building blocks of AI to companies.
So, Poonam, let's come back to the retail side of it. Obviously, the big news with Amazon today, the termination of the $1.4 billion deal with iRobot. Going to say again, pretty sure Amazon's going to be okay. But maybe you could tell us a little bit more about is this really material for them that this deal didn't go through? And of course, this we just keep hammering it time and time again. This M&A outlook, it's really tough.
Yeah, we talked about this a little earlier, and it's not material to Amazon. Just looking at the size of it, right? $1 billion, a little more than $1 billion on Amazon's scale of over $600 billion in GMV. It doesn't move the needle at all. But that said, it just reinforces our view that we've had for a long time that acquisitions for these companies will be more difficult given the scrutiny that they're under. So we do think that organic growth is what Amazon is going to have to focus on, and we think there's plenty of it on the retail side, on the advertising side, and on the cloud side.
Just a little redhead crossing the Bloomberg terminal. I'll bring to your attention Renault to cancel Ampere IPO. So not good news for the IPO market. We'll get some reporting on that coming up. And Poonam, with the e-commerce side of Amazon, what's your sense, talking to the Amazons of the world, the Walmarts of the world, how's the consumer these days and how's the spending out there?
The spending is pretty good, surprisingly. We've been talking about the consumer possibly falling off and really slowing down their spend, but we haven't seen it. The holiday numbers suggest the spending is strong. I'd still say, though, I think people are picking and choosing where they spend. They're deciding where they want to spend their dollars, and Amazon has been a place where they're more likely to spend it, given the fact that they get speed, convenience, and really everything that they want from there. But that said, I do think that on the low end, you could see some issues arise as inflation and other concerns really do hamper their spending power.
So, Anurag, Poonam was just saying how the growth story for Amazon is really going to come more from organic growth rather than acquiring it. So tell us about, on the cloud side, did you see a lot of organic growth opportunities coming from that business?
Yeah, no, we expect actually growth to pick up. We think the growth is going to be closer to 20% by the end of this year. This is a market that has a long, I would say, runway. Overall, cloud spending is still less than 20% of total tech spending, somewhere in that 20 to 25% range. I think we have a long way to go, and Amazon is right in the middle of it. They are the biggest cloud infrastructure vendor, as I said, with over 40% of the market share. So I feel fairly optimistic that this year we're going to see a rebound.
So in the cloud infrastructure side of it, who do they compete against? And is that 40% market share something that they have to defend? Is that something they can grow? How's the competitive landscape look in the infrastructure space?
Yeah, in 5 years, if they are able to maintain it, I'll be very happy with that, because what has happened is, Microsoft has really gone out big over the last 7, 8, 10 years, and it is now the second biggest vendor. Now, surprisingly enough, this is a space where the smaller vendors cannot really make a dent, because you need a lot of capital expenditures to come up with a cloud model or infrastructure business. You just can't do it in your garage. You really need billions of dollars of data centers in order to really be good at this business. So right now there are two big vendors. It's AWS and it's Microsoft Azure, and then after that we have Google and the likes of Oracle and IBM after that.
So last one here for you, Poonam, just quick on the 30 seconds, looking at pharmacy and grocery for Amazon. What are the next developments there?
There's a long way to go there. We think they're still in very early innings, and it's a harder market for them to crack. With grocery, they're trying to build out their fresh business, but we really haven't seen that much progress there. And on pharmacy, they're still very, very early on. So those are businesses that we haven't even factored into our growth scenario for Amazon.
Wow, yeah, it seems like a tough nut for them to crack, and for a lot of people. All right, Poonam Goyal, Anurag Rana, two of our best analysts at Bloomberg Intelligence. Also, absolutely, some of our very first folks we brought on board at Bloomberg Intelligence many moons ago. But they give us a little preview there of Amazon, because it is a giant retailer, and it is a significant player in the cloud business. So you got to bring the two expert areas together, which we can do at Bloomberg Intelligence. And you can verified Poonam's and Anurag's research, as well as the other 400 analysts of Bloomberg Intelligence. BI Go on the Bloomberg Terminal. Best research on this. This is Bloomberg.
Now, your company news headlines on Bloomberg Radio.
John Tucker in the Bloomberg Newsroom. Look at some of the company news. Feels like we're overdosing on Amazon. Here's another one from Amazon.com. They're joining their streaming peers like Netflix, Disney, and Peacock. They're going to start running ads on the Prime Video service today. So besides generating new revenue for the advertising business, the e-commerce giant betting it can persuade viewers to shop from their TVs. And of course, Amazon has the potential to upend the status quo here because it's the world's largest online retailer with detailed shopping profiles on the Prime Video viewers. More regulatory news. The Office of the Controller of the Currency is going to take a tougher approach to evaluating mergers. This is specific to banks because that's what they cover. So this includes eliminating certain automatic approvals. This is a proposal that is being released today. Top regulators, including the Federal Reserve, have pledged to increase scrutiny of bank mergers. Back in July, you'll remember, top Justice Department antitrust lawyers said they're weighing a revamp of how they scrutinize bank mergers. Tesla has removed language about minority workers and supporting employee resource groups after the CEO, Elon Musk's recent comments criticizing diversity initiatives. Musk has repeatedly denounced diversity, equity, and inclusion efforts in recent weeks on social media, calling them literally the definition of racism. As you recall, Musk also sparked controversy last year by endorsing anti-Semitic conspiracy theory on And Boeing CEO Calhoun facing analysts and investors. And Boeing will have its earnings on Wednesday.
You're listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, looking at these markets right here, not a lot of movement at the index level. Most of the morning, we could say that S&P's up 0.1%, the Dow's unchanged, and the Nasdaq's up about 0.3%. Yields come in slightly here. The 10-year Treasury is down about 4 basis points, 4.09% on your 10-year Treasury. In the commodity space, WTI crude oil off 1.6%. Let's call it just under $77 a barrel. Gold a little bit higher, $2,027 an ounce. And Bitcoin, we'll call that out for Tom Keene, up 2.9%, 43,100. So rebounding off of those recent selling days for Bitcoin. Right now, let's head down to Washington, D.C. We'll get world and national news with
All right, thank you, Paul. 3 U.S. service members were killed, dozens more wounded in a drone strike in Jordan carried out by Iran-backed militants. White House National Security Council spokesman John Kirby talked with ABC News about the president's option.
He's going to have to weigh what the options are going to be. There will be a response. This was a consequential attack, no question about it.
Republican Congressman Tony Gonzalez of Texas says this whole thing reminds him of the environment just before 9/11.
No one heard of Al-Qaeda before, but they were bombing the USS Cole. They were bombing embassies leading up to that. Feels the exact same way.
That's Texas Republican Congressman Tony Gonzalez. President Biden is vowing to respond, and the Secretary of Defense Lloyd Austin says the U.S. will take all necessary actions to defend the troops. We could learn as soon as today what the energy efficiency requirements will be for gas and electric stoves and ovens. The topic of gas stoves ignited a heated debate last year when a Biden appointee suggested they could be banned because they posed a risk to human health. But a ban is not in the works, and the administration is finalizing now a scaled-back plan to make new stoves less energy intensive. The Washington Post reports the rules would not affect the stoves in people's kitchens or those that are currently on the market. Texas Attorney General Ken Paxton continues to press the issue of transgender health care for kids. He's ordering a Georgia telehealth clinic to turn over the records of any Texas family that came seeking information about gender transition. Attorney Karen Lowy, who represents Texas families of transgender children, says this is a scare tactic.
The kinds of things that he's seeking would be considered protected health care information. I mean, the bottom line is he has zero jurisdiction to go after entities with no Texas connection.
Attorney Karen Lowy says she's been informed of other organizations that have received similar requests. Last year, Paxton sought records from the Seattle Children's Hospital, and they sued to block the release. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Paul and Molly.
And Amy Morris, thank you so much. We appreciate that. All right, Molly, last hour we talked about the men's Australian Open. How about the women? How did that play out?
Yeah, kind of in line with expectations, actually, in terms of who won. Aryna Sabalenka, the defending champion, was able to back up her title for the first time that's happened in 10 years. So well done to her. Yeah, she played a Chinese player, Qin Wenxiang, who this was her first major final. She's now rated inside the top 10, but I don't think anyone really knew a whole lot about her before Saturday. Honestly, she's still probably not all that well known to the casual tennis community, I'll call it. But yeah, I think the expectation was for Aryna to win this in a straightforward way, and she did. So
where is she ranked, Sabalenka, here in the top?
Number 2.
Number 2 behind
Swiatek.
Swiatek.
You love saying that one.
Okay.
Yes.
So Sabalenka, I remember seeing her at the U.S. Open.
Lost in the final to Coco.
Yeah, very strong player.
Yeah, she is. She really just hits the ball harder than any other woman out there, has really just improved her consistency, her mental fortitude. She really used to have a lot of meltdowns on the court, used to be double faulting in the double digits per match. I don't think she even had one maybe in the final. She really has cleaned it up, gotten it together. So she's just a top force, especially on the hard court circuit, and then rounding it out with Swiatek, Kogo, and Rybakina. Those 4 are going to be tough to crack in the women's game.
All right, good stuff. Good. We'll get ready for the next big tournament in Australia, the first of the Grand Slams. We are going to have Balance of Power. That comes up from Washington, D.C. with Joe Matthew. Balance of Power. That starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Welcome to Balance of Power. I'm Kaylee Lyons in for Joe Matthew today as we have our eyes at home and abroad. Tensions escalating in the Middle East after a drone attack on a base in Jordan kills 3 U.S. troops and injures dozens more. The White House is vowing a response, but how provocative will they be? We'll have more with Bloomberg's Peter Martin this hour, plus get some analysis from Dan Mouton of the Atlantic Council. Plus, the House returns to Washington today as we look to see if a deal brought by Senate negotiators in the White House could be on the floor this week and whether it's going to go anywhere in the House of Representatives. And Bloomberg's Billy House and Laura Davison will be with us on that. Plus, we have to talk to Jeannie Shanzano and Rick Davis as well. Our political panel will be here with us to give us their thoughts. First, though, let's get a check on the market. And as always, we do that with Charlie Pellet. Hey, Charlie.
Hi, thank you very much. And here's what's going on. We have got stocks right now trading a little changed. The Dow, the S&P, NASDAQ all advancing. SoFi shares, they are surging the most since July after reaching profitability for the first time, taking the fintech one step closer to CEO Anthony Noto's goal of turning the former anti-bank into a top 10 financial institution. In Washington, the Labor Department will be issuing a key economic report this week. It is the monthly jobs report that comes out on Friday. Now with a preview, here's Bloomberg's Vinny Del Giudice.
Forecasts suggest payroll growth moderated a bit during January after breaking above the 200,000 mark in December. The median, a gain of 108,000. We'll get the data Friday. The U.S. labor market outlook is hazy, though jobless claims remain historically low. Bloomberg Economics sees the labor market cooling rapidly, with hiring limited to a handful of industries. Vinny Del Giudice, Bloomberg Radio.
And right now we do have the U.S. stock market, as I mentioned, trading mixed. We have got the S&P 500 index higher by 5. The Dow Jones Industrial Average down 13 points right now. Lower a little change, down less than 0.1%. NASDAQ Composite Index up 46, higher by 0.3%. 10-year 4.09% with a 2-year 4.33%. Spot gold up $8.50 the ounce to $20.27, up by 0.4%. And West Texas Intermediate crude pulling back today, down 1.2%, 77.06 per barrel of WTI. So again, recapping mixed markets right now. We've got stocks swinging between gains and losses. S&P right now higher by 4 points, up 0.1%. I'm Charlie Pellet. That, Kaylee Lyons, is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you very much. We return to the situation in the Middle East as the White House at this hour is weighing potential responses to a drone strike conducted by Iran-backed militants that killed 3 U.S. troops on a base in Jordan and injured dozens more. The president over the weekend said that those responsible will be held to account in a manner and at a time of his choosing. While there's some pressure coming from Congress, hawkish senators like Lindsey Graham or John Cornyn, who are actually pushing the administration to strike Iran directly, something that the U.S. has not actually done in decades, and that they may be hesitant to do because of concerns around escalating what's happening in the Middle East. Iran, I should point out, has said that accusations it was directly involved in this attack are baseless, and said that resistant groups in the region do not take orders directly from the Islamic Republic. So let's get the latest now with Peter Martin, who is Bloomberg's global defense and intelligence correspondent and is joining me here in studio. So, Peter, do we know, first of all, how directly involved Iran was? Are we taking Tehran at its word here?
I think it's fair to say that American officials treat those Iranian statements with a high degree of skepticism. Iran has, as you know, a network of proxies throughout the region. Some of those proxies are very tightly controlled. Others, there's a little bit more leeway. But when it comes to taking decisions about killing American soldiers, about supplying these proxy groups long term, I think it's fair to say that the administration looks at Iran as very much culpable here.
Well, and the fact that 3 soldiers were killed in this isn't the first time we've seen U.S. troops as casualties of what has been going on in the Middle East since October 7th and this war erupted between Israel and Hamas. So theoretically, you would maybe expect that this would be the strongest response to anything we have seen because troops actually died. But how strong is strong here? When they're saying it's going to be stronger than the current operations they're conducting, going after the Houthis and these Iranian proxies, what options realistically are on the table?
Well, the administration needs to tread a very careful line here. They've been worried ever since the outbreak of hostilities following the October 7th attacks that there's the potential here for a broader regional war. There have been clashes on Israel's northern border with Hezbollah. There have been the Houthi attacks that you mentioned, and of course there have been these attacks by Iranian proxies from Iraq and Syria, which most recently led to this watershed moment where US soldiers died. So the administration is going to be looking to send a very strong message. Those that we've spoken to have said that they recognize that the response needs to go above and beyond what's happened before. When it comes to something like striking Iran directly, that's a pretty difficult decision to take, and it's something that certainly would risk a kind of broader regional conflict, and they're going to be pretty cautious about that.
And is the primary concern that Iran would retaliate in kind, or that it would just kind of exacerbate what we're already seeing with these Iranian proxies and the activity and operations that they're conducting specifically? I guess my question is, would Iran really want to go after the U.S. directly either?
The assumption ever since October 7th but from US officials has been that Iran too has a lot to lose, right? They're on the threshold of having a nuclear weapon. They are benefiting in many ways from being able to strike at Israel through proxy attacks and also strike at US forces, but without very much direct risk to themselves. Now, critics of the administration's approach have said that unless the US is willing to put Iran and its own assets at risk, then there's the risk that these attacks will just continue to escalate and won't be deterred. The administration, on the other hand, has said that they need to take a cautious approach because there's a lot at stake here. There's the broader regional economy, there's the threat of prices increasing as attacks on shipping increase in the Red Sea. So a lot of different things to weigh.
Well, and of course, that's why it took so long for the U.S. together with allies to actually move to offensive, even against the Houthis. For a long time, it was just defense and deterrence in the Red Sea until those strikes began a number of weeks ago. And of course, Peter, when we first saw that initial strike launched, the U.S. together with the U.K., we've seen, I believe, about 8 of them now. It was done while the Secretary of Defense, Lloyd Austin, was still at Walter Reed in the hospital as he was getting treated for prostate cancer. As we weighed the response here, he's back at the Pentagon today, right?
He is. He's meeting with the NATO Secretary General today. He's back in the saddle at the Pentagon after a long delay.
Does that actually impact anything other than optically? Is it easier to kind of conduct these conversations when the stakes are so high?
I mean, the Pentagon has strenuously denied that his physical absence from the building has impacted operations, but I think it's fair to say that any organization works better when those in charge are close to what's happening.
All right, Peter Martin, Bloomberg's global defense and intelligence correspondent, thank you so much for joining me. And we want to get more analysis on the situation now with Dan Mouton, non-resident senior fellow at the Scowcroft Middle East Security Initiative at the Atlantic Council's Middle East programs. Thank you so much, Dan, for joining me today. I want to read you, if I could, a quote from a Bloomberg opinion piece that was written by Admiral James Stavridis, who wrote, "The Pentagon should generate detailed strike plans to go after Iranian targets themselves. They could include warships operating in support of Yemen's Houthis. Another target set could be Iranian oil and gas platforms in the Arabian Gulf. Even more controversially," he writes, "the Pentagon could consider strikes against Iranian military command and control sites." Dan, what is your assessment of what a proportionate, appropriate response would be here? Are any of those options on the table in your mind?
Hi, Kaylee, and good to join you today. I think what Admiral Stavridis portrayed in his opinion piece is absolutely part of the menu of options that the Department of Defense, as a matter of course, would generate for the president in terms of adhering to the president's remarks yesterday that we're going to respond appropriately at a time and place of our choosing. I do think, though, it's important to note some of the other pieces that I think Peter Martin also highlighted, which is this attack did not originate from Iran. It was an Iranian proxy group versus Iranian forces directly. Now, obviously, there's culpability that Iran needs to be held accountable for, but in terms of the people and organization and kind of commands that were given to launch this attack, it's important to dig into that in terms of how we evaluate a proportional response. And when I say that, I would go back a little ways to highlight why the Department of Defense, at the President's direction, surged forces to the region after October 7th of last year, which was to prevent escalation into a regional conflict after the October 7th Hamas attack against Israel. I think in terms of the President's choices, he's going to be given this menu, and it's going to involve either striking back against elements of Kataib Hezbollah in Syria, perhaps elements in Iraq, and obviously there's going to be Iranian targets, but he's going to have to weigh the likelihood of escalation, and I'm happy to dig into that a little bit more if you'd like.
Well, yeah, absolutely. I mean, how likely do you think it is that whatever measures the U.S. takes here would be significantly more escalatory than the measures the U.S. already has taken, the multiple strikes we have seen against Houthi targets in Yemen? Does the calculation change entirely, or at least the stakes move consequentially higher if there were to be a strike directly on Iranian territory, which we haven't seen for decades?
Haley, I do think that if we were to strike inside of Iran, that would, Haley, I do think if we were to strike inside Iran, that would increase the likelihood of regional escalation. Since this attack did not originate from Iran, and right now we don't know if there were literal Iranian fingerprints on these one-way attack UAVs, unmanned aerial vehicles, it's hard to draw a direct line. That being said, if we move a little bit to the left and look at the organization responsible for launching the attack, there are a whole multitude of Shia militia groups in both Syria and Iraq that have been involved in attacking U.S. forces. I'd note that there's been close to 160 attacks against U.S. forces in Iraq and Syria following October 7th. And so all of those attacks were meant to kill U.S. forces. There was an increasing likelihood over time that sooner or later something was going to, unfortunately and quite tragically, get through U.S. defenses. And when they did on Saturday, it became inevitable for us to respond. I do think, in terms of the choices available, what we're likely to see is a much more comprehensive set of strikes against these Shia militia groups that are directly responsible for the attacks.
Well, and Dan, your point is well taken that this isn't necessarily Iran itself that is responsible here. And of course, we've heard from Iran in the aftermath of these attacks that the groups it backs operate independently from the direction of the Islamic Republic. They say any allegations that they were directly involved are baseless. Nonetheless, though, if it's providing money and weapons to these groups, Iran, at the end of the day, if you go down the line of fault, is in that line, right? So I just wonder how Iran's backing of these groups can realistically be stopped if the U.S. is not willing to go after Tehran directly.
And I think that's a very, very valid point, Haley. I think where we're going to be right now is going back to the last probably till late October up through the last few weeks. We've heard statements from Secretary Blinken, UN Ambassador Linda Thomas-Greenfield, and others, Department of Defense, White House, and so forth, messaging directly to Iranian decision makers that there will be repercussions. I think at this point we should expect, any Iranian players in this attack scenario that are operating in Syria and Iraq that are directly aiding and abetting these attacks. I would expect them to be on the table in terms of what the United States is willing to target. I think thus far, it's going to be difficult, and this goes back to the desire by the U.S. administration to not escalate. It'll be difficult to choose to strike directly in Iran. Now, to Admiral Stavridis' point, there's Iranian warships, if you will, or Iranian ships affiliated with the Iranian Revolutionary Guard Corps that are operating outside of Iran's territorial waters that in some instances could be very well aiding and abetting these attacks. And so that could very well be on the menu of options. And I think the Iranian government needs to be made aware of the repercussions of this continued targeting, or aiding and abetting this continued targeting of U.S. forces.
So, Dan, obviously, while we await news on what the potential response from the U.S. could look like, of course, all of this is happening against the backdrop of the ongoing war between Israel and Hamas. And we know that also over the weekend, there was a summit in Paris with spy chiefs and other officials from the U.S., Egypt, Qatar, and Israel trying to reach some kind of ceasefire agreement in exchange for the rest of the hostages that are still being held in Gaza. And a headline actually just crossed the Bloomberg terminal from the Qatari prime minister saying that hostage talks are in a better place than a few weeks ago. How hopeful are you that a deal like this could actually come to fruition? And how could that change what we're seeing across the Middle East? Because theoretically, if there was a ceasefire, the Houthis wouldn't have as much reason to attack vessels in the Red Sea, right?
Indeed. I completely agree with kind of the connection you just drew, Kaylee, to these attacks, regional escalation from October 7th. I'm quite hopeful that what was going on in Paris this past weekend, as well as the work that preceded this, and this was White House coordinator Brett McGurk going to Cairo, going to Doha, Qatar.
Right.
This was in the lead up to Director of CIA Bill Burns traveling to Europe the other day. I'm quite hopeful that this could, in fact, be an opportunity for both sides to de-escalate. This is principally right now focused on helping the government of Israel find a way out of the scenario that unfortunately it fell into following as a result of the October 7th attacks. But this is the best chance at the moment for us to find a de-escalatory path to help the government of Israel find its way out and reduce civilian suffering in the Gaza Strip.
And just finally, we have less than a minute left, Dan, but we know that there's been some discussion as to whether this should be, say, a 2-month ceasefire or a permanent ceasefire. Can Israel really agree to a permanent ceasefire at this point?
That's going to depend on the political calculus, and it's impossible, I think, for me to answer that, Kaylee. It's going to be the political calculus inside of Israel I personally do not think it's possible to destroy the foundations of a terror organization. Israel can kill a lot of members of Hamas, but the cause of all this, that's going to be quite difficult, and it's going to be up to the Israeli government to determine when they've met that.
All right, Dan Mouton of the Atlantic Council, thank you so much for joining me. Really appreciate your time. Coming up next on Balance of Power, we have to turn to domestic politics and the issue of the border. So stay with us. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are looking at a mixed market right now with the Dow lower, S&P, NASDAQ 100 index, Russell 2000 all higher right now. 4-point gain in the S&P at 48.95, up 0.1% to start off the new trading week. Dow Jones Industrial Average right now is lower. We've got the Dow down 17. That is a drop, though, of less than 0.1%. NASDAQ, the composite index, up 47, up 0.3%. The NASDAQ 100 index also up 47, now higher by 0.3%. 10-year 4.09% with a 2-year that is yielding 4.33%. Spot gold up $11 the ounce. Gold right now at $20.29 the ounce, up by about 0.6%. And West Texas Intermediate crude down 1%. WTI at $77.22 a barrel. The rally that pushed stocks deeper into a record lost a bit of its luster as we begin the new trading week. Traders bracing for a deluge of earnings and updates on the outlook for interest rates that will likely drive the direction of markets over the next few months. Ryanair Holdings says it will jump at the chance to grab any extra Boeing 737 MAX jet deliveries from airlines that don't want them, lending support to the embattled plane maker under fire for quality lapses after a mid-air panel blowout this month. Ryanair shares, they are advancing by 2.3%. Boeing, though, down by 0.3%. Again, recapping, the Dow lower, down less than 0.1%. S&P up right now by 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie Pellet in New York, thank you. I'm Kaylee Lyons in Washington. Joe Matthew taking the day off today. But other than Joe not being here, Washington is a lot more busy on this Monday because the House is back. They returned to Washington today, and front of mind is a potential deal on the border. Senate negotiators have been working with the White House to hammer out a package, and we don't actually know what's in it yet. But even though we don't know what's in it, there's already been pushback to this deal from inside the House of Representatives and even from the Speaker himself. Mike Johnson has suggested this bill could be dead on arrival. And former President Trump has weighed in too. He posted on Truth Social over the weekend, and this is in all capital letters: a bad border deal is far worse than no border deal. So on that note, let's bring in Billy House, who covers Congress for us here at Bloomberg and joins me from Capitol Hill. So Billy, do we even know yet what's actually in this deal?
We don't know the full parameters of the deal, but we do know that it would limit crossings, surpassing 5,000 crossings a week. It would cut back on the number of people going across and restrictions on how they would get approval and asylum. The bigger thrust here is that House Republicans and conservatives and some in the Senate don't seem to want to get to yes, no matter what this bipartisan group of Senate Republicans and Democrats will come up with as a final framework. And of course, President Trump has already weighed in, and so has the Speaker. It almost seems like no matter what the final exact framework will specify, Republicans are going to say no.
So is that another way of saying, Billy, that the actual text of the bill, whatever it may be, doesn't actually decide anything about its fate in the House? It doesn't stand a chance anyway.
Well, I think what it says is that perhaps, and I don't want to be cynical here, that some Republicans see this as a far greater November political issue than the problems they are claiming occurring at the border. Both sides say a crisis at the border, but whether that crisis can be solved before the election or is it a better election ploy is the big question here.
Well, to that point, Billy, I just wonder, especially for that group of vulnerable Republicans that represent districts that voted for Biden in 2020, can they really be seen voting no? Or is their way out of this not even being brought to the floor at all?
You raise a very good point. You might be able to say that there are moderate Republicans outside New York City, for instance, in the suburbs there, who could vote no. It really wouldn't impact. But that city itself has had a migrant crisis, and it evokes some upstate downstate rivalry as some of the overflow from New York City has been moved by the state and other entities to upstate counties. So there's stakes for even moderate Republicans in the north over what's being done with the U.S.-Mexico border. So, they can't simply vote no because their constituents in those Biden districts are both blaming Biden, perhaps, but also wondering why a solution can't be reached.
Yeah, and perhaps that is a question for the Speaker of the House, who ultimately will make a decision as to how this moves forward. Billy, just finally, how much is his decision-making right now predicated on the knowledge that he could face down a motion to vacate from, say, Congresswoman Marjorie Taylor Greene if he makes a wayward move here?
It's a very good question. I've just been told this morning that even within his own leadership team, there's worry this speaker has gotten very insular, has not reached out to other members of the team, is very quiet, doesn't tell anybody which way he's going, what he's going to do. They still don't know if they're going to vote on a tax package this week. And all that seems to revolve around this man's fear that he could face the same fate as the speaker before him, that's being an ouster by far-right Republicans.
All right, Bloomberg congressional reporter Billy House, thank you so much, as always, for joining us. We want to turn now to Bloomberg Politics editor Laura Davison, who is here with me in studio, because, Laura, we've talked extensively with Billy about the congressional side of this, but on the other side is the White House. President Biden out with a statement late on Friday talking about how a bipartisan deal should be passed. He would use his authority that this would give him to close the border. It seems like there's been a real shift of language at the White House.
Yeah, the White House has given a lot of concessions. They have been very involved in negotiations, and in some cases, some are even saying that Biden has given more than he's getting in the quest of making a deal with Republicans here. If Biden, wants this, it almost makes Trump want to make sure this doesn't happen. So you sort of see, Biden almost needs to play it cool to see if Republicans might come on board. But as this has become real, you've really seen Republicans in the House, as Billy was talking about, really shy away from this and worry about giving Biden a win in an election year on an issue that they are polling really well on. If you look at immigration, it's a top issue right behind the economy, and Republicans do better. So they want to be able to come into office and say, yes, we can solve this. Get the Democrats out of here.
Everything is tougher in an election year. Of course, it's not just the border, though, that is at play here, because the reason the White House may be at the table in the first place is because this is also part of an effort not just to address the issue on the southern border, but to try to get Ukraine aid through Congress, knowing how many in the House of Representatives specifically are hesitant to continue that funding. Is there another alternative if this deal can't get done for the White House to get the aid that it wants for our allies?
Seemingly, no. This has been, the result of months of negotiation, of the package sort of dying and coming back to life. And if they aren't able to package something that Republicans want, which was immigration with Ukraine, there is no clear path forward. Same with, other pieces of aid here, Taiwan, things that the White House wants, they have to pair it with something else. You have divided government. This is just how this works. If this all falls by the wayside, it's unclear there's going to be another vehicle, as we head into more spending fights in early March, that this will be able to advance.
So it feels like the White House doesn't have very much leverage here. Does that seem like a fair characterization?
They don't. They have kind of given away all their leverage on the immigration piece and said, look, here's what we're willing to do. And now they have to get Republicans to accept it. And that's really, really hard because you have Senate Republicans who are a totally different animal than House Republicans and what motivates them and what they want to get done. This deal came from the Senate. House Republicans, are not afraid to buck their colleagues across the hallway and say, hey, no, we don't want to do this.
Well, it puts the Senate Minority Leader, Mitch McConnell, in a very interesting position because he has been one of the most vocal advocates on the Republican side for continuing aid to Ukraine, but we know that maybe perhaps not all of his conference is with him on that. You mentioned the influence of former President Trump here as well. I was saying at the top that he has made his feelings known on Truth Social. He says no deal is better than a bad deal. How large of a presence does he have on Capitol Hill when he's not even sitting in the Oval Office right now?
He has immense pressure on his colleagues. He is essentially the presumptive Republican nominee, not yet officially, but there would need to be a large upset on behalf of Nikki Haley for him to move forward. So he has large sway over, his colleagues who are also going to be running. This is an election year for all the House members as well, so they want to be able to show their loyalty to Trump, who is very likely to be at the top of the ticket. And this is how we saw Trump act as president. He would put out a tweet, a deal would be almost done. His own White House negotiators would be on Capitol Hill. and Trump would say nope, and a deal would be killed, everything would be scuttled, and everyone would be scrambling. So this is, almost seeing a deja vu of the 2016 to 2020 years.
Well, and of course, what's different perhaps in this election cycle versus the ones prior is that Roe v. Wade has been overturned, the Dobbs decision happened, and the abortion issue that Republicans used to run on, the idea that they want to essentially see Roe v. Wade overturned, which has now happened, is not one that they're able to in the same way anymore. And perhaps border fills that void and frankly is what attracts like donations and when we're thinking about financing.
Yeah, and this is why you've seen Republicans really lean into this. There have been, the surge of migrants at the border, so they have like a news hook to hang this on, but then also, are able, these other social issues, they're not able to show as much. And because it's an issue that they've been able to win over some Democrats on with the influx of migrants to major cities and just the housing problems and all the issues that have sort of been knock-on effects of that, they've just seen this as a winning issue and are going to capitalize on it as much as they can.
Yeah, when we were in New Hampshire last week, it was said to me that every state right now is kind of a border state because you're seeing the ramifications of this migration crisis being felt in so many areas, including these kind of democratic cities like New York, for example. So this is a story we will continue to watch. Bloomberg Politics editor Laura Davison, thank you so much for joining me. We're going to get more on this, in fact, in just a few minutes. Our signature political panel, Rick Davis and Jeannie Shanzano, will be with me for their thoughts, particularly on the tone shift we have seen coming from the White House. This is a president that in 2020 campaigned on a very liberal immigration agenda and now seems to be singing a very different tune in this election cycle. So we'll have more on that coming up. Stick with us. First, though, let's get a check on world and national news. Nancy Lyons has that for us in our 99.1 newsroom here in Washington. Hey, Nancy.
Thanks, Kaylee. As you've been hearing here on Bloomberg, the White House is weighing potential responses to a deadly attack on a U.S. base in Jordan by Tehran-backed militants. This happened over the weekend. 3 U.S. soldiers were killed, dozens of others wounded. Major General Pat Ryder is a spokesman for the Defense Department.
We are very confident that these attacks, this particular attack against this facility was by Iranian-backed proxies. We're working through the actual attribution piece right now, but of course it carries the signature of Kataib Hezbollah, which has conducted attacks in the past. But this is something that we continue to look at specifically.
General Ryder spoke with Bloomberg Surveillance. He says the U.S. has no interest in widening the Middle East conflict, but he says the U.S. will take action. One U.S. official says the drone appeared to be mistaken for a U.S. drone, and that may have been why it was not shot down. Israeli Prime Minister Benjamin Netanyahu says a summit in Paris this weekend to negotiate a return of hostages held by Hamas in exchange for a ceasefire in Gaza. Well, he says they were constructive, but there are still significant gaps remaining. His office says some of the differences will be ironed out during additional meetings this week. Spy chiefs and top officials from Qatar, Egypt, the U.S., and Israel met to try to secure the release of more than 100 hostages held by Hamas in return for the end of the war. NATO Secretary General Jens Stoltenberg has been meeting at the Pentagon today with Defense Secretary Lloyd Austin. Stoltenberg has been warning if Russian President Vladimir Putin achieves his goals in Ukraine, it would set an example for Beijing. Well, it never rains in Southern California. You can't say that this week. The Golden State is about to get hit by a fast-moving atmospheric river coming off the Pacific Ocean. Some areas could see up to 8 inches of rain. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Nancy Lyons.
World Headquarters. I'm Charlie Pellet. We have got the Dow, the S&P, NASDAQ 100 index, all advancing right now, back in the green. 9-point gain for the S&P, up by about 0.2%. The S&P, by the way, at 4,900 even right now. Dow Industrials higher by 13. That is a gain of less than 0.1%. NASDAQ Composite Index up 69 for NASDAQ. That is an advance right now of just about 0.5%. 10-year yield 4.09%, with a 2-year at 4.32%. Gold up $12 the ounce to $20.30. That's a gain of 0.6%. While West Texas Intermediate crude trading lower. WTI down now by about 1.4%, 76.93 a barrel. Equities, though, have been wavering in the run-up to results from 5 mega caps with a combined market value of more than $10 trillion that have powered the resurgence in stocks. We get earnings from 5 of the so-called Magnificent 7 this week. Microsoft, Alphabet tomorrow, Apple, Amazon, Meta on Thursday. Mandeep Singh is a senior tech analyst with Bloomberg Intelligence, and he told us he is paying particular attention to Alphabet, the parent of Google.
In the case of Microsoft and Meta, the top-line growth expectations are the highest. You compare it to Apple, flat top line. So clearly, there is a divergence in expectations. The key for me is how much incremental revenue is Meta going to generate from Gen AI or Microsoft?
And we've got tech stocks advancing today with the NASDAQ 100 index climbing now by about 0.4%. Again, recapping, the Dow, the S&P, NASDAQ very much in the green right now. Back to work Monday, 10-year yield 4.09%. S&P higher right now by 10, up 0.2%. I'm Charlie Pellet. That Kaylee Lines is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. Welcome back to Balance of Power on Bloomberg Radio. You can also find us on YouTube. I am indeed Kaylee Lines. Joe Matthew is off today, but we want to return to the issue of the border because this is an issue where we've seen a bit of a tone shift coming from President Biden. In a statement released late on Friday, he urged lawmakers to approve a bipartisan agreement, the details of which we have not seen yet, negotiated by the White House and members of the Senate. Biden says it would include new presidential authority to shut down the border when it becomes overwhelmed. And he went on to say, if given that authority, quote, I would use it the day I signed the bill into law. Let's bring in now our signature political panel, Rick Davis and Jeannie Shan Zaino, who are with me. Jeannie, just to begin with you, is this the same president who campaigned in 2020 on an incredibly liberal immigration agenda? What do you make of his words here? He would shut down the border the day he has the authority to do so.
Yeah, I think it's a president who recognizes, as we all do, the crisis at the border, and right, he should. And, as you were just talking about, it's not just, as if it wasn't enough, an impact at the southern border. It is states across this country. My state of New York, the city is almost economically crippled by the influx of immigrants and migrants. And the president knows this. And so, yes, he has to, as president, secure the border. And I think he is right to do this. And he has conceded, to Laura's point, enormously in what we hear, as we haven't seen the text, is this bill coming down the pipe, and rightly so. But it is being, pushed back upon by Donald Trump and his acolytes in the House primarily, and some in the Senate. But President Biden is right to take action immediately upon Congress if they can pass this bill.